Hello there, I hope that you are doing well. During this trades breakdown lecture, I will be discussing trading trending markets using open dynamics. Here we are on the hourly chart of Nasdaq, and what you can see is that Nasdaq was in a free fall over this past week. What you can see is that the market repriced all the way from the 20,000 price level on Wednesday down towards 17,500. Going into the day of Friday, I was leaning towards further continuation lower, and the reason why is because in such a bearish market, you never try to capture a bottom. Inside this bearish market, we were only looking for shorts, and what I would like you to understand is that due to the fact that the market was so heavy on the downside, we wait for the market to open high. Because it's inside of a bearish trending market that what we're looking for actively is looking for an open high to occur, because it's inside of that open high that manipulation is taking place, which is going to get followed by further distribution lower. Going into the day of Friday, I outlined the 18,000 and 17,500 price levels. The 18,000 price level can be seen right here. This is this green line, and it was reached early on in the morning session. Meaning at 7 a.m. we opened low and we saw the market reach that 18,000 price level. We saw a retracement taking place into a CB which got established, and we then saw the market expand towards the downside even more throughout the morning session. Notice, however, that the market did not reach 17,500, meaning we stopped in advance of that right here. Therefore, going into the afternoon session, what I was looking for the market to expand towards that 17,500 price level, because this is the drawing liquidity, meaning this is the final objective for the week. And because we are not trying to capture a bottom, we are waiting for the market to retrace higher so that it can expand towards the downside. When we zoom into the 15-minute chart, what I would like you to see is that the AM low can be seen right here. Notice that throughout the other part of the AM session, the market retraced. We then saw the market expand towards the downside, and throughout the lunch, an expansion lower occurred. Throughout this expansion lower, we saw a 15-minute imbalance get created right here. Notice that we saw the market open up at 1 p.m. then, and the market initially ran lower, taking out sales liquidity resting below this morning session low. We then saw a new low form which set up a retracement higher. However, before we dive into that retracement higher, I would like you to think about why the market first takes out the AM low right here and then forms a new low and retraces. Please pause the lecture for a moment, because I'm going to share the answer with you soon. I know that some of you never pause these lectures, but man oh man, you're wasting opportunities to learn. Alright, I hope that you passed the lecture and that you thought about the answer to my question. The reason why the market takes out the AM low early on in this new 90-minute cycle, which begins at 1 p.m, is due to the following. During this drop lower, what's occurring is that sell stops are being triggered. Sales liquidity is resting below this low, as you know. However, through this repricing lower, what's occurring is that retail mind traders are led to believe that further continuation lower is going to take place right away. So what they do is they chase the market short right here. What does smart money do? Smart money is actually buying against that. Why? Because they know that the market first has to be repriced into a premium before it is allowed to expand further. Therefore, what's occurring is that a new low will form below that previous session low, that AM session low, to retrace higher, trapping people into believing higher prices are now taking place and that the market is now going to expand towards the upside. Daily low is in, yes. However, what occurs is that the market reprices into a premium of the session range up until that point. Pay attention to the session high, so the lunch cycle high, to the session low, so the PM2 low right here. And we see the market reprice into this old inefficiency right here. Notice that at 2 p.m, this down close candle forms, which opens high. Pay attention to the word use. Open high. It's inside of that open high that what's taking place is that manipulation is occurring. We're taking out a previous 30-minute cycle high, which is right here. We then see a rejection taking place. We wick above the price range of this CB, but notice that the body is respected beautifully. Buy side of the curve, sell side of the curve. This is our market maker sell model. As you can see, the market stopped right in advance of 70,500, which was my objective. So that was a bit unfortunate. However, the run from this CB right here all the way down to the sell-side liquidity pool was already more than enough. The runner eventually got taken out, and that was what it was. Because the thing is, guys, do you think that if you're short up here and the market has expanded 300 points in your favor, you're going to let it come back 300 points? Of course not. That would be ridiculous, right? So I was very happy with the trade management, and then eventually the market reached the objective shortly after the close. When we pay attention to the 1 minute time frame then, what I would like you to see is the following. What I would like you to see is that we have that 15-minute imbalance plotted right here on the charts. And next to that, I've plotted some other lines, which I'm going to walk you through. 1 p.m. drops towards the downside, takes out the morning session low, and then forms that new low. What I want you to see is that this run higher, which occurred right here, was not the quickest. There was a lot of back and forth going, as you can see. And why is this important? This is important because this is the engineering of new sell-side liquidity which is taking place, where a lot of retail mind traders are going to look at this as a strong uptrend. They're going to draw their trend lines and they're going to think to themselves, the market is very bullish. However, what do we know? We know that our drawing liquidity down here is yet to be reached, and therefore we anticipate that the market is going to draw towards that before the close. When we then see the market begin to run towards the upside, when we begin to see it get repriced into a premium of the current session range, we can anticipate that when a new time cycle opens up, that we're likely going to go open high to then turn around. Because what I would like you to see is that the market opens right here at 2 p.m. and immediately runs higher. Why is that important? It's in this open high that the previous 30-minute cycle high is being taken out, and that the market is being repriced into a premium of that session range, and it's being repriced into an all-time efficiency. Do you see this CB, which I've annotated right here on the 1 minute chart? These two back lines. Do you see how that displays through the 70,900 price level? Do you see how we're trading near that blue shaded box of that 15-minute CB? We see the market reprice above it, doesn't matter. Why not? Because it's repricing into that 70,900 price level. What we see taking place there is that the market eventually forms a smart money reversal and S&T gets established. The market displaces towards the downside and it displaces below that blue shaded box. Now here I'm teaching you a very important algorithmic signature which I've been putting emphasis on throughout my previous lectures as well this year. That's the following. Do you see that blue shaded box of that CB? Do you see what gets created when we reprice away from that? Do you see this red shaded box? That's a smaller CB. I believe that for the majority of you that are completely new to the markets and you're completely new through looking at them through the perspective that I'm teaching to you, I believe that this is the entry you should focus on. Entering in the smart money reversal takes years of experience and you need to know exactly what you're looking for when it comes to open dynamics. Meaning open high within the right delivery profile, understanding that the market has yet to reach a drawing liquidity. And you must be able to time reversals, but that's something which is going to come if you pay attention to detail. This right here, this entry inside of this CB, this institutional order flow entry drill, man oh man. It's one of the sweetest entries which you can find. And the reason why is because you're waiting for an SMR to form and then you're trading the low risk sell which is taking place right here. And I believe that the majority of you should investigate this entry right here. What I would like you to see is that the market displaces away from that higher time frame imbalance with a smaller imbalance. A retracement occurs in there, and that right there is I of fat, which is taking place inside of this BC. This price range has now become balanced and the market is allowed to expand towards the downside. Do you see how the market reprices through this low right here? What is this low? This low is a bearish breaker. Why? Because we have a high, low, higher high, lower low. Therefore, this downward candle should function as resistance price if the underlying order flow is in fact bearish. We see the market spend some time there and eventually it begins to roll over. What is the market drawn towards? The market is drawn towards sell-side liquidity resting below this low and the low above, which is the previous 30-minute cycle low. We see the market create a CB right here and consolidation takes place inside that CB. Why is that consolidation taking place? Because what you see taking place is that smart money is filling in more shorts. Why? Because they know that the drawing liquidity is yet to be reached. So what is happening here is that every single time that the market is trading back into that CB right here and stepping that, more shorts are being filled. Eventually the market runs towards the previous 30-minute cycle low, and I paused accordingly when I saw that a small SMT was established. We saw the market continue expanding lower at 2:30 p.m. and we saw it draw towards sell liquidity resting below this low. Again, I partialed right in advance of the low, and the reason why was due to SMT. Meaning, imagine, yes, if this SMT would have been utilized to reprice all the way back towards the upside like it eventually did. Imagine, yes, being up nearly 300 points on your position and letting that occur. I would be frustrated then, especially since I'm now on holiday. So I just want to be in and out of the markets, I want to make money, and I'm done. That's my mindset now. I want to spend as much time as possible with my loved ones, with my family, to create lifelong experiences, right? So when I saw this opportunity throughout PM, I was like, yep, that's a short for me. Therefore, I managed it aggressively as well. And eventually, the market did take out that sell liquidity pool and expanded lower. Notice, however, that the market stopped right in advance of that drawing liquidity, and we formed a new low. The moment I saw this taking place and I saw the market displace above this CB right here, that was immediately for me the first warning sign of, okay, I might actually get my trailing stop hit. When the market traded above this high, my trailing stop got hit and I want to be out. Why? First of all, this CB should have functioned as resistance price. Secondly, this high should have remained intact because this high formed inside of this CB right here. This high set up that final run lower, so this high is a bullish breaker. Low, high, low, low, high, high. Therefore, I know I need to get out because now order flow is changing. Eventually, we see the market in fact reprice all the way back towards the CB and begin a new sell program. But unfortunately, I wasn't behind the charts anymore back then. But that was a beautiful shorting opportunity as well, and was happy to see some of you take it as well. Now, when it comes to the topic of this lecture, open dynamics, I want you to start paying attention to how the market opens at these key opens relative to where we're at within the overall delivery profile. Once you start to become good at recognizing delivery profiles and recognizing where manipulation is taking place, trend distribution will become straightforward. This all has to do with recognizing A to B. And that's the whole topic of the model series of 2025. And that is what I'm teaching to you within that mentorship. With it being said, I want to thank you for watching this lecture all the way to the end. I hope that you found it insightful, and I want to wish you good luck in your studies. Be safe. Hello there. I hope that you're doing well. Welcome to the first Trades Breakdown lecture of the 2025 mentorship. During this lecture, I will be discussing sell programs on Nasdaq, during the first week of 2025. Here we're on the RE chart of Nasdaq, and what you can see in front of you is the full weekly delivery which took place during this week. What you can see is that we opened up the week right here, and we saw the market begin dropping towards the downside, and we saw the market draw towards the December low, which was right here. This was our sell side liquidity objective for the week. If you did not follow along with the reviews yet, I highly suggest you to watch them. If you did, however, pay attention to the reviews, you would have known that this downclose candle was our range to monitor for the week. This downclose candle was the previous week's low. Notice that when price displaced below that downclose candle with this CB right here, we saw the market retrace into that CB, we then saw it expand away from it. Another retracement into that CB took place and into that red range of that previous week's low, and we then saw the market expand lower from there. We saw the market then stop right in advance of the December low right here, and we then saw the market run up higher once more, trading back into that previous week's low range. When price traded back into the previous week's low range right here, to me it was very suspicious that they stopped right in advance of that December low. Therefore, I was anticipating that we would likely see the market draw towards the December low. The reason why was due to the fact that I looked at this low to be engineered sell side liquidity. Next step, what I want you to see is that from the midnight open, which was right here, we saw the market open high into the price range to monitor for the week, and we then saw a swing high formation taking place. That right there signals to me that we're likely going to see the New York morning session expand towards the downside. Where the London session expanded higher, New York would likely reverse on that London session. And that was my thought process for the day. When we drop into the 1 minute time frame then, what I want you to see is the following. At 8:30 AM we had high impact news. And as outlined in advance of this day, I shared with you that we would monitor how that 8:30 news will get utilized in order to determine what's likely going to happen from 9:30 on. What I want you to see that is in advance of that 8:30 news is the following. Notice that we saw the market expand towards the downside in close proximity to 7:45 to 8:15. We saw this CB get created whilst price was leaving that red box from the RE chart, that previous week's low range. We saw this CB get created and the market did not retrace into that CB. Instead, we saw consolidation taking place in advance of that 8:30 news release. The 8:30 news release took place and we saw the market run up higher, trading back into that CB. When this CB was reached, we saw a swing high form right here, and a new displacement leg lower occurred. Notice that a new CB gets created. The market retraced into this CB, and this is where some of you already went short, and this was a beautiful shorting opportunity. Unfortunately, I was not behind the chart yet, because I set out to wait for 9:30 AM before I would look to engage. Therefore, when I have set out a certain time that I'm monitoring, usually I do not even peek the charts in advance of that specific time which I have set. Meaning I'm just going on about my day and then I come to the charts around that specific time which I'm monitoring. In this case, the 9:30 open. But this was again a valid shorting opportunity already, because we already established that we would likely form the daily high in this area. The reason why was due to the fact that we saw open high taking place into that previous week's low, and we saw a perfect reaction from that level taking place. When this CB got created, what you can see is that the market retraced into that CB, and we then saw further continuation lower taking place. This is a beautiful example of the left side of the curve inside this run higher, functioning as resistance from price once displaced through. For example, pay attention to this low right here. Notice that when we displaced through that low, we saw that CB get created. When we pay attention to the next low which formed, which was significant, we can see this low. Notice that we displaced through that low as well with this CB. Therefore, when price retraces into that CB, that's again an entry opportunity. Anticipating that we are likely going to draw towards the monthly and yearly open, which is right here, and maybe even towards that December low as established from the RE chart. Notice that price retraced into that CB, and we then saw it expand lower again. Now, why are these CBs so important, you might be wondering? What I need you to see is that they are premium rates in the first place. Meaning, These are price patterns which are likely going to result in lower prices coming soon next once they function as resistance on price. But next to that, you need to pay attention to the left side of the curve. For example, this row right here. What I need you to see is that this row formed inside of this small BC right here. Next to that, the row which formed afterwards also formed inside of a BC right here. So these are variations of my market structure shift pattern, where you see a fair value gap, or in this case a BC, low, and a CB displacing through that range taking place. When you see that displacement lag taking place, you anticipate the CB which formed there to function as resistance on price, within the narrative that we're of course anticipating our prices. So we see the market expand lower and expands below the 7 to 830 low. Notice that two imbalances get created right here. First of all, this CB right here, and secondly, this small little CB right here. The highest CB, the first one which formed, is labeled as a breakaway gap. The reason why is because price never had to revisit that CB before expanding towards the downside, as you can see. We see the market chop around in advance of the 930 open. It's just going back and forth in a very slow grind towards the downside. And 930 comes along. 930 initially takes out sell side liquidity resting below this low. Then it runs up higher, taking out buy side liquidity resting above this high. And we then see on the lower time frames, so sub 1 minute chart, the signatures that confirm to us that we're going to draw towards the monthly and yearly open and maybe even lower. And that is what I will show to you soon. What I need you to see is that at 930 we initially drop lower as outlined. We open low. The market forms this low right here. And we then see a quick run higher taking place, taking out buy side liquidity resting above this high. Notice that when we take out that high, however, the market doesn't continue repricing higher. No, instead it rejects that high and we see it displace through the BC, which set up the repricing into this high. Therefore, I'm utilizing this BC as my inversion for value gap. Notice that I'm going short the moment that price is retracing into that BC's price range, because this is a real inversion for value gap. First of all, we had established the idea of lower prices based upon the RE chart. We then drop into the 1 minute chart to see how the news is getting utilized, the news that took place at 8:30. And based upon how we delivered between 8:30 and 9:30, it tells me how 9:30 is likely going to deliver. So when I see this sudden run higher shortly after 9:30, and we take out this buy side liquidity pool, and intermarket relationship, don't worry, I will show it to you, is telling to me, alright, we're likely going to expand lower soon, the next leg is likely going to come soon, I'm zooming in, and I'm waiting for example, this discount rate to get displaced through, because that shows to me that lower prices are likely going to be next soon. Notice that I partialed at the monthly and yearly open, and I partialed around the 21,200 price level. The market then retraced after having reached this level to the tick, and we then saw this upclose candle form. This upclose candle set up the repricing lower once more before the low formed that set up a run higher, as you can see. This right here is where my trailed stop got hit. Now, what you can see is that where I exited the position, a new BC formed. Notice that this BC formed inside the price range of this upclose candle, of this green candle right here. This right here shows to you that you could have also been a buyer right here. Meaning you could have, for example, went long inside of this BC right here, or in the BC that followed afterwards. What I hope for you to see is that there are so many opportunities each day. There are so many freaking trading opportunities each day. Our job is to focus on the ones that we can anticipate hours in advance. The moves that we see coming from a RE chart. Those are the moves I'm interested in. I don't want to be out here from the 9:30 open just trying to trade every single break or every single value gap or every single this or that forms. No, I want to anticipate from where, and more importantly, when a specific price move is likely going to take place. That's the move I'm interested in, because the move that I then participate in is going to be a low resistance liquidity run instead of a high resistance liquidity run that is simply based upon the idea of a price pattern. Therefore, this was a beautiful sell program followed by a beautiful buy program. Notice that I partialed accordingly. Now what I want you to do is the following. What I want you to do is I want you to go to your charts on Nasdaq and ES, and this is where I require you to put in some effort, guys. Don't think that you can just treat these trade breakdowns or treat the other lectures in my mentorship as if they were a Netflix show or anything like that. You need to go into your own charts and you need to investigate what I'm sharing with you. What I want you to do is I want you to go to this delivery. Could be on a 1 minute chart if you want to. You don't need to have the second charts. And what I want you to do is I want you to plot vertical lines between 920 to 930 and between 930 to 940. What I want you to pay attention to is the 10-minute cycles, their respective highs and lows. If you are completely new to my mentorship, this is not something I suggest you doing. However, if you want to take your understanding of time and price to the next level, this is how you do it. Investigate what occurred right here on the highs. Now, when we pay attention to the next trading day, what I want to see is first of all that going into this trading day, we are monitoring the following. What I want to see is that Nasdaq took out the December low right here, whilst ES did not. That right there was signaling that we might see Friday retrace into the weak range. Meaning, we could anticipate that Friday would likely draw towards buy side liquidity next, because who has been making money all throughout the week when the market is dropping? Sellers, of course. Their stop losses are placed above old highs. So for example, the Thursday high, which was right here, this buy side liquidity pool. Now, going into the day of Friday, what I outlined to you was the following on the Marketplace channel. I shared with you that I would be monitoring how we would likely see that 10 o'clock news get utilized. Why? Because there was 10 o'clock high impact news and therefore a different game plan applied to the day of Friday than it applied to the day of Thursday. And now what's fun about this statement is the following. I outlined this during the weekend review already. I already mentioned that there would be a difference in when we can anticipate the move to take place. Meaning, on Thursday, it would likely occur around 9:30 am. And on Friday, we would have to see how the 10 o'clock news would get utilized. And that right there shows you how you can put your schedule to these markets. Meaning, when you anticipate that the move is likely going to take place at a specific time, why would you show up to the markets hours in advance of that specific time? Why are you not just going and doing whatever, right, with your life, whatever hobbies you might have or whatever endeavors you might pursue? Guys, you don't need to stick behind the charts all day. Don't think that you need to be out there from the moment that the markets just open up, that you just need to go out there and look for setups. That is not effective or efficient. What is effective and efficient is making use of specific times when you're anticipating moves to take place. Meaning, when you anticipate that the opportunity is likely going to present itself around 10 o'clock, why would you look at the charts from 8:30 am? It makes no sense, right? And that is why I'm sharing with you. Start anticipating when your move is likely going to occur. And when you combine that with the where, so meaning from what origin is the move likely going to take place, man, oh man, you're going to have so much clarity behind these candlesticks. But what I outlined was the following. What I outlined was that I would be monitoring the reaction to this buy side liquidity pool right here, this candle's high, which was the golden high, and these relative weak lows. And if we would see a very bullish day, then I anticipated the previous day high to be a draw on liquidity. Now, at this candle right here, at the 9 o'clock hourly candle, we saw the market expand higher significantly. We saw it be in a rush higher. We knew, however, that at 10 o'clock there would be news. So how they would utilize the news would be very telling. If 10 o'clock would have just continued repricing towards the upside, meaning this downward candle afterwards with the long wick, then I would have had no interest in trading at all during the morning session. However, what did 10 o'clock do? 10 o'clock opened high, taking out this candle's high, and we saw intermarket relationship confirm to us that we would likely see sell-side delivery next. And because I knew that we were in a premium relative to the day range, price was trading above the midnight opening price, above the monthly and yearly opening price, and above, of course, the 9:30 open price, which you will see in a bit. Therefore, to me, those are signs that we are in a deep premium for the day. That doesn't mean we need to turn around right away. It doesn't mean we need to retrace right away. It just means that I'm aware of the fact that we're in a premium for the day. What I was looking for was the following. I was looking for how 10 o'clock would be utilized, that high impact news there. If that high impact news would lead to manipulation, then I can logically anticipate distribution to take place afterwards. What you can see is that the 10 o'clock candle, this long candle right here, repriced lower, trading into this candle's high. We then saw the market expand away from that high, and we saw further repricing higher taking place. This is what we refer to as an immediate rebalance, where there is no time for IPDA to create a BC. On the left right here, you can see, for example, that there was a BC which was created. However, in this delivery, you can see that there's no BC because the market is already delivering in an efficient manner because sell side is being delivered into this price range. When we pay attention to the 1 minute chart then, what you can see is that from 9 o'clock, the market just ran up higher. It was in a rush to reprice towards the upside. We saw the market then form a high right here between 9:30 to 10. We saw this sudden drop towards the downside taking place. We saw this big, lofty drop taking place. At 10 o'clock, we had high impact news. So we were monitoring how the 10 o'clock news would likely get utilized. What you can see is that 10 o'clock initially dropped lower before running towards the upside, meaning before running towards the buy side liquidity resting above this high. Why is buy side liquidity resting above this high? Because the function of this sudden drop lower is to trap retail minded traders into believing that lower prices are next. They chase price and they place a stop loss above the highest swing high. What you see occur, however, is that from 10 o'clock the market initially drops lower, runs higher, taking out the previous cycle high, and this is where I'm going short. And the reason why I'm going short is because I'm looking at intermarket relationship at the same time, and I'm seeing that ES is not taking out this high, whilst Nasdaq is. That right there is time cycle SMT which is present, whilst I understand that we should likely reprice lower soon. Think about all of the sell side liquidity engineered. Therefore, I'm targeting the sell side liquidity first of all below the low, which set up to run higher into that buy side liquidity pool. Next step, what you can see is that that low formed right in advance of what? It formed right in advance of the 9:30 open. And from 9:30, you saw the market open low and expand. The market never returned back to this opening price. That to you is telling that we are likely going to see the market draw towards that 9:30 open price one more time. And that is what I was looking for. I was looking for that 9:30 open price to be reached so that I could take profits in that area. Notice that when we dropped below this level right here, the monthly and yearly open, the market formed a low before eventually drawing higher in a very high resistance liquidity run. Now, I want to ask you something. Are you, as the trader, more interested in participating in a quick and sudden drop like this, the move that I participated in? Or are you more interested in this back and forth high resistance price action? I'm not saying that this can't be traded, by the way, because both environments can be traded, but this depends on personal preference. Some people, they prefer engaging in high resistance liquidity run environments. They prefer sitting through time distortion and all these things. For me personally, I do not work that way. I want to be in and out of the market, and that means that I need to enter when I know that the time is right for an expansion to take place, and that means I have to stay out when I know that nothing is likely going to happen. And that's just a simple paradigm shift which has to occur. And once you begin to research what I'm sharing with you, that is where you begin to see, all right, there are so many opportunities that we can capitalize on. And that right there is something which you will have to decide for your own when you are ready to begin trading real money. I will never tell you to go out here and put money in a broker. I will never tell you to go out here and buy a prop from challenge or this or that, because I'm not giving you any financial advice. However, I am telling you that when you make up your own mind that you are ready to begin trading live funds with real money, it is very important that you have a protocol that is well defined and that you know exactly what you're looking for. When we pay attention to the 15-second chart then, and we pay attention to my entry, what I want to see is that I entered during the creation of the bearish order book. The moment that price repriced below the open of this close candle, I went short. And the reason why I went short was due to the fact that I recognized that this would be a bearish order book. This was a bearish order book because price took out buy side liquidity resting above the previous cycle high right here. SMT was taking place, anticipating a run lower to occur. And next to that, we saw the signatures on the even lower time frames that confirmed to us that we would like to see a sell program soon. The market expands lower and this CB gets created. The market retraces into that CB and that's a pyramid opportunity for me. Notice that the market spends some time around that level. Notice that this is occurring around 21,400, which is of course a very important price level for us. We saw the market then eventually displace through it and then it was off to the races. The market expands lower and notice how it's finding resistance inside of this lower CB right here. This lower CB was important due to the fact that it displaced through this low, which formed inside of a BC right here on the left. we see the market eventually reach the objective of the sell side liquidity pool, and we stop right in advance of that 9:30 open, plotted by my indicator in the form of these dotted lines. We then saw the market reprice higher, and that was to me a sign that I did not like and see based upon the 50-second chart. Therefore, I decided to take another partial. Looking back at it, I might have been better off leaving the position on and taking it out at the 9:30 open, which got delivered just shortly after. However, what I recognized was that ES already reached the 9:30 open, and therefore that could be potential open SMT. So I have no regrets for how I managed this position, because this was a phenomenal trade, and this was one of those trades where you can simply take it and then the job is done for the whole day and for the whole week. We saw the market reach that objective of that BC, which I had outlined from the 1-minute chart, and we saw a low form there before the market repriced higher, and that is where I got out. And this is from which a buy program occurred, meaning sell program turning into buy program. And this right here shows to you the amount of opportunities that are present. Here we can see Nasdaq and ES on the 50-second chart. What I want you to see is that on the left right here on the Nasdaq chart, you can see that when 10 o'clock opened, Nasdaq was drawn towards the buy side liquidity, resting above the previous 90-minute cycle high of 8:30 to 10. If you, however, pay attention to the right here, where you can see the ES chart, you can see that when 10 o'clock opened, ES never took out that previous 90-minute cycle high. Instead, it created a lower high. This right here is SMT, which is smart money time. This SMT, this crack correlation, is telling to me that we're likely going to see sell side delivery next. And that is what I was waiting for, because this time cycle SMT tells me that we're likely going to see sell side delivery soon. And that is what I'm waiting for actively. SMT confirms reversals. It confirms changes in the state of delivery taking place soon. So when I saw this open, getting this space through, to me it was a sign to short. And when we pay attention to the 1-second chart of Nasdaq, yep, we are looking at the 1-second chart of Nasdaq. Inside of this reversal, you will see a pattern which you are familiar with if you have been studying my content for a while. What you will see is that we formed this BC right here on the left. Notice that when we retraced into this BC, this low formed, and we saw the market expand towards the upside. At 10:06, we form a high, and the market displaces lower. We see this C being created, but pay attention to this low. Notice that this displacement leg, yes, is displacing through that low, through that BC. And that right there is my market structure shift pattern taking place on a 1-second chart, guys. Do you really think that this could be buying and selling pressure which is causing this? Of course not. This right here shows to you that there are high frequency trading algorithms which are in control of the delivery of price. And with that being said, I want you to investigate what I shared with you during this lecture. I'm going to end the lecture here. I think I already shared a lot, and I think that for the newer students, this is probably way too advanced, but don't worry. I promise you that one day everything will click, and during future lectures, I will make sure that the level of difficulty is adjusted, meaning one lecture is going to be more advanced than the other, and that is how we're going to moving forward, because I need to account for newer students as well when I'm doing these breakdowns. For the more experienced students, this is probably, I wouldn't say an easy lecture, because by no means is this an easy lecture. I discuss very advanced topics. However, you can follow along. But someone that's completely new, that has never researched time or price cycles, is probably listening to all of this and they're like, how? Trust me, it will all click. You just need to submit the time and you need to put in the work. And all the puzzle pieces will fall into place. I want to wish you a very nice weekend, and I look forward to catching up with you soon. Be safe. Hello there. I hope that you're doing well. Welcome to this new trades breakdown lecture. During this lecture, I'll be discussing how I shorted Nasdaq 3 times in a row from the same point of interest. The point of interest which I utilized for these shorts was this RUCB right here. I had outlined throughout my reviews that this RUCB was the only range which was holding Nasdaq back from reaching the previous week's high right here. The reason being is because when you pay attention to the delivery which occurred on Thursday last week, what you can see is that the market expanded towards the downside heavily. Notice that if we apply in our minds a range Fibonacci tool and we pay attention to the high too low which formed, this is in a deep premium. I do not need to apply the Fibonacci tool in order for you to see this. You can clearly see that this is a deep premium array. Therefore, this CB is going to be very important moving forward when it comes to navigating the order flow. When you pay attention to the price around which this CB formed, you can see that also formed around 750. And if you understand the APRs, you know exactly why that's important. So what is important to note is that because it's NFP week, I do not anticipate that the market is just going to continue running towards the previous week's high when I see such bullish price action. I instead look at this delivery right here as all IPTA repricing higher into this array. But once this array gets met, I'm not thinking to myself, oh, we're going to continue looking for longs. No, I had outlined on the mentorship forum within the market updates around this time that this CB had to be monitored moving forward. Was the only array holding price back from reaching the previous week's high. Therefore, when Nasdaq repriced into that range and I begin to see the signs of reversal taking place, I immediately thought to myself, okay, who has been making money all throughout this run higher? Longs, buyers. So who are we likely going to draw towards when the market eventually begins to roll over? Towards those buyers, of course, towards engineered sell-side liquidity. Because when you ask any retail-minded trader to look at this chart, they would think to themselves, of course, the market is bullish, it's going to continue running forever. They keep on chasing long, whilst in reality, when the time is eventually right, the market will seek to spool towards that engineered sell-side liquidity. So the moment that this CB was reached, I was waiting for something. What was I waiting for? Time. 1:45 p.m. to 2:15 p.m. is a very important macro throughout the afternoon session. Therefore, what I was anticipating was that we would likely see the market expand towards the sell side liquidity pool engineered below the 1 cycle low. So when we pay attention to my recording right here, what you can see is that I went short on Nasdaq at 147. And the reason why I went short right here is due to the following. When you pay attention to this delivery, what's important to note is that when we opened up at 1 p.m., we saw the market go sideways for a bit. Eventually, it repriced into CE of that RECB, and we took out buy-side liquidity resting above these relative equal highs right here. When we pay attention to the time, what's important to note is that these relatively equal highs were the highs of the line cycle high. Therefore, I'm looking at this run up higher into that key array as manipulation. Therefore, I can anticipate distribution to take place afterwards. What is my eye immediately drawn towards? My eye is immediately drawn towards the previous cycle low, just the one cycle low. If you pay close attention, you can see that there are clean lows right here, which are too smooth to be left intact. Notice that we saw the market reprice towards the downside, and notice that we saw it get back below the previous cycle high, the one cycle high right here. So the market retrace into that, and we see the market utilize that level as resistance price. Notice that SMT got established right here between Nasdaq and ES, and we saw the market slam towards the downside. However, the time is not right yet. The meaning behind that statement is the following. What I would like you to understand is in order for you to enter when price is likely going to expand soon, what you must wait for is you must for time and price to align. So what that means is that we can be paying attention to the macro right here, which is kicking off, and we can be paying attention to SMT. The reason why this SMT is so important is because the moment that SMT gets established, we can be looking for price to expand lower significantly. So notice that I went short above the cycle open right here. And notice that I went short the moment that SMT got established during the macro of 145 to 215. Notice that we have a volume balance right here, which I went short of. And notice that I'm outlining the full trade right here, where I'm outlining everything which I'm looking for. Notice that price expanded lower and a retracement high is taking place. Notice that the market is retracing deeper than I had initially outlined of this CB. And the reason why this is still allowed is because as long as this high right here remains intact, we're still in the sell program. Why? Because we have SMT present right here. So what you can see is that price is coming back to the cycle open multiple times. And the reason why it's coming back to that cycle open is because shorts are being filled in every single time that the market taps above that cycle open. What cycle open? 1 p.m. open right here. Eventually we see the market form a new SMT at that cycle open right here, 3-minute cycle SMT as detected by the SMT detector. And we see the market expand towards the downside. Now from this moment in time, what I would like you to understand is the following. What I would like you to understand is that every single time that a new SMT is being established and the market reprices into anticipated direction, the moment that it displaces lower, this SMT has to remain intact. So in my mind, I'm already thinking to myself, okay, if price manages to get back below this low as it did right here, there's absolutely no way that price should ever take out this high. So in my mind, I've already trailed my stop now to this high. And when you pay attention to this delivery, what you can very clearly see is the following. You can see that we had this very large upclose candle which repriced into CE of that RECB. And we saw the market then displace below that. This large upclose candle is a bearish order block. The moment that price displaces below that, there is a change in the state of delivery which is taking place. Notice that multiple arrays got displaced through. So when you pay attention, for example, to this BC on the left side of the curve, you can see that that's an inversion for value gap. So every single time that the market retraced into this range, that right there is the low risk sell. That right there is potential shorting opportunities. The moment that the market displaces lower and we see it displace below the previous 30-minute cycle low, which is this low right here, the next retracement higher is the next shorting opportunity. That was a short I took. Why oh why is this the highest probability short? The reason why this is the highest probability short is because of the fact that market structure is signaling to you that we're in fact displacing lower. Why? Because this is our low risk sell, so the moment that price displaces lower once again, that will provide a new shorting opportunity. But next to that, time is aligned, meaning between 145 to 215, we can anticipate that price is going to expand towards our objective. And one thing which I find important to share with you is the following. I highly suggest you to pay attention to the 3-hour webinar, which I held with my best one-on-one student, Rich the Bull, in which we discussed the 3-candle model, because that is how I anticipated that 2 p.m. would likely expand lower. But that's just a little gem for you to investigate on your own. But what I would like you to understand is that every single retracement higher right here, back into that same range of that blue shaded box of that RECB, provided potential shorts. Meaning if you weren't short yet here, you could have potentially found a short right here. The moment that the market in fact displays lower below this low, my eye is immediately drawn to this BC on the left side of the curve. The reason being is because this BC must function as an inversion for value gap once displaced through. Notice that a CB formed right here, and again, if you were not short yet, this right here was the potential short. And at this moment in time, when I see price retrace into this CB so perfectly, and I see it rejected with IOFET, where I see institutional order flow entry drill taking place, from that moment in time, I know that big down close candles are coming. When? 2 p.m. Because when you pay attention to the time, you can see that's now 2 p.m. So notice that we're going to see price expand towards the downside heavily. The reason being is because we're seeing a launch cycle high purge and refer towards the launch cycle low taking place. This originated from that RECB, which we have been monitoring. Notice how quickly 2 p.m. distributed, and this is all a result of one thing. It's a result of the RE chart signaling that a swing high was in the making, and therefore you can anticipate that when that third candle opens, that we're likely going to see big distribution take place. Notice that price stopped right in advance of that launch cycle low, right here, and we saw a retracement taking place. Now, when this retracement occurs, you cannot be thinking to yourself, price is going to displace higher, this is the reversal or whatsoever. Why not? Because the drawing liquidity is yet to be met. So what you can see is that price retraced into that CB which formed right here. This is where new shorts are being filled, and eventually the market delivers towards the objective of the launch cycle low, and once the launch cycle low got delivered, that was the trade done. I held on to runners, but eventually my runners got stopped out around break even, and the reason being is because 3 p.m. did not distribute towards the objective which I had outlined prior, and that's okay. And the reason being is because I partialed at a logical level. From a higher time frame perspective, we have been bullish. We have been looking for higher prices. So this was a trade which was against the higher time frame order flow. However, what's important to note is that when you understand the delivery profiles on a weekly basis, meaning you understand that's an NFP week, you do not anticipate that we're going to run towards that previous week's high right away. Instead, you anticipate that we're likely going to engineer more buys to liquidity for a later moment in time. And therefore, shorting opportunities will provide themselves when we reach that higher time frame draw liquidity of that RECB and the signs become present of a reversal taking place. So notice that price reached the launch cycle low, and that's the purge and revert done. Beautiful sell program, and was very happy to see that many of you also participated in this short. When we then pay attention to the next day, what I would like to see is that the market repriced higher into that same RECB, and we took out the previous day high. Notice that we formed a higher high as well relative to this high. But what was important to note for Wednesday was the fact that we had two high impact news drivers which were very important. First of all, 8:15 a.m. and secondly, 10 a.m. Because we are hanging around that RECB, every single time that price is in there, I'm anticipating distribution lower. I'm anticipating rejections until we significantly displace above it. So therefore, I was anticipating for the 8:15 new CM release was the following. I was anticipating that we would likely reprice towards sell-side liquidity, which was engineered throughout the whole run higher into that array. Why? Because who has been making money all day? Buyers. So do you see how I'm going back again and again to that same question? Who has been making money all this time? Because once you can clearly see who has been making money, you can anticipate that price is likely going to draw towards that engineered liquidity when the time is right. And you might be wondering, how do you know that the time is right? How do you know that price is likely going to reverse? SMT, guys. This high right here was the London high. Nasdaq took out the London high whilst ES didn't. So that should immediately signal to you, hey, that's a session SMT inside of a key array where we're anticipating that we're likely going to reject off until we displace above it. Previous day high has been taken out. We see SMT above this previous day high. There's only one logical thing for news to do, and that's to expand and distribute towards the downside. When we zoom into the lower time frames, let me just turn the audio off. When we zoom into the lower time frames, this is a very textbook short, and the reason being is because of the following. What you can see is that throughout this cycle open, we initially ran towards the downside and price consolidated right here. We then saw an expansion higher taking place, and we saw Nasdaq take out that London high. But again, keep in mind that ES did not take out that London high. Notice that we saw the signs of reversal taking place when price expanded higher, taking out this buy-side liquidity pool, saw this BC getting displaced through with the creation of a CB. So what you see is that we form BC, CB, inside of that higher time frame point of interest, above key buy-side liquidity pools with session SMT in advance of news. This is IPTA tipping its hand to you. It's IPTA signaling to you that news is going to get utilized to distribute lower. Now, it's important to note that I had outlined to you multiple things, and those are the following. That array is going to function as resistance as long as we do not see significant displacement above that. That is how you frame it in your mind. Meaning every single time that price came into that CB, that RECB, that is where rejections are to be anticipated. So when the signs become present of those rejections taking place, think time, then that means that you can anticipate, okay, we're going to expand away from that CB again and again and again. So when it comes to the news release then, there were some questions about, oh, are you not scared of trading in advance of news? Are you not scared of what if news reprices against you, whatever? Look, I had outlined to you prior throughout environment selection lectures that when it comes to news releases, there are a few news releases which you need to be cautious of. These are CPI, NFP, FOMC. In advance of these news releases, we do not look to trade, and the reason being is because they're likely going to be utilized for manual intervention. However, any other regular high impact news driver besides that is just a regular red news event, red folder event, so to say. If the signs are present of manipulation taking place prior to the news event, I have taught you that the news is going to get utilized to distribute. Distribute towards what? Distribute towards engineered liquidity. So when you pay attention to this delivery right here, what you can very clearly see is that a lot of sell-side liquidity has been engineered below all of these lows right here. Here you can see me go short on Nasdaq, and what you can see is that I went short inside of that upclose candle and inside of that inversion for value gap. My stop is placed above the swing high, and the reason being is because I'm giving it a lot of room since we have that news release. Now notice that I'm outriding the inversion to value gap right here, and in about 30 seconds in chart time you can see that the news release will take place. You can see me type it out, news incoming. And at this moment in time, it's simply a matter of waiting, because the news is going to get utilized for distribution purposes. Notice that I have a less risk on this position than usual, and the reason being is because I am allowing for the fact that, okay, if price does in fact manipulate higher once more, then I only take a minor hit instead of the full risk which I usually use. Notice that price beautifully expanded towards the objective of those relative weak lows, and that is why I look to partial. Notice that I'm leaving runners for the midnight open, and the reason being is because on days where we anticipate consolidation, price is likely going to return towards that midnight opening a lot. Notice that the news beautifully was utilized to reprice towards the downside, and we saw the market retrace eventually. In this retracement higher, what's important to note is that this also provides shorting opportunities if you miss that initial leg lower. Why? Think about the following. Do you see on the left right here that we have a BC? This BC can be extended to the right. This BC is a true inversion to value gap. For price to continue expanding towards the midnight open, what we must see is that we must see this BC function as resistance on price. But next to that, we must see the previous cycle low, which is down here, function as resistance on price. Do you see how price retraced into the previous cycle low and then began expanding towards the downside? This was also a valid shorting opportunity. Personally, I was already happy with the short I was in, so I did not look to enter more, because I knew that later in the day there would likely also be an opportunity with the next news release. Now at this moment in time, all that I'm doing is I'm waiting. I'm waiting for price to deliver towards my objective of the midnight open. If price would retrace deeply and it would get above the cycle open, that is when I would say, okay, you know what? I'm going to just cut the position for a minor win on these remaining runners. And the reason being is because think about it. Price could technically speaking retrace into this CB, retrace maybe into CE of that and still be bearish. Therefore, when it comes to such repricing lower, give it room. But what you can see is that the market is eventually going to just continue repricing towards that midnight open because it's in a rush to get somewhere. Now, the main takeaway which I want you to have from this trade is the following. Whenever you see the signs present of manipulation taking place in advance of a news release, the moment that the news release takes place, we can anticipate distribution to unfold. And that is where you can see that I enter and literally 2 minutes after, objective gets met. So news gets utilized for heavy repricing. News gets utilized as a tool, as a moment in time, so to say, that IPTA is going to do very quickly what's already programmed to do. IPTA was already programmed to reject this early CB to reprice towards engineered sell side. However, the news release is basically the window of time in which they're able to do this very quickly, in which they're able to just make it happen in a short period of time. And that right there shows to you the importance of understanding the economic calendar. And that is, of course, where the economic calendar, which we have been creating, called Trader Street, comes into play, where you can anticipate the delivery profiles based upon the news releases. At this moment in time, it's simply a patience game, and we're waiting for price to expand towards its final objective. This moment in time, I don't care anymore about the position. Why? Because I've already secured profit, I'm already up for the day, and now I'm simply waiting to see whether or not my final objective will be met or if I'm going to get taken out on these runners. Notice how every single time that it's repricing back into the previous cycle low, into that BC as well, it's showing signs of rejections. That is signaling to me that that next expansion leg lower is likely going to take place soon. Why? Because if price would displace above this candle right here and would begin to utilize the support, that would signal to me that we're likely purging this low to revert higher. However, because it's continuously functioning as resistance on price, every single time that price retraces right here, more shorts are being filled. And that is giving me confidence as well as that my final objective is likely going to get met. So when it comes to anticipating low resistance, what you're paying attention to is you're paying attention to how price is reacting to the time cycles, their respective highs and lows. The fact that we displaced below the golden high right here in advance of the news is IPDA signaling to you that we're likely going to turn around soon. The fact that we had SMT right here between Nasdaq and ES relative to that previous session high is confirming that as well to you. Here you can see that price stops right in advance of the objective, and that's the engineering of sell-side liquidity which is taking place on a very small scale on the second time frame. Eventually that sell-side liquidity gets taken out and the objective gets met. Beautiful run lower, and it was a phenomenal trade within a very short period of time. Notice that this occurred throughout the macro of 7:45 to 8:15. What you can see is that later throughout the New York morning session, I went short again. And the reason being is due to the following. Remember how I had outlined to you that at 10 o'clock we would have another high impact news release? When it comes to 10 o'clock high impact news, what I have taught to you is that when 9:30 manipulates, we can anticipate 10 o'clock distribution. Notice that we saw 9:30 open up, run up higher, trading just above the hourly CB right here. Notice how we spent some time above there. But keep in mind that we are still not closing, meaning between 9 to 10 a.m., the hourly candle of 9 a.m. is of course taking place. As long as this close is inside of this hourly CB, I'm looking at this as the establishment of a wick outside of the range to monitor. That is what I refer to as price distortion. What's that? Price distortion? New term? Yep. Look, whenever I provide to you a very key range to monitor, so to say, a key array, it's important to note that I'm paying attention to openings and closes around that range. The wicks can go outside of it relative to the time frame of the range which I provide. The bodies tell you the story, meaning the opening and the close price are the most important. I anticipate that this run higher above the range is a distortion in price, where manipulation is taking place above the range where IPDA should in fact form a swing high in, but instead we just manipulate above it, show the signs of reversal taking place, and then I anticipate that we're likely going to eventually close inside of this blue box again. Yep. Just like you have distortion in time where IPDA is not doing anything, it's simply holding price within a specific range so that smart money can fulfill their orders. It's waiting for the right time for the next expansion to occur. We also have price distortion. And what price distortion means is simply manipulation above or below a key range to monitor. How you can confirm price distortion is by paying attention to opening and closing prices. But when it comes to anticipating price distortion to take place, it's important to note that this is going to come with experience. In my mind, I'm looking at this as a perfect reversal fractal, which I'm going to walk you through. Notice that after price reached at midnight open, we saw a reversal taking place and the market expanded towards the upside. Do you see how slow this run up higher was? Do you see how much back and forth going there was right here? That to me signals that retail is looking at this as a strong support area, as a strong uptrend, so to say. That's how they're interpreting it. They are drawing trend lines like this from this low all the way directly towards the upside, and they're thinking that price is just an uptrend and going to continue running up forever. But what's important to note here is the following. What I would like you to understand is that this is in fact the engineering of sell-side liquidity which is taking place around that midnight open. Because we have news at 10 o'clock, my eye is drawn to 9:30. 9:30 manipulates higher, and we see price trade above the blue shaded box. But notice that when the market retraced into that box, we also retraced into a BC right here. We saw a warmer push higher taking place, taking out buys that created resting above this high. And we then saw the market slam towards the downside. Do you see this displacement leg right here? Do you see how we create this CB right here through this low, which formed inside of this BC? This is my market structure shift pattern. What I waited for was the following. I waited for price to retrace into this bearish breaker, this downward candle, into a premium of this large CB. And from there on, I went short. My stop is placed above the swing high, and the reason being is because price could retrace into this long wick right here. The reason why this long wick could be traded into is because this could be a bearish rejection block. Why is this a bearish rejection block? Well, if you pay attention to the reversal sequence as I've taught it to you within the 2025 model series, it's important to note that there's a certain sequence in which every single reversal takes place based upon PD arrays. Therefore, the moment that price retraces into this bearish breaker, it could already expand lower from there. However, you must allow for the market to reprice into this long wick as well, since it is a bearish rejection block. Notice that the market repriced into exactly the open of this down close candle, into the low of that rejection block, and notice how the market just steps it right here. What I now want to see is I want to see the market reject it and expand towards the downside. Notice that I'm outlining a specific alt inefficiency right here. And the reason why this alt inefficiency is important is due to the fact that we have cells that create engineered above that inefficiency. Clear lows right here, clear lows right here. It's now 9:51 or such, and therefore I'm anticipating that price is likely going to expand lower ahead of the news, but that the news at 10 o'clock is likely going to be the distribution. It's likely going to be the moment in time that price is in fact going to run aggressively. Notice that I'm outlining sell side liquidity resting below that 930 low right here. And the reason being is because a lot of traders are looking at charts purely from the 930 open, since their trading platforms only allow 40 regular trading hours. Therefore, what's important to note is that this is a very important low. Always pay attention to sell side liquidity resting below the 930 to 10 o'clock low. Notice that price retraced into this inefficiency, and that's again a potential short. Why? Because look at it from this perspective. Low risk sell. Next displacement leg lower, retracement higher. This is your next phase of distribution. At what time is this occurring? Throughout the macro from 9:45 to 10:15. At this moment in time, I'm already confident in the fact that we're going to close inside the price range of that RECB, inside the price range of that blue shaded box. That confirms to me that this movement above the box was manipulation, and therefore 10 o'clock will have to distribute lower. Isn't it interesting to see the similarities between the repricing lower, which occurred at 8:15 AM, and the repricing lower, which is about to take place at 10 AM? Do you see how the same signatures were in play, where you see SMT be established right there on the highs at a point of interest, followed by the reversal sequence in terms of PD arrays and such? Beautiful, isn't it? Notice that price is having a hard time with displacing below the lower end of that CB. Notice that the wicks went below it, but notice that the bodies keep on closing inside of it. That's a beautiful sign to me, and the reason being is because it shows that IBDA is referring to the array and the range monitor which I had provided to you. So whenever I provide these very specific arrays or ranges and such, please have them on your chart and investigate how price is reacting to them. What you can see is that price traded into the CB once more, and now 10 o'clock news is going to take place. Notice that the 10 o'clock news was utilized to reprice into the objective of that BC, and it was a beautiful distribution once again. With that being said, I would like you to investigate the delivery profiles when it comes to news releases. Pay attention to what happens in advance of news releases to confirm that news is likely going to distribute. If there's no manipulation in advance of the news, anticipate that the news is going to manipulate so that distribution will take place afterwards. If you investigate those guidelines, I'm sure that you're going to have a lot of clarity when it comes to navigating news days. I want to thank you for watching this trade breakdown lecture all the way to the end. I hope that you enjoyed this format in which I went over my execution video and walked you through the thought process, and I look forward to speaking to you soon again throughout a new lecture. Be safe! Good morning everyone, I hope that you are doing well. Welcome to this new trade breakdown lecture. The trade that I'm going to break down today is a long which I took after the FOMC release on the day of the 7th of November 2024. Now what I want you to see on this daily chart of Nasdaq is the following. I want you to see that Nasdaq was in very close proximity to the old autumn high which formed during the month of July. This was my higher time frame draw liquidity going into the PM session. If we go into the hourly chart then, what I want you to see is the following. I want to see that during the London session, the market began to slowly gravitate towards the upside as we see it find support at the midnight opening price right here. The New York morning session comes along, and what does it do? It begins to reprice towards the upside whilst we have FOMC during the afternoon session. That right there is a sign to me that signals that we're likely going to see continuation during PM. Why? Because we stopped right in advance of the old autumn high, which was our high time from strong liquidity. Therefore, what I need you to understand is that the market was being held inside of a tight range right here during the end of the morning session and during the lunch cycle. This right here is engineering new buy-side liquidity because they engineer relative vehicle highs here, and therefore retail money traders will look at that and they will think to themselves, oh, we have formed a top, let's go market short, place our stops above these highs, let's capture the high of day. Well, let me tell you something. If you see from the 9:30 open or from the midnight open, the market just continue to run into a one-sided direction, and there's a higher time frame drawing liquidity, such as an old autumn high known, anticipate that we're likely going to continue that order flow. And I know you might be looking at this chart and you might be like, how the hell could you look for a long setup after the FOMC right here when we are in such a deep premium relative to the daily range? Guys, when the market is showcasing to you nothing but bullishness and it's showcasing to you, I'm only going higher, that right there is a sign to just align yourself with that and don't fight that. Meaning, only look for long setups until this strong liquidity gets met. Now, what I want you to see on this M15 chart is the following. What I want you to see is that I've annotated the launch cycle low, which formed right here, and the launch cycle high. What I want you to see is that Nasdaq never took out the launch cycle low, and I will share with you in a bit why this is important if we pay attention to intermarket relationship. What I want you to see is that the moment FOMC gets released, we initially take out the launch cycle high, these relative vehicle highs. We then reject those highs and we retrace, we draw towards the downside. The market forms a new low and then begins to expand towards the upside and begins to draw towards the objective of the old autumn high. Now, what I want you to see on the following chart then is that I've annotated both Nasdaq as ES. Nasdaq being on the left and ES being on the right. What I want you to see is that there was a difference between when Nasdaq formed its respective launch cycle high relative to ES. You can see that Nasdaq formed that launch cycle high by this candle, whilst ES did that later, meaning ES created a higher high, whilst Nasdaq created a lower high. Secondly, you can see that ES took out the launch cycle low, whilst Nasdaq did not, meaning here you can see ES trade below that launch cycle low, and on the left you can see that Nasdaq creates a higher low. That right there is SMT, and that right there confirmed to me that we would likely begin to draw towards the upside soon. But here comes the thing. We saw SMT relative to the launch cycle low, but we also saw SMT relative to the second PM cycle of 1 PM to 2:30 PM. And that right there confirmed the expansion which followed towards the old autumn high. If we pay attention to the 1-minute chart then, here you can see my executions for this session. Please note that you have already watched the recording in which you saw me manage this position or manage this sequence of positions since I took 2 trades. Initially, I took a long setup right here, right away from the 2:30 open. The reason why was due to the thought process that we had these relatively equal highs here, and we saw that SMT relative to the launch cycle low. Therefore, a potential scenario was that we would not try to take out the sell-side liquidity engineered until we reach the old autumn high. Therefore, I was anticipating that we would initially run towards the upside. When I saw this run higher taking place, however, I noticed that we failed to continue higher after trading above these relative vehicle highs. I already secured a partial up here, as you can see, and then I got taken out at break even. I was then waiting because I knew the higher time frame order flow was still bullish and we were drawing towards that old autumn high. I waited for Nasdaq to form SMT with ES relative to the previous 90-minute cycle low right here, where ES created a lower low, Nasdaq created a higher low, and that right there was the confirmation to me that we would likely begin to see an expansion towards the upside soon. I traded based upon the 15-second chart, which you will see in a bit. But as you can see, I bought the exact low right here, and the market began to expand beautifully towards the buy-side liquidity engineered above this high. Now, what I want you to see is the following. What I want you to see is that from 2:30 PM, When the real move begins of the FOMC, as I outlined days in advance, I literally shared with you days in advance of this day, days in advance of this event. My focus will be after 2:30 p.m. And this is what I mean when I say to you, okay, look, we can already anticipate price swings to take place days or weeks in advance of the day actually being there. And that is what you will come to realize over time when you start paying attention to the finer details. From 2:30 p.m., you initially see a run higher, taking out these relative vehicle highs. Above these relative vehicle highs, buy-side liquidity is resting. We take out those relative vehicle highs, and we then have this sudden drop towards the downside. Notice how quick this drop lower is. Notice how big these down close candles are. Pattern traders would get wrecked here because they would think, oh, we took out relative vehicle highs, I see a CB, boom, we go short. That right there is the thought process. However, what is the underlying order flow? What is the narrative? The narrative is that we're going lower to go higher because the old all-time high is our draw liquidity. Meaning, when the time is right, we will see IPDA begin to spool towards the new engineered buy-side liquidity. Where's the buy-side liquidity engineered? Above this high. Because this high set up the drop towards the downside that led to that bigger SMT taking place. We take out the FOMC low, as you can see here, the 2 p.m. low, right here, and we then reject it right away. That right there is a key algorithmic signature because it shows that there's an urgency for Nasdaq to be repriced towards the upside. We see the market expand towards the upside, and once we take out the buy-side liquidity resting above this high, we see a retracement taking place. If you were not long yet during this expansion higher, this was the next entry opportunity. Why? Because you can see that we formed a BC right here. This BC has to function as support on price in order for the order flow to remain bullish. But let's say that you weren't comfortable yet with buying inside of this BC. What you could then wait for is for this BC right here to get created, followed by a retracement into that BC, and that's your entry opportunity then. Market begins to expand towards the upside, and time distortion takes place inside of this BC's price range, which formed right here. Notice that this time distortion took place after 3 p.m. We saw the market just go back and forth, and eventually it took out the all-time high, as you can see here. Now, if we pay attention to intermarket relationship then, on the left you can see Nasdaq and on the right you can see ES. You can see that Nasdaq created a higher low, whilst ES created a lower low. This right here is time cycle SMT, and it confirms to you that the time is right for that buy program to unfold that you were anticipating to take place. If we pay attention to the 15-second chart, then what I want you to see is the following. What I want you to see is that after we took out those relative equal highs, we saw the market consolidate. We saw it fail to expand towards the upside. This right here to me was a sign that confirmed to me that I would have to trail my initial stop to break even. Meaning that we would likely not see that expansion take place right away after the 2:30 p.m. open. Instead, we would likely have to trade below the opening price once more to manipulate before being able to distribute. And that is what you can see take place right here. We consolidate to engineer new buy-side liquidity, and Nasdaq begins to roll over. We see it begin to drop towards the downside, or we begin to see premium rates get created. Pay attention to the CB switch forms such as here, and here, and here. What I want you to see then is that when we take out that FOMC low, we see a reversal taking place. The market forms a low and begins to displace towards the upside. It displaces above this CB, and that right there is to you as my student the confirmation of yes, we have formed a smart money reversal and we're now going to expand towards the upside. You know that this CB must now function as support on price. The market begins to expand towards the upside, and this BC right here gets created. If you were not wrong yet from this CB, then this BC was the entry opportunity. Why this BC and why not the BC below it? Because this BC is a breakaway gap, and pay attention to the CB on the left side of the curve as well. We see the market retrace into that BC, spend some time there before expanding towards the upside. We trade into this CB right here, and the market begins to consolidate again. After this consolidation ends, we see the market expand towards the upside, drawing towards the buy-side liquidity resting above this high right here. Now, what I want you to investigate is the following. I want you to go into your own charts, and I want you to mark up the delivery from 2:30 p.m. to 3 p.m. and I want you to annotate the delivery with 10-minute cycles, meaning you put a vertical line at 2:30 p.m., at 2:40 p.m., at 2:50 p.m., and at 3 p.m. Investigate how that delivery was used, meaning how the time cycles were used to frame this delivery right here. Once the market took out the buy-side grid resting above this high, we saw consolidation taking place, and it then retraced deeply, as you can see, into that 1-minute imbalance. When this retracement took place, we saw a new low form and the market began to displace towards the upside. Notice that when we displaced higher, this BC formed and this was again a long opportunity. Do you see how many opportunities there were to get in sync with this move? You need to understand, guys, that the delivery profile which was present was AM expansion, PM continuation. And this right here is, in my opinion, one of the most important delivery profiles to understand. Because when you begin to understand that you can literally frame your whole trading career around that PM session where AM expands, you are going to be surprised by the amount of opportunities that present themselves each week and each month. Now, I was very happy to see many other students of mine be able to take this trade as well. And it really made me experience a sense of fulfillment because it shows that what I'm teaching is transferable. And to know that I did not give any signal, to know that I did not tell you where to buy or sell, that I did not tell you, oh, look for this or look for that at this time. No, you simply became an independent thinker and you put to use what you learned from me. And that right there shows the precision in the concepts which I use on a weekly and daily basis. And that right there is algorithmic precision that's undeniable. So with that being said, this breakdown lecture comes to an end. One more thing which I want to discuss is this time distortion right here. You might be wondering, why did this time distortion take place? What I want you to see is that from the 3 p.m. open right here, we saw this huge downclose candle form where we dropped significantly lower. When we see such an explosive candle during 1/52nd candle, yes, it means that there was repricing which took place at that moment in time. What follows after a large range? After a large range, we see smaller ranges get established. And that is what you see here, where there's this back and forth delivery until the market begins to draw towards the upside, trading above the 3 p.m. open, forming relatively equal highs with that all-time high, and then the time distortion continues, where you just see this back and forth price delivery. And it's very important to not look for any setups inside of that. You need to see the difference between this delivery right here towards the upside or here versus this delivery right here. Eventually, the market takes out that all-time high, and this was my exit. Market then begins to run on sell side grid, resting below this original consolidation right here, below these relative vehicle lows, before making another leg higher above the all-time high. With that being said, this lecture comes to an end. I hope that you found it insightful. I hope that you were able to learn something from it, and I look forward to catching up with you soon. Be safe. Hello there, I hope that you are doing well. During this lecture I'm going to break down multiple trading opportunities which presented itself throughout the first week of December. During this week we saw the markets expand towards new all-time highs and we saw beautiful low resistance security runs taking place. Here on the RE chart of Nasdaq, and what I want you to see is that on Monday the market expanded towards the upside and we traded above this red box. If you were paying attention to the reviews that were being shared around this period, you would know that this red box right here was a very specific range which we were monitoring to gauge the order flow. What we can see is that on Monday we repriced above this range and we saw the market then consolidate. We knew that this buy side liquidity pool right here of the all-time high was the potential draw. What I want you to see is that the market then opened up on Tuesday and we saw the market drop lower. Notice that we saw the market reprice towards the downside, trading into the lower end of that red box and into an RLBC which formed on the previous day right here. Notice that we tap into that BC and we see institutional order flow and entry drill taking place, where you can see that the market opens lows into that and then expands away from that. We see the market reach the previous day high, this buy side liquidity, then retrace back into that red box before the market eventually expands throughout the afternoon session. Now if we pay attention to what that red box was, we can see that this down close candle was annotated and extended to the right. This down close candle was a bearish breaker. It was the bearish breaker which set up the creation of the all-time high, where you saw a high, low, higher high, lower low form. Therefore, if the market is going to reject this down close candle, we can anticipate a sell program to take place. But if the market displaces through this down close candle, we can anticipate it to function as support on price. Then this down close candle becomes an inverted bearish breaker, meaning where initially we're anticipating it to function as resistance on price, we can then anticipate it to function as support on price. Now if you pay attention to the 1 minute chart then, what I want you to see is that between 7 to 8:30 am, we saw the market consolidate. 8:30 am opens up and we see the market reprice towards the upside. Notice that the market reprices above the previous cycle high, this high right here, and notice that it immediately rejects the higher end of that down close candle from the RE chart. Do you see how the bodies are closing at the higher end of that red range right there? That right there is a sign which shows to us that we're likely going to see the market trade towards the lower end of that down close candle of that red price range. But also, we can anticipate that the market is going to reprice into the REBC, meaning this was our point of interest for longs. But because we can also trade the sell side of the curve right here, you can see that that is what I had done on this day. Where I can see that I was waiting for the market to displace towards the downside. I was waiting for premium raise to begin to function as resistance on price. Notice that this CB right here functions as resistance on price. Notice that a new CB gets created. And notice that 9 o'clock right here opens up, reprices higher, trading into this CB. And the moment I saw the market reject this CB, that was the sign for me to go short. I was anticipating the market to draw towards at least this sell side liquidity pool and beyond. Notice that we saw the market drop lower and we saw this CB get created. The market retraces into that CB and has another leg towards the downside. Notice that, however, that when we had that next leg towards the downside, something of great importance was taking place. If you go to the market updates channel of this particular day, you will see that I outlined that I was parsing in this area, meaning I was parsing at 9:16 am. This down close candle to the left was 9:15 am, and this candle right here was 9:16 am. The reason why was because I saw the market show the signatures of wanting to stop in advance of that REBC, meaning we could see a deep retracement taking place. And what do we see? We see the market in fact begin to retrace. We see it begin to retrace back into this CB right here. Why? Because you need to understand the logic of time cycles. In order for the market to form a low inside of that REBC, we must first engineer liquidity in advance of it. How do we engineer liquidity in advance of that range? By stopping in advance of that range throughout a time cycle. Meaning between 9 to 9:30, you can see that the low of the time cycle forms right here. Notice that we then see the market have this leg higher, which is trapping people into believing that the low of day is in. They go long in this area and they place their stop losses below this low. That is sell side liquidity which is being engineered. We then see the market reject this 1 minute CB again, and this is when I wrote final chance. And we saw the market then expand towards the downside, but more particular at 9:30 right here. At 9:30, we opened up, we dropped lower, taking out the previous 30-minute cycle low, reaching that REBC right here, and rejecting that. Meaning, notice how the wicks only stepped into that REBC right here, and then immediately rejected it multiple times. That right there is showing strength. That right there is showing to us that we can anticipate that the market is now going to spool towards the upside, because the higher time frame analysis is suggesting to us that we should see higher prices. We saw the market then displace towards the upside, and within the uncensored episode I was reading the tape for you, where I was outlining to you that this BC right here should function as support on price to reprice towards buy side liquidity resting above this high. The reason why was due to the fact that we reached the lower end of the red box, saw the signs of a smart money reversal taking place here, so now we can anticipate the market to draw towards the opposing side of the red box. Notice how we're utilizing that same price range to go back and forth, back and forth, back and forth. Because notice that when we took out that buy side liquidity pool eventually, we rejected it and draw towards the lower end of that red box again. Beautiful, right? Now the reason why this BC right here was a potentially long was due to the following. This BC repriced through this high. Why was this high so important? Because this high set up the final manipulation leg into the REBC and into the previous 30-minute cycle low. But this high also formed inside of a CB on the left side of the curve. So if this is a market maker buy model, the moment that we displace above this high, we anticipate it to function as support on price. So we see this retracement taking place, and this is our buying opportunity right here. Notice that we have this big down close candle, and what is the function of that big down close candle? That big down close candle is trapping people into believing lower prices are next. However, you need to look at this down close candle as manipulation lower to distribute higher. The moment that we reprice above this down close candle, we want to see it function as support on price. Notice that we retrace into the down close candle and we then expand away from it. Time distortion is taking place because at 10 o'clock news comes in, and we see the news gets utilized to begin a repricing towards the upside, drawing towards the buy side liquidity pool, resting above this high. The moment that this high was taken out right here, we are monitoring whether or not continuation is taking place or if a rejection will take place. What you can see is that the latter took place and we saw the market begin to roll over. This is where some of you took the short in this area. And that is the beauty of this range-bound environment, where you can see that shorts were felt in this area, longs were felt in this area, shorts were felt in this area, longs were felt in this area, and that is how you can basically see all of the opportunities which present themselves. And each opportunity provided around 50 points or more even. Do you see how this CB kept on functioning as support on price right here? Must be random.
Diamonds in my head can't weigh me down. What makes you think you could weigh me down? Stop it right now. Friends were pessimistic about our love. Heard they tight now. We both know they're miserable at home. Fuck them up. If this rollie on my wrist can't weigh
Now, if you pay attention to Wednesday then, what I want you to see is that the market expanded higher on Tuesday and Wednesday opened up, dropped lower, reprices back into the all-time high right here. It offers sell side into that all-time high, meaning it's balancing out the price range around that all-time high. Because we offered buy side through it, we're now offering sell side back into it. So now the time is right for the market to expand higher. Notice that this BC gets created during London. This BC is allowed to be left open, because if it stays open, it will function as a breakaway gap and that will signal that more speed is on the way towards the upside. What is the first objective? The first objective is the 21,500 price level. This is equilibrium of the bigger range from 21,000 to 22,000. We see the market then open up at 9:30 right here, this downward candle, and we see repricing lower taking place. Notice that I have annotated the low of this 9 o'clock candle. The reason why is because this low right here formed a lower low relative to the next low. And the reason why that is significant is because ES formed a lower low relative to the previous low. So let me repeat that. Nasdaq formed a higher low right here, meaning the 9 o'clock candle was lower than the 10 o'clock candle, whilst on ES we saw that the 10 o'clock candle was lower than the 9 o'clock candle. You might be wondering, why is that significant on the RE chart? Because that SMT is suggesting that we're going to see continuation higher taking place, that we're going to see the next expansion leg taking place. So if we pay attention through the lens of 90-minute cycles to this delivery, you know that at 10 o'clock a new 90-minute cycle opens up. Therefore, we are seeing 90-minute cycle SMT on the lows here. So if we compare Nasdaq to ES right here, Nasdaq on the left on the 1-minute chart and ES on the right, you can see that Nasdaq forms a higher low right here during the green box, during that 10 o'clock open, relative to the red box, so that 8:30 to 10 cycle, whilst you see that ES is creating a lower low. That is SMT. And that SMT is confirming to us that we're going to see an expansion higher taking place. Notice that at 10:04 on this day, around this candle right here, I shared with you on the mentorship form that if we're going to see continuation higher taking place, pay attention to the previous cycle high and the 21,500 price level. Next candle provided an open low into what? Into the 9:30 open price, and that was the area I was interested in buying from. Notice that the market then displaces higher and it creates this BC right here. We see the market retrace into that BC. That's again an entry opportunity. Market expands away from that BC. Notice that we then step into this long wick, into the open of this close candle. Notice that we find support there and then we expand higher again. And the moment that we reject this buy side liquidity pool, I'm being very mindful of the following. I'm being very mindful of the fact that I'm not seeing ES follow along with the bullish repricing. Meaning, we saw that Nasdaq created a higher high relative to the previous cycle high, whilst ES was making a lower high relative to the previous cycle high. And you might be wondering, huh? Yep, you saw SMT on both sides of the marketplace. On the lows right here, but also on the highs. And therefore the delivery that is likely going to follow is likely going to be messy. Now, if you pay attention to the 15-second chart, what you can see is that I've annotated this 15-second CB. The reason why I'm monitoring this 15-second CB is because that 15-second CB set up the repricing towards the downside. Notice that we retraced into that CB, exactly 10 o'clock right here, 10 o'clock open. We initially go higher into that CB, form a high, and then drop lower suddenly, whilst forming SMT right here. So the moment that we reprice above that 10 o'clock open, above that 9:30 open price again, and above this CB, to me that's a sign that we're likely going to see the market expand towards the upside soon. Why? Because this high right here set up the final drop lower to create SMT, meaning to create the moment that the time is right for the market to change from sell program to buy program. And that is where you can see the beautiful order flow taking place from. Notice that we then see the market expand higher, retrace, expand higher, retrace, expand higher. The moment that we reach that buy side liquidity pool objective, the market wicks higher quickly. And we have this sudden wick, as you can see here. Notice that this wick is then being rejected in the future by this high right here. and that's already signaling to you we might roll over soon. So what we see? We take partials at the previous cycle high because it's a logical partial level. Market then drops lower and takes the remainder of my position out, and then eventually it does run towards the upside, but I managed to trade accordingly because we had SMT on both sides of the marketplace, and therefore for me that's a sign, okay, I don't want to touch this. The moment I see SMT on both sides of the marketplace, immediately I'm going to tighten up my trade management, and I would much rather be taken out at break even or for a small profit than I would, for example, have to sit through time distortion or high resistance all over the place. In this case, you saw that I was part of the manipulation with the remainder of that position before the real move took place. I have no regrets about how I managed this position. If you pay attention to Friday then, what I want you to see is the following. What I want you to see is that on Friday we saw a beautiful expansion higher taking place towards the 21,600 price level. I shared with you in the market updates channel on Telegram on the forum that I was looking at whether or not we would manage to get above this BC again, which formed on Wednesday during the afternoon session. This BC was a very important BC because it displaced through the 21,500 price level. On Thursday, we saw the market spend a lot of time in that BC, and we saw it take out the Wednesday high. We saw it take out the buy-side liquidity resting above this high. Notice that we rejected it initially, and then we had one more push higher during the afternoon session to form a higher high before a drop lower took place. This drop lower took place, and we then saw the market slowly begin to grind higher. Friday opens up, and we initially run higher, trading back into that BC. Notice that we rejected during London, and this provided a shorting opportunity during the London session. We then saw the market drop towards the downside. When we then saw ES take out this low, the previous day low, whilst Nasdaq didn't, that was the first sign that we might see continuation higher taking place. However, it's the day of NFP, meaning on Thursday we didn't look to do anything, so we're waiting at how NFP is going to get utilized. Because we saw NFP get utilized to reprice higher after having set up this SMT right here, that shows to you that we're likely going to see another continuation higher taking place. Why? Because in a very bullish market that is trading at all-time highs, you never try to capture a top. Meaning you keep on looking for longs until longs don't work out anymore. And this SMT is the sign that ends consolidation. Here we can see the Kraken correlation between Nasdaq and ES, where you can see that Nasdaq created a higher low relative to the previous day low, whilst ES created a lower low relative to the previous day low. And the reason why that is significant is because the market was consolidating. was just going back and forth in advance of NFP. So the moment that the market begins to show the signs of wanting to end that consolidation through SMT, you must immediately begin to think to yourself, okay, we might see an expansion being on the way soon. Now notice as well that the Thursday high formed in advance of the 21,600 price level. And that right there shows to you that that might be engineered by liquidity, because this is a crucial level. Why? Because it's the next level above equilibrium of that bigger range. Now here we're on the 1 minute chart of Nasdaq after NFP. What I want you to see is that NFP opened up, dropped lower, and notice that exactly 8:30 we saw this massive repricing taking place. We saw the market reprice higher significantly, and notice that we repriced above that blue box, which was established on Wednesday. This is that mrNbc extended on my 1 minute chart. Now notice that we repriced above the 7 to 8:30 high with this BC right here. Notice that the market spent some time above that mrNbc before eventually rolling over and drawing towards the lower end of that BC. Notice that the market then begins to consolidate. It's just going back and forth, back and forth, back and forth. What is this called? This delivery right here is called time distortion. What is IPDA waiting for? IPDA is waiting for the right time in order for it to begin expanding. Meaning, it's waiting for the right time to come in play before the market is allowed to begin getting repriced towards the real objective, which was above market price. When is the right time? The right time is after 9:30. 8:30 NFP release, 9:30 we anticipate distribution to take place. Between 8:30 to 9:30, everyone is in a rush to do something. Everyone is going to go out there and push it just because they have a feeling that this is the result of the NFP release and that this is what's about to happen next, right? What do you see? They hold it inside of a tight range, inside of that mrNbc. They trade inside of this CB right here as well, and it's just going back and forth. And they're playing in on the impatience of all these traders. You, however, were already warned days in advance that we were anticipating that the cleanest move would come after 9:30. 9:30 opens low, reaching sell-side liquidity below this low. This low formed right in advance of that 7 to 8:30 high. And notice that we reached that high perfectly. We did not reach CE of this large BC. It's a very important signature. And we see the market immediately form a low before expanding towards the upside, drawing towards the 21,600 price level. Now I can already hear you think, why is it so important that CE was not reached? Because in a very bullish market, in a market that's in a rush to be repriced towards certain objectives, CE of large imbalances is usually not going to get reached. Therefore, we are monitoring the reactions to the range between CE to the higher end of that imbalance. And that's something for you to investigate. Notice that we find support inside of that previous cycle high perfectly, and that right there is now a balanced price range the moment that price leaves this range. Meaning, we saw the market displace through that high, through that time-based high with a BC, so you know that this is real resistance turning into support now. The market displaces above this high. We see the market then spend some time inside of this high going back and forth, back and forth, back and forth. Notice that I entered multiple times in this area. The reason why I was entering multiple times was because I was pyramiding. I was looking at the lower time frames on the sub 1 minute chart, and I was really enjoying the way that price was being held inside of that range. Why? Because we displaced above this CB on the left side of the curve. So this CB is functioning as an inversion for value gap. We displaced above the high, which set up the repricing into my point of interest. And therefore, what I am doing is I'm positioning myself long whilst high frequency trading algorithms are pushing in buy orders. They're pushing in buy orders in this area because they understand and know that the market has to be repriced towards the 21,600 price level. So every single retracement that you see right here has to be seen through the following perspective. There are countless of orders that are being pushed into the marketplace right here. And they're just doing one thing, and they're buying and they're buying and they're buying and they're buying at a speed that you can't even imagine. And this is occurring at a very rapid pace. And that is also why you saw the resistance liquidity run afterwards taking place. I invite you to investigate Nasdaq and ES intermarket relationship on these rows right here. Now, if you pay attention to the 15-second chart, you can see the 9:30 open. 9:30 initially runs high on the 50-second chart, then drops lower, taking out sell-side liquidity engineered below these relative weak lows, reaching that 7 to 8:30 high price level right here. I do not know why I did not have this extended perfectly to the right, but it is what it is. We reach that price level, form a low there, then we see the market displace away from that RLBC from Wednesday. The RLBC, which you already know since Thursday, that I was monitoring to gauge the order flow. We displace after 9:30, after the moment that we would become interested in the day of NFP, and we displace above this high with a BC. This high repriced lower, yes? Because this high repriced lower right here, taking out sell-side liquidity after this low was formed, the moment that we create this BC here, that's the first entry opportunity. This is a smaller fractal of a balanced price range, where you see buy-side delivery taking place, forming this high, sell-side delivery, buy-side delivery through the high. You see a BC get created. There's a lack of sell-side delivery inside of this range now. The market has to retrace into that BC to offer sell-side before it's allowed to expand towards the upside, right? That's the concept of a balanced price range, as you know. But that same concept is being applied to this red line right here, to this bigger price range. Buy side, sell side, buy side through the high. Anticipate that we're now going to offer sell side into the price range before the market begins to expand towards the upside. We see the market consolidate here for a while, and eventually it begins to run higher. Notice that we have this big down close candle right here. This big down close candle has to function as support on price, and every single time that price is coming back into that down close candle with respective open, opportunities to go long are being presented. And as long as the market doesn't displace below the low which formed right here inside of this BC, I'm anticipating higher prices. So every single retracement can be bought, as you can see. If you combine that with intermarket relationship on these smaller fractals, you will see exactly why the market expanded beautifully higher right here. Notice that the market went sideways for a bit before after 9:40 the market began running towards the upside and it began delivering. Notice that within a matter of minutes we delivered around 80 to 100 points. And that right there shows to you what happens when you're trading a low resistance liquidity run that is basically sponsored by higher time frame institutional sponsorship, where the higher time frames are very bullish and the lower time frames are confirming to you that that buy program is in play. We reached that previous day high price level right here. That's partial. I took a partial earlier as well in the premium of the previous day's range, and we saw the market expand higher, dry towards that 21,600 price level. You might be wondering, what's this early partial right here? What I saw was that there was SMT on the highs here between Nasdaq and ES, and I did not want to basically risk the market retracing deeply and basically drawing back towards a discount of the current range before expanding higher, and me not having taken a partial, because that SMT in advance of the 21,600 price level could signal that they were engineering more buy-side liquidity to draw towards at a late important time. And therefore, I took a partial here, and eventually the market did reach the 21,600 price level. And when it got reached, we saw the market just consolidate for the remainder of the day around that level. But I want you to pay attention to the beautiful buy program which you see in this area. Don't be scared by the fact that it's slow. Don't be scared by the fact that it's just going back and forth, back and forth, back and forth for a while. Because that right there is showing to you that it's now slow. When you think about the IPDA as a rhythm, you will see that it's now slow. And what follows after slow music? After slow music, fast music comes. After the rhythm has cooled down, we anticipate that it's going to speed up soon. All we need to wait for is for the time to be right. When is the time right? When that new 10-minute cycle opens up and we drop lower below the open before the market is allowed to reprice higher. So with that being said, this trade breakdown lecture comes to an end. I hope that you found it insightful. I hope that you were able to learn something from it. And I look forward to speaking to you in the next one. Be safe. Good morning everyone, I hope that you are doing well. Welcome to this new trade breakdown lecture of the trade which I took shortly after NFP on Friday. You have just seen my execution video in which you saw me short shortly after NFP targeting sell-side liquidity. This was a very clean short and I want to break down this trade to you. I'm breaking this trade down both to the public as to my private mentorship, and the reason why I'm doing so is because I'm a bit short on time this week because I had a very busy week. Now, when it comes to the hourly chart of Nasdaq, what I want you to see is that what we will discuss today is the concept of thank God it's Friday. What thank God it's Friday means is the following. Whenever you have a trending week in which the market is just drawn towards one side of liquidity, in this week, buy side liquidity resting above the previous week's high, the moment that buy side liquidity, that drawn liquidity gets reached, what you can anticipate is that Friday is likely going to retrace into the weaker range if the time is right for that to take place. So what that means is that we're looking actively for signs to confirm that. So as outlined prior this week, what I was monitoring was the following. I was monitoring the reaction to the new week opening gap right here because this new week opening gap was the main range to monitor for this week. What you can see is that throughout the beginning part of this week, the market was stuck inside of this very large new week opening gap. There was high resistance liquidity runs all over the place. What you can see then is the following. On Wednesday, we see the market expand outside of it, and intermarket relationship confirms this. What you can see then is that on Thursday, we see a very choppy day take place, and this is a result of NFP taking place on Friday. Consolidation is taking place, and what is occurring? Liquidity is being engineered on both the sell side right here as on the buy side right here. So why is that important to note? Because that already sets the stage for Friday's delivery, where I'm anticipating that when Friday runs that buy side liquidity engineered above this Thursday high right here, and we see the market take out the previous week's high after NFP, to me that's already everything which I'm looking for from an hourly chart to confirm to me, alright, we're likely going to draw towards sell side liquidity next. What you can see is that the market just reprices above the previous week's high right here, and we then quickly reject it, and we begin to see the market draw towards sell side liquidity engineered below these relative vehicle lows. And where does the low of day form on Friday? It forms back inside of the price range of that new week opening gap right here. And that right there shows to you why it's so important to pay attention to these ranges to monitor, because the reactions to these ranges to monitor literally tells you the order flow. Now, why is this concept so important to understand of thank God it's Friday? Well, in a trending week, who is making money? Everyone who was buying the market was making money throughout this week. They are trying their stop losses to daily lows, which formed. And therefore, we know that sell-side liquidity has been engineered underneath these relative vehicle lows, for example. When the time is right, what IPTA will seek to do is that it will seek to reprice below those relative vehicle lows. And there's a move which we can look to participate in, because when the time is right, that sell-side delivery is going to take place. Now, when we pay attention to intermarket relationship then, what you can see is that on the left, I've put the Nasdaq, and on the right, you can see the ES chart. What you will notice is that Nasdaq took out the previous week's high, whilst ES never took it out. You see that ES made a lower high relative to the previous week's high. That right there is a correct correlation, and that is SMT. When it comes to a weekly high, which is not being taken out on one of the markets, whilst the other one does, that's a very important sign to monitor when it comes to the remainder of the week. If you pay attention to the beginning of this week, you will notice the same on the weekly lows right here. That confirmed to me the buy program. When we pay attention to the 1 minute chart of Nasdaq then, what you can see is that we had the NFP delivery right here at 8:30. At exactly 8:30, what you saw is that there was a lot of volatility which got injected with the release of the NFP. Notice that they first saw the market reprice higher, reprice lower, and that right there is the whipsaw which is taking place, where they're literally utilizing that release of NFP to take out both sides of liquidity. And when you see a large range like this get established within such a short period of time, you might think to yourself, oh, it would be great if I would be a part of that move. It would be great if I would be inside of the position when the NFP release takes place. Guys, stop thinking that way. Simply because there's a volatility injection and you see this very large range get established, that doesn't mean you need to be a part of that. If you try to trade in advance of NFP, you're absolutely gambling and it's not possible to do it consistently. The reason why is because NFP invites manual intervention. It's a perfect smokescreen for these market makers to go out here and reprice the markets in a very aggressive manner. What you can see is that after NFP at 8:30, we see the market slowly grind towards the upside. Between 9 to 9:30 a.m., we see the market consolidate. And that red line is very significant to note because that is again the engineering of liquidity which is taking place. We see the market open up at 9:30, initially go lower, and notice how it quickly expands towards the upside here. Notice how you see these very big green candles form, and you see imbalances form. That right there is very important to note because that right there shows to you that they're giving away the idea of, all right, you know what? We're in fact very bullish and every single retail market trader will try to chase it. They will simply try to go long on Nasdaq because they see these very big green candles and they think to themselves, buys, 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 buys. What pattern traders based upon ICT concepts would do is they would look at these imbalances as potential long opportunities. Why? Because a bullish fair value gap is a buying opportunity, right? Nope. Notice that I'm not speaking about any entry pattern yet. I'm simply explaining the logic which I see to you. And isn't it funny to understand that I literally had this price level of the previous week's high already on my charts the moment that we open up this week? Meaning the moment that we open up on Sunday, I already knew what levels I would likely look to trade off. Think about that for a moment. I know what levels I'm looking to trade off when they get reached during the right time. When you begin to come to that level of understanding, you immediately begin to basically let go of all fear of missing out because you know when and where the next opportunity is going to present itself. And man, oh man, in a year from now or in 2 years from now, if you put in the work, you are going to experience the same thing and you're going to feel a sense of calmness that words can't describe. So please study in depth. Market takes out the previous week's high right here with this short wick. We then see the consolidation take place. Eventually the market rolls over and you can see that I went short right here. At 10 o'clock we had medium impact news and we saw the market reprice aggressively towards the sell-side liquidity pool, which I had annotated here. Now before I put my lipstick on, I want you to basically utilize what I just outlined to you as an example of trying to put in your own mind what I just described. Because it's very important that you break down this delivery for yourself before I put on my lipstick. And I know that some of you are not a fan of this. You just want to get to my annotations, right? But trust me, this is exactly what you need to do. So here I've put on my lipstick. And what you can see is that I first of all annotated the NFP high right here. This is a key buy liquidity pool, which is time-based. And the NFP low, which is again a key sell-side liquidity pool, which is also time-based. Now, what you can see is that next to that I've annotated this low right here. And we'll get to that in a bit, because this low was a balanced price range, which I utilized to go short of. Now, what you can see is that when we look at the indicator which I use that plots these boxes on my chart, you can see all these colored boxes. You can see these boxes that represent specific windows in time and the ranges within those windows of time. Now, time cycles are a concept which I will introduce late to the public, and it's something which I have already released prior throughout 2024. So if you want to research that right away, you can go to my older content and you can study my lectures on the topic there. But within this 2025 public mentorship, I'll release a topical lecture on the topic later. Our private mentorship students already know in depth how to use these time cycles, because when these time cycles get paired with price cycles, a whole new world will open up for you when it comes to the objectivity behind these markets. What you can see is that after 9:30, we see this quick run higher taking place. The market reprices above this high right here. Why, oh why is that so important? The reason why that's important is because that run above that liquidity pool is doing one thing. The run above that liquidity pool is trapping everyone into believing, oh, this high gets displaced through, now resistance turns support, right? So compare that to what I just outlined with these big green candles. Everyone is thinking to themselves, buy, 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 buy. However, it's in that moment of time that I think to myself, okay, we're going to wait for the time to be right for a reversal to step in. We see the market reprice above the previous week's high. We see it reject it. Notice that this wick gets established and I'm extending this wick to the right. This right here is my bearish rejection block. This bearish rejection block has to function as resistance on price in order for me to look at this delivery and think to myself, okay, we're going to turn around. Intermarket ratio plays a huge role in this as well. What you can see is that the market consolidates, and this is what we refer to as time distortion, where IPDA is simply waiting. It's waiting for the right time in order for it to be eventually allowed to expand. Time distortion is simply the following. Price is being held inside of a very tight range and it's waiting. Time is booking whilst price isn't doing anything of significant. The fact that the previous week's high was already taken out was the most significant moment for me, because that right there was my draw on liquidity on the upside, which I outlined prior throughout my public market review earlier this week. And when that draw on liquidity gets met and I begin to see the signs that show to me that we're going to turn around, that is to me the confirmation of, all right, we're likely going to change from buy program to sell program. We see the market reprice below this low, and from that moment in time, I'm monitoring how the next candle will deliver. Let me explain. This low is so important because it formed inside of this imbalance right here. Notice that this low also nearly lines up with this old high. Buy side has been delivered right here. There was a lack of sell side delivery and that is why these bullish fair value gaps got created. Sell side gets delivered in the form of this low formation. We see the market reprice higher again and consolidates. The market then reprices below that low, so sell side delivery takes place again. What has just occurred? We have seen buy side once, sell side once, sell side again right here through that low. So what is missing? Well, if you look at it from this whipsaw perspective, you will notice that we have twice sell side delivery and once buy side delivery. So that's an imbalanced price range. What we're then looking for is the following. We are looking for the market to offer buy side once more. This is taking place inside of this wick. So that when the next candle opens up, we can anticipate that it will begin to expand towards the downside very aggressively soon. Why? Because the price range has been balanced and there's no reason for the market to retrace any deeper. IPDA has already done its job. High frequency trading algorithms are already short in this area, and that means that they are now allowing the market to expand towards the sell side liquidity pool objectives. This is a balanced price range, guys. And trust me, balanced price ranges are the reason why all of your PD arrays work in the first place. Balanced price ranges are crucial to understand. So investigate them. Look for them. Because I'm telling you, if you would go into the second time frame right here, you are going to see my market structure shift pattern of a BC low, CB retracement into that low. Boom, there we go. And yeah, it's just awesome to see. And it doesn't get boring. Every single day, every single week, this level of technical precision is there. It might not be there always on the market that you're looking at. It's possible that the precision is there on another market. However, every single day, IPDA is doing these things. And our job is to recognize on what markets it's active now. And on what markets it's the cleanest. IPDA delivers price all the time. However, on some days it's going to be more clean on the Nasdaq. On some days it's going to be more clean on the ES. On some days it's going to be more clean on Euro. Does that mean you need to trade every single market? No. It just means that you need to be able to recognize when it's clean on the market that you choose to look at, and that is what you decide to focus on. 10 o'clock medium impact news gets utilized to reprice heavily towards the downside, and that right there was a huge drop. And that is the environment where we're currently in, where a simple medium impact news driver can get utilized in order to reprice this heavily. And that right there is simply something which you need to accept now, because there's a lot of tension in the world when it comes to the trade wars which are taking place. And next to that, there's just a lot of tension in the sense of, oh, it feels like big changes are in the midst of making. And that is what you see within this delivery, where there's so much volatility. And when there's so much volatility, you need to be cautious with your position sizing. And you need to decrease risk significantly. Because else what will happen is that when you get caught up on the wrong side of a delivery like this, that won't be fun and you're going to regret having participated in that. So when we pay attention to the final chart of today's lecture then, what you can see is that I've put both the Nasdaq as the ES chart on my chart again. And what you will notice is that on the left, you can see that Nasdaq was making lower highs relative to these highs right here, whilst ES was consistently making higher highs. That right there is a big crack correlation which is being established. Now, when you pay attention to this delivery right here, what you will notice as well is that Nasdaq was of course already trading around that previous week's high, whilst ES wasn't close even to it yet. So that means there was a crack correlation relative to that very big time cycle in the form of that previous week's high, whilst there was also SMT relative to the smaller time cycles right here in the form of 10-minute cycles. When you have both forms of SMT, investigate that. So with that being said, I want to thank you for watching this trade breakdown all the way to the end. I hope that you enjoyed it, and I hope that you found something of insight from it. I really suggest you to re-listen to it if you just went over it without taking any notes, because I shared many gems. I want to thank you, and I look forward to speaking to you in the next one. Be safe. Good morning everyone, I hope that you're doing well. Welcome to this new trades breakdown lecture of the trade which I took on the 13th of February 2025. This trade was a market maker buy model on Nasdaq. Now, for the format of this trade breakdown lecture, what I will do is I will walk you through my live thought process whilst I was looking at the markets and whilst I was engaging in the markets. In order to understand my thought process, we must first pay attention to this RE chart right here. When we open up this week, I outlined to you that my eye would be drawn towards this RECB to be the most important reference point to determine whether or not the previous week's high would be the drawing liquidity. The reason why is due to the fact that this RECB formed right in advance of that previous week's high. Notice that we saw the market go back and forth inside that price range all the way from Monday until Wednesday. However, on Thursday we saw something interesting occur, and that's the following. Notice that when we opened up for the day, we immediately dropped lower. Notice that we wicked outside of the price range of that RECB, outside this blue box, but notice that the bodies kept on closing inside of it. We then had 8:30 news, and what did 8:30 news get utilized for? It got utilized to reprice Nasdaq towards the upside. Notice that we saw buy-side liquidity resting above the Asia high right here get taken out. And from this moment in time, what I'm waiting for in my mind is one thing. What I'm waiting for is I'm waiting for the market to show the signs of dropping lower. Why? Because look at the bottom right. It's after 9:30. So after 9:30, we immediately see the market run higher. So what is taking place? They're trapping everyone into believing higher prices are next. And as long as the market does not take out the previous week's high shortly after 9:30, I want to see a drop lower taking place, so that I can look for a long setup. Why? Because they first trap buyers right now, buy this run higher, and at the same time, they're engineering sell-side liquidity. Notice that when they then, however, begin to drop lower, all those buyers become impulsive and they change to a bearish stance, and they change to a bearish bias. This means that they're now trapping people into shorts, which means buy-side liquidity is being engineered. Now, therefore, I'm simply waiting patiently on this RE chart, and this is what I mean, guys. Like, when it comes to my trading style, I am willing to wait and miss out on a potential run higher like this, because I want to trade the move which makes the most sense to me logically. And the move which makes the most sense to me logically is when we drop lower before stopping right in advance of that previous week's high right here. I should say after, my bad. After stopping right in advance of that previous week's high, I want to see the market drop lower, because that is engineering buy-side liquidity above this high and above this high. What am I waiting for? I'm waiting for the market to get back into that price range which I outlined to you all the way in the beginning of the week. Now, isn't it wonderful to see me outline on Monday right here that I'm looking for the market to displace above that blue shaded box, utilize that support price to then run higher? All of this delivery which took place from Monday to Wednesday was all time distortion, guys. The real move took place right here on Thursday, where we opened low and immediately expanded higher. Now, before we drop into the 1 minute time frame, there's one very important key insight which I need you to see on this RE chart, and that's the following. stop in advance of previous week's high, after 9:30 drop lower. Why is this important? Because we have now trapped buyers initially and we've taken them out. And by taking them out, we have trapped shorters now into believing lower prices are next. However, what do we know? We know that they're looking at this as strong resistance right here. And therefore, I'm anticipating that to be the draw and liquidity moving forward. Let's drop into the 1 minute time frame. 1 minute time frame, what do I see? What I see is that the 8:30 news was very volatile, as you can see, with this large wick right here. Whipsawing event. Buys that gets taken out, sells that gets taken out. Sells that creating resting below the 7 to 8:30 low gets taken out. We then see the market reprice higher, creating this large imbalance right here. Note that in advance of this imbalance, you can see that we have sells that create engineered right here below these relative weak lows. We see consolidation taking place between 9 to 9:30. 9:30 runs higher, and this is what I mean with that statement of trapping buyers into believing higher prices are next. And this is also what I need you to understand, that just because you see imbalances right here, it doesn't mean you're going to buy off those imbalances, because you're not anticipating those imbalances to function as support on price. These imbalances are simply showcasing to you heavy one-side repricing. Note that the market reprices higher quickly and stops in advance of that previous week's high. Small SMT forms here, and this is potential short, but I was not interested in shorting. Why not? Because I was interested in looking for longs only, as outlined, due to the fact that we displaced above that blue shaded box of that RECB and the previous week's high being the draw and liquidity. Now, main takeaway so far. What I need you to take away from what I've just outlined to you is that I'm aligning myself with the hard time from institutional order flow, and I'm utilizing a predetermined point of interest moving forward to basically look for an entry opportunity. This engineered buy side, these sudden big down close candles confirm that, because everyone thinks, oh, we're bearish now. Everyone begins to panic, but I'm looking at that from the perspective of we're taking out sell side liquidity, rebalancing this inefficiency to then continue expanding higher. Now, what I'm monitoring right here is the following. I'm waiting for its time to align with price. And this is where many of you are like, okay, point of interest gets met and you try to buy right away. Nope. There's a sequence of events that I'm looking for to confirm every single market reversal. Now, what I want you to see is that we're about to drop into the 15-second time frame right here. And on this 15-second time frame, what I will do is I will annotate this high right here, this engineered buy side liquidity. This is the draw and liquidity. Next to that, you can see that I'm annotating this down close candle. This down close candle right here was the down close candle which set up the repricing higher towards that current daily high. This down close candle is a bearish breaker. Why? High, low, high, high. This is where some of you might look for a short of. Why? Because you see imbalances through that and you think, okay, we're going lower. However, I am looking to buy off this down close candle because it's going to be my inverted bearish breaker, where I'm utilizing a premium ray to look for a long opportunity. But what else do you notice? Notice that this was the 9:30 open candle on the 15-second chart. Repricing above it is taking place right here. And at this point in time, I'm thinking to myself, okay, I see that we already trade into it right here. However, I'm not willing to buy just yet. Notice that I'm hovering over the buy button, but this is not to me the entry yet, because I want to see the market trade below that 9:30 opening price once more. And this is where patience is required, guys. And this is where some of you are really struggling because you are chasing price. You see this imbalance form and you think to yourself, oh my God, that's my buying opportunity. It's going to run without me. I'm going to miss out on this move. I'm going to miss out on the expansion towards my draw and liquidity. That right there is literally the most toxic mindset which you have. And therefore, you need to take control of your mind. You need to literally just stick to the protocol and basically say, okay, I'm only interested in buying off this level because that is what is predetermined to me. I already knew down here that I would look to go long off this down close candle. That is why I've annotated it. Surely, I was looking maybe for the signs that we would not reprice into it anymore because we already repriced into it here. Because I did not see any SMT here, I knew that this was the engineering of liquidity in the form of trend line liquidity. You see how slow price is now? It's consolidating. We now see this big green candle. What occurs? Midnight opening price gets reached. Note that we also trade around that 900 price level. CB gets reached. Inversion value gap gets reached. What's happening here? Accumulation, manipulation, distribution. How are we going to distribute? Back into the price range of this down close candle, and I'm buying this. I'm buying these big down close candles. Why? Because this is where every single retail mind trader is now thinking we're going lower, lower, lower. And this is a function of IPDA, where it's manipulating lower so that smart money is allowed the opportunity to buy in a deep discount relative to the range from this low to this high. And here you can see me literally map out what I'm expecting in terms of delivery, where I'm looking for price to expand higher, retrace into that same down close candle, looking for a low to form there, then looking for the market to expand back into the price range of this CB, looking for a high to form there, followed by a retracement, followed by an expansion higher, followed by a new retracement, followed by an expansion towards our drawing liquidity. I want you to keep this in mind when we are going to pay attention to the delivery which took place, because you are going to see a level of algorithmic precision that's absolutely undeniable. And I understand that for some of you, the fact that I'm speaking to you here with enthusiasm and with a risen tone might be a bit like, oh, he's trying to show off. Oh, he's trying to show how good he is. No, I'm not doing that. All I'm doing is literally sharing pure value with you guys. Like, it's not like I was born with this knowledge. It's not like I was just able to see this one day and boom, from there on, I became the trader that I am today. No, it took me countless hours of investigating, looking at the markets from a completely different perspective than that was taught by the majority of people. And then when you begin to pray for this level of understanding and you begin to put in the work, everything aligns. And you might look at this and you might think to yourself, how do you know it's going to deliver like this? How do you know that it's going to expand, retrace, etc.? It's because IPDA is following a playbook. And when you recognize what playbook it's following for that day, this is what I refer to as a delivery profile for that session, you can anticipate where retracements will originate from. You can anticipate how low they're going to retrace. You can anticipate when they're going to expand. And right now, this seems unreal to you. Right now, this is probably like, how is this possible? Understand that everything which was taught by the masses when it comes to supply and demand, being in control of these markets in terms of free market theory, etc., it's all a lie. This is a rigged game. And there are rules to the game, and you either benefit from those rules or you get manipulated against. And that is why I'm speaking to you in the terms of, okay, this is where the dumb money is doing something. And I'm teaching you how to think like smart money. I'm teaching you how to think like someone that has billions of dollars to their name. Or billions, it's a lot, but maybe hundreds of millions, right? This is what they're looking for, literally. And when you start thinking that way, even though you might not have that capital yet, and I'm not saying that you should ever strive to become a billionaire or whatever. It's something, I think being a billionaire is a big flex. Maybe one day I'll achieve that level. But just in general, think as if you had a lot of money. And when you start thinking that way and you start behaving that way, when it comes to your perspective on the markets, you are going to see things that are just hidden in plain sight. And you're going to be looking at these markets from a completely different perspective than the masses. Because you know the masses are always wrong. You understand that the masses are always doing the wrong thing. And therefore you need to be able to train yourself to against that. And that's going against your human nature. When you see these big down close candles, you might feel a sense of, oh, I'm scared. What if it runs against my stop? What if it continues dumping? What if this? What if that? That's all toxic thinking. From the moment I saw this confirmation inside of that point of interest, which I already outlined days in advance after taking out sell-side liquidity, followed by SMT right here, I already knew that 945 to 1015 would distribute. And that is the perspective which you will gain over time. Will all of you come to this level of understanding? No. However, you should still strive to do your honest best to come to this level. So a little rant in between, and I understand that some of you are just interested in the technicals, etc. But trust me, the magic that you're looking for, it's not in the technicals. The magic that you're looking for is in your mind. And when you pair that with a proper understanding of how these markets are booked by high frequency trading algorithms, this is the level of precision that can be achieved. Now, what you can see is that I'm typing out smart money enters long right here in this area. The sequence of down close candles is your bullish order block. This is a fractal market maker buy model. This is your original consolidation, smart money reversal. The left side of the curve was very quick, so anticipate the right side of the curve to be high resistance. Retracement is taking place. Boom, that's again a buying opportunity. Pay attention to what's occurring to the risk. I keep on throwing my stop to keep the risk around $2,000 right here on this position. Notice that they drop below the 930 opening price once more. And at this moment, what I'm monitoring, are we going to see big green candles coming soon? Because that is what I need to see in order to confirm to me that we're in fact going to see that very bullish order flow taking place. Notice that imbalance forms right here. Notice that this imbalance forms after we take out this high. So that means you saw this high form inside this CB, tracement into the downward candle, displacement higher, retracement into the imbalance variation of the market structure shift pattern. However, the confirmation of this being a smart money reversal already took place when we traded above this downward candle right here. And this is simply an entry pattern of the market structure shift pattern. But the order flow has already changed from bearish to bullish. Notice how every single downclose candle is functioning as support on price. It shows you that every single retracement is being bought and bought and bought. And the way I want you to think of this is that what's occurring is that smart money is being provided the opportunity to buy in a deep discount because it's already predetermined that we're going to draw towards this high and the previous week's high. Why? Because that was the weekly profile, which was already pre-established. And therefore, what you will see is that the smaller fractals on a 15-second chart within just this window of between 9:30 to 10 are going to deliver within that overall bigger fractal. Now, what many of you do wrong, and this is like one of the things that I'm really going to double down on within teaching to you within the 2025 model series. Aligning yourself with bigger fractals. Because you look at this delivery and you think, oh, he sees an imbalance and therefore he's going wrong. Oh, he sees this price pattern and therefore he's going wrong. Oh, he sees this liquidity pool getting taken out and therefore he goes wrong. No. Guys, like, zoom out. Literally go over my weekly review again. My weekly review outlined to you if we displace above this blue shaded box, utilize the support and price, I anticipate that we're going to draw towards previous week's high. That right there was the thought process for this week. We saw time distortion taking place from Monday to Wednesday. Thursday then displaced above this blue shaded box, retraced into it during the right time. What is the right time? During the regular trading hours. And then we see the market expand towards the upside. Now, what I'm monitoring is whether or not the market is going to draw towards this high right here. Do you see how slow it is right here? This is a result of this left side of the curve being so quick. You see me type out. I'm trading in line with smart money. Expect big green candles to come soon. This is me calling out the expansion which is going to take place. Notice how every single retracement is leading to a new expansion leg. Now, the moment that price closed above this CB, what I'm monitoring whether or not this CB is going to function as support on price. My eye is drawn to this CB right here. The reason why my eye is drawn to this CB right here is because it's in the premium of the range from this high to this low. And this is going to be a partial for me. The reason why was because Trump was speaking in the afternoon. So there was one potential scenario in play where we might see the markets consolidate throughout AM so that they could distribute during PM. I did not want to basically be up a lot of money and then just say, nah, you know what, I'm going to allow it to get back to break even. And whoever tells you that you should never take partials and just aim for full pulls all the time, like, guys, if you want to achieve consistency for the first time, just begin with taking partials. And it's going to be enlightening for you because think about it, right? Imagine if they would have formed a high here and then immediately distributed towards the downside because your analysis of continuation taking place throughout this morning session was wrong. How would you feel about that? Would you feel happy with that? Would you feel like, yes, I'm doing the right thing? Yes, I am happy with what I just did? No, you would be upset because you were up thousands of dollars and you literally allowed the market to come back all the way to your entry simply because of your own greed. In order for you to take care of that, what you need to do is you simply need to say, I'm parsing at logical levels. I'm going to see whether or not the market is going to continue or turn around. Now, what you can see is that I'm parsing nearly as well. The reason why was because ES already was taking out the previous cycle high, because the 10 o'clock and new 90-minute cycle, of course, opens up, which is the final 90-minute cycle of the morning session. Notice how they keep on consolidating inside that CB where are partials. And here ES took out the high. And what happened, what you can see is actually quite rather interesting. I parsed and it immediately expanded higher. And there the draw liquidity was met. And what I was monitoring here was whether or not we would continue higher. But eventually I full closed it here. And that was the trade idea done. And the reason why I full closed it is because I was not happy with the fact that we saw this rather large expansion higher so quickly, stop right in advance of that previous week's high. So that told me that we would likely see a deeper retracement taking place again before a new continuation could take place. Now, do you understand how this whole framework began on the higher time frames? How this whole delivery that we saw take place already was framed from the RE chart? And that's the perspective which I hope that you are getting from this lecture, where I can see that I literally began on the RE chart with you, walking you through the delivery and basically saying, okay, this is what I'm looking for. And if this, then that. If they stopped in advance of the previous week's high, I'm going to look for a market maker power model. So with that being said, this lecture comes to an end. I hope that you found it insightful. I hope that this lecture will function as a source of inspiration to you. I know that when I first began studying these concepts and I saw my mentor, the inner circle trader, showcase this level of technical precision, to me it was so inspiring. Words can't describe it. And I remember literally praying late nights to the Lord for giving me the ability to see this, to be able to see these markets with such clarity, and to be able to just say, this is what I'm looking for during this time. This is what will happen next. And I'm so grateful that I've achieved this. And I truly hope that you will get there as well one day. And I'm rooting for you. And I'm doing the best that I can to guide you as best as possible. And all I can ask you to do is just investigate. All I can ask you to do is pay attention to details. All I can ask you to do is just investigate the fine details and the order in which I'm explaining what I'm explaining to you. Everything I'm outlining to you has an order. And that means if this, then that. When you begin to see that, you are going to feel a sense of confidence that words can't describe. And for some of you that are completely new to my mentorship, are probably like, oh, you know, this guy is just mumbling and he's just talking and whatever, right? But for those of you that have been here for a while, you see it. You do the math. One trade like this, a month, literally basically gives you the opportunity to never have to work a day in your life again. Just one trade. Not one trade per week, not one trade per day, not one trade per session, not one trade per 90-minute cycle. Literally one trade per month. Sure, you need to account for commissions, sure, you need to account for tax, etc. However, one trade per month, if it nets you, I'd say, anywhere between 5 to 10 grand, you could already say, okay, I never have to work a day in my life again. Think about that. Some of you, yes, you are setting unrealistic expectations for yourself. You're right now working and you're still in your 9 to 5. You think to yourself, you know what? I want to make 100 or a million a month, right? And you're thinking to yourself, that is what will define me as success. You know what my definition of success is? Never having to work a day in your life and just experiencing true freedom. That is true success. Stop chasing bigger and bigger and bigger, because trust me, that's a game which you cannot win. It's an infinite game. If you compare yourself to someone else, you're always going to feel like you're not enough. The only person you should compare yourself with is the person in the mirror, meaning the person that you were yesterday, meaning the person that is lacking, the person that is not developing as best as he or she can. You should focus on basically fighting that battle with yourself. And when you start focusing on just improving and improving and improving, and you start just investigating, and you're just so driven to have such clarity, eventually, I can't tell you when, I can't tell you if it's going to be today, or I can't tell you if it's going to be next week or next month or whatever, right? But I can promise you this: as long as you keep on showing up and you keep on investigating, everything will click. And when it clicks, you're going to be grateful for the fact that you spent those few years doing so. Because once you know this, you will never be able to not know it. Meaning, it's just like riding a bicycle. I haven't ridden a bike in, like, I'd say a few years now, but I'm confident that if I would pick up a bicycle, let's say tomorrow, I'll be able to ride it just perfectly fine. Because your subconscious knows exactly how to do it. And it's the same with this. Surely it might take a while for you to get back in sync. Surely it might take a while for you to, get back into that state of flow. However, you can literally just pick it up like that. I want to thank you for watching this lecture all the way to the end. I want to wish you good luck in your development, and I look forward to speaking to you soon again throughout the 2025 model series. Be safe. Hello there. I hope that you are doing well. Welcome to this new trades breakdown lecture. This trades breakdown lecture is going to be a combination of a topical lecture with a trades breakdown lecture. I will be discussing the reversal sequence. Anticipate and confirm market reversals using price cycles. Yep, you read and heard that right. I will be discussing price cycles for the first time in depth. This is going to be an introduction lecture to price cycles, since this is going to be a topic which I will discuss more in depth during the Model Series 2.0, which will be released in 2025. First of all, what I want you to see is the following. I want you to see that I've drawn out two lines. I've drawn out a horizontal line on the bottom right here, a red line, and a horizontal line on the top. The bottom line is the inception of the move, and the line on top is the terminus of the move. And you might be wondering, Zeus, why are we looking at schematic like this? Look, you need to understand that the logic doesn't get transferred based upon looking at a market when you see, for example, the candlesticks everywhere and the fluctuations of price. Logic gets transferred by understanding theory. And the theory gets understood by looking at a simple schematic like this and being able to understand why we pay attention to an inception price level and a terminus price level. When we have determined what the inception of the move towards the upside is, we must know what our terminus is. How do we know what these levels are? The inception of the move towards the upside is our point of interest. The terminus of the move is our drawing liquidity. I've already discussed in depth how we can determine what these levels are during the model series and during all prior trade breakdowns. So if you're struggling with determining your point of interest and your drawing liquidity, I would highly suggest you to watch those lectures again, but mainly pay attention to time cycles, because time cycles are a very easy way to determine points of interest and draws on liquidity. Now for the bearish side, the schematic looks like the following, where we have the inception on top right here at the green line and the terminus on the bottom at the red line. The market moves from the inception price level up here to the terminus level down here. This is a bearish move, as you can see. This is our market maker sell model, and this is our market maker buy model. Now the reason why these schematics are so simple is because this is truly how the market moves. It moves from level A, point A, to point B. And when it reaches point B, what we will monitor is how it's going to react of point B. If it's going to reject of point B and it shows the signs of wanting to turn around, then we can anticipate point A to be the draw again. And that is how the market keeps on moving back and forth until we move outside of this area and we literally displace below the terminus and really show, yes, we're going to continue lower. Here you can see the PD array matrix. The PD array matrix is a schematic which shows all the premium arrays right here and all the discount arrays on the bottom. Notice that we have equilibrium, which is the current market price. What I want you to understand is that there's a sequence to this PD array matrix. For example, if we pay attention to the discount area, this green box, and we pay attention to the lower end and we move higher from there, you can see that begins with an old low or high. We then see a bullish rejection block. We then see a bullish order block. We then see a fair value gap. This is a bullish fair value gap followed by a bullish liquidity void, bullish breaker, and the bullish mitigation block. So what you see is that it begins with the old lower high and it ends with the bullish mitigation block. Now, if you pay attention to the premium arrays then, what you can see is that it begins with an old higher low and we end with a bearish mitigation block. So what you basically see is that on the upside, on this premium side, we inverted the discount side when it comes to the sequence in which the arrays have formed. Because on the premium you can see old higher low, bearish rejection block, bearish order block, bearish value gap, bearish liquidity void, bearish breaker, bearish mitigation block. Now if we keep in mind that there's a sequence to the creation of PD arrays and we take a look at the schematic which I've provided here, what you can see is that when we know the inception and we know the terminus or drawing liquidity, the inception of the move is going to get followed by what? It is going to get followed by the creation of these PD arrays, but specifically the premium arrays in this sequence, meaning we can anticipate when and where premium arrays are going to form. And this is by no means an easy topic. This is by no means something which a new student should understand right away. And I am not telling you that if you're completely new that you should immediately grasp this. Because honestly, I think that of all the viewers watching this lecture, I think only a handful of people are truly beginning to understand what I'm sharing here. And that doesn't mean that you will never understand it if you don't yet. And that's no problem. Because as long as you keep on thinking about what I just described to you, as long as you try to visualize it in your mind and you look at the charts and you try to overlay this logic, at one point it will click. At one point you will see how rigged these financial markets are, because you will see that all of these PD arrays, all of these algorithmic signatures are forming in the right order. And everyone believes that there's chaos on the financial markets. Everyone believes that there's no structure behind why price is doing what it's doing. But let me tell you something. That is absolutely BS. There's so much structure in the chaos, and that's a result of this right here, where you can see that there's a sequence of events that's being followed every single day, every single week. So when we know the inception of the move, when we know that the absolute low or the absolute high is in, we can anticipate the next sequence of events, because that's the only logical thing which can occur when time and price align. And I know this is very advanced knowledge, and I know that for the regular viewer watching this that hasn't gone into all of the lectures yet, this is probably way too much, and you're probably feeling like, what is all of this? Don't worry, it will come. Just submit to time. Just submit to time. Now, if you pay attention to the charts then, what I want you to see is that on this day, this was the day in advance of CPI of this week, you can see that during the London session, the market consolidated right here, and we then saw the market begin to expand throughout the latter part of the London session. We see the market expand towards the upside, and this expansion continues when 7 a.m. the New York session opens. Notice, however, that at this moment in time, price is trading above the midnight opening price a lot. And what you can see is that the previous day PM buy side, which is of course an important session buy side liquidity pool, was right here. Now, when you see this expansion higher, you might be thinking to yourself, but you know what? We are likely going to take out this high and then look for a reversal. Let me tell you something. Do you see this long wick right here? This long wick can function as a bearish rejection block. Therefore, I pay attention to the reaction to the open of this down close candle, to the low of this wick. I'm extending that low to the right, the low of the wick, to clarify. Notice that we reprice into that level at the right time, and we then see the signatures that high frequency trading algorithms are going short. They're pushing price towards the downside. They're repricing lower quickly. So this level right here becomes the inception of the move towards the downside. This level right here is our drawing liquidity. Why? Because it's the low of the current New York session. So this is an easy objective to draw towards. When we then pay attention to the 1 minute chart, I want you to investigate this delivery, and I want you to really think about the sequence which I've just discussed to you. And please pause the lecture and take some time to try and annotate everything in your mind, because this is the type of stuff that really makes you experience light bulb moments. It isn't like you can just watch these lectures like you're watching some type of Netflix show. You can just press play and there you go, and you're all of a sudden within a few weeks, you know exactly how IPDA delivers price and when it's going to turn around and this and that. Because honestly, if you treat my mentorship like that, you're not going to get the results you're looking for. It's that simple. So please just pause the lecture and try and break down for yourself the delivery which you have seen here. What I will do now is I will add my lipstick to the charts. And as you can see, I've added my time cycles to the chart. And what you can see is that between 7 to 7:30, we saw the market consolidate initially, slowly grind towards the upside. And we then saw this expansion higher. Between 7:30 to 8, the market is consolidating right here. And then 8 a.m. opens up. 8 a.m. begins with a consolidation again. We form this high right here in advance of the 7:30 to 8 high. The market retraces, forms this low, and it then has a sudden push towards the upside. Notice that we see this quick repricing higher. These big up close candles right here, taking out buy side liquidity resting above this high, and reaching that long wick from the 15-minute chart, which is in advance of that previous day PM buy side as outlined. We see the market open high into that level at 8:13 a.m., which is at the end of the macro window from 7:45 to 8:15. And we see the market then reject that level. We see the market reprice lower. And that right there is the beginning of what? It's the beginning of a sell program. It's the beginning of the buy side of the curve turning into the sell side of the curve. Because this is our original consolidation. And this is where sell side liquidity has been engineered during this slow grind towards the upside. This long wick right here, which rejected off that price level of that long wick from the 15-minute chart, now becomes our bearish rejection block. This bearish rejection block is going to function as resistance on price, and that right there shows to you that the underlying order flow is in fact bearish. And as you can see within my recording, I actually plotted the RR tool right here, and I said this is the entry. Our stop loss can be above this high, and we can target sell side liquidity resting below these relatively equal lows first of all, and secondly, this sell side liquidity pool right here. And what I want you to understand is that when you know that the absolute high is in for that sell program, you can enter in close proximity to the high. But I don't want you to think that you can achieve that now, because honestly, you are probably years away from getting to that level. And that right there is going to take a lot of experience. It's going to take a lot of advanced knowledge. And quite frankly, I don't even think you should want to enter at the absolute highs or at the absolute lows. You might think you want to, but at the end of the day, the setup which I'm training you to see is of course that bearish breaker or that inversion to value gap. So how you can use this information of looking at this bearish rejection block right here is by saying, okay, I'm going to monitor the reaction to this long wick. If price rejects this long wick, which formed after having taken out this buy side liquidity pool right here, and we see displacement through what? Through these imbalances on the left side of the curve, we are now monitoring the reaction to these imbalances right here. Notice that we see the market utilize this BC as resistance on price. Notice that we never retrace into this CB which got created. This is our breakaway gap. We see the market offer buy side into that BC's range, and we then see the market displace lower. This big Danko's candle right here shows you displacement. The next candle offers buy side into what? Into this Danko's candle, which is a bearish breaker. Why is this a bearish breaker? Because we can see a high, low, higher high, lower low, retrace into this Danko's candle. This Danko's candle is now your bearish breaker. This is again an entry opportunity. Market expands towards the downside, and we see it displace through these imbalances on the left side of the curve, which I did not annotate, these pieces right here. Notice that we see the CB get created. The market retraces into that CB. Institutional order flow instant drills taking place. The moment price taps this CB and immediately rejects it, that right there is your sign that big Danko's candles are going to come soon. See the market just distort arm right here. It's going sideways for a bit. Why? Because it's waiting for 8:30 a.m. 8:30 opens high and then begins to displace towards the downside. Do you see how it slams lower right here? This big Danko's candle. From the moment that this Danko's candle forms, you want to see the Opko's candle next to it. You want to see that function as resistance on price, and specifically the open of that candle. But hey, that open is also the 8:30 open. And now we are beginning to see why it's so important to pay attention to those opening times, because this is a true bearish order block. This Opko's candle has to absolutely function as resistance on price, because if it doesn't, it shows you that CSD has taken place. See the market retrace into that Opko's candle is open, and it then slams towards the objective of the current cycle low of 7 to 8:30, or I should say the previous cycle low. When the market reaches this low, we see it just consolidate for a while before slamming lower once more. We then eventually see a reversal for repricing higher taking place. Notice that from that moment in time, what we utilized as our drawing liquidity, as our terminus for this sell program, now actually turns into the inception of what? The inception of a buy program drawing towards our old inception. Meaning this green line now turns into our terminus. So are you seeing that they're switching? Their respective function is changing. And the movement below this sell-side liquidity pool right here is all manipulation. It's all a purge of sell-side liquidity so that we can revert towards what? Towards buy-side liquidity engineered above this high. Now, when it comes to price cycles, because I had to rant for a bit, I had to discuss PD arrays first. I had to, make sure that the lazy audience wouldn't get to this part, because there are a lot of people who just click on the lecture and they right away want to learn the sauce and they think that that is how it goes. Well, if you know me, you know that I don't teach that way, because I hide the gems in the middle of my lectures. I hide the most valuable insights in the middle of my lectures, so that the people that are putting in the work and are investigating the details, that they get the true value. When it comes to price cycles, our job is to recognize the moment that we see the change from buy program to sell program. I've already taught you in depth how we can confirm that an absolute higher low is in for a window of time. And that right there is basically the moment in which you will see the falling take place. When you visualize a chart, and let's just go back to the blank chart, and let's just say that you would plot a lot of horizontal lines on this chart at specific price levels, yes? The moment that this high is in, what will occur is the following. every single time that price displaces through these specific price levels, high frequency trading algorithms are doing one thing. They're firing shorts and they're shorting 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 and they're shorting. And it continues until the drawing quantity has been met. Until what level has been met. In this case, you can see that we're trading in the range of 21,500 to 21,600. And you might be looking at this reversal and you might be like, huh? Isn't this a random reversal? Isn't this a random reaction? Well, if you pay attention to the range from 525 to 550 and you measure equilibrium of that range and you start paying attention to that right there, what you will see is the following. What you will see is that the reversal took place just above equilibrium of that range. And you can utilize the calculation tool here on the right on the prices to figure out where the level exactly is. And this is where I'm inviting you to go deeper into your own charts and your own calculations and such. This was the Tuesday of the CPI week. So that is where you can find this date. And you can look at the recording as well. And you can do the calculations on that screen. But what I want you to understand is that when it comes to price cycles, our job is to recognize the moment that the SMR is in. Because the moment that we know that this is the absolute high, that this is the smart money reversal, every single key level is going to get displaced through and is going to function as resistance. So the price cycle is basically the music behind IPTA. It's the music and the rhythm which you can see within these candlesticks, because you can see that the market consolidates right here. And from the moment I see this consolidation, I already know what's the next delivery profile is going to be. Understand it's going to be open, high, takeout consolidation, high, distribute lower. Accumulation, manipulation, distribution. And I just said a lot of things at a very quick pace. And I suggest you to re-listen to that. And that right there is something which I think many of you are not getting. You just watch the lecture once, you just go through it at normal playback speed, you're just watching at 1x. Some of you are even watching these lectures at 2x because you want to, quickly get through it. You want to quickly absorb all the content. You want to just get done with all the lectures. And you think that that is going to do you well. And trust me, it's not. Because you need to listen to the details. I like to hide gems within the details. Because I know that the person that is able to dissect the gems within all of the long lectures, the person that's able to listen closely and to be like, why is he saying things in that sequence? Why is he using those words? Why is he using that speed of articulation? Why is he now slowing down? That person who's able to figure that out is going to see IPTA for what it is, because that's exactly what IPTA is doing. There's a rhythm to it, and it slows and it speeds, and it slows and it speeds, and then it speeds up again, and then it begins to run. And our job is to recognize in advance of the big expansion which took place. We need to be able to see IPTA beginning to spool, beginning to expand, beginning to speed up before it occurs. We need to recognize those signatures, because when we do, we can anticipate what's next. Let's take a look at another example. What I want you to see is that between 11:30 to 1, the market was just consolidating. This is the launch cycle, which is engineering liquidity on both the upside, buy side liquidity, as on the downside, sell side liquidity. 1 p.m. opens up, and 1 p.m. opens low and takes out the sell side liquidity resting below this low, which was the previous cycle low right here. Notice that we had multiple relative weak lows, which we're targeting. When these lows were taken out, we saw the market slowly begin to grind towards the upside. Notice that it was drawn towards what? It was drawn towards the launch cycle high. We see the market retrace, and we then see another expansion leg higher. The market expands into what? Into that RLCB. Notice that we formed this BC right here the moment that we trade into that RLCB. That right there is a very important algorithmic signature, because the moment I see this right here, I already know what they're doing, because I've seen this so many times, guys. Like, I'm laughing because, to me, I'm actually getting chills talking about this, because this is the first time I'm actually going to say this. When you get experience and you start paying attention to details and you start looking for the time and price signatures, which I'm showcasing to you, you are going to see exactly the same delivery profiles over and over again. And you are going to see exactly the same algorithmic signatures at the right time from the right price levels over and over again. And you might be looking at these executions and you might be like, how the F do you know that this is the absolute high? Because I've seen this so many times in the past. I've read this page of this book hundreds of times, and I've taken this trade so many freaking times. And therefore, the moment I see the market retrace right here, it has one more push higher, I know it's going to turn when it reaches my point of interest at the right time. And that right there, guys, is a result of me having been obsessed with this. You don't even know how much I had to give up to get to this level of precision. Like, I have committed the past 3 years of my life as a teenager to this craft. I have investigated all the fine details. I've literally paid attention to the minutes, to the seconds. I've paid attention to all of the things that I can look at when it comes to time cycles and price cycles. And that is what you're seeing here. You're not seeing an overnight success. You're not seeing someone who just woke up one day and all of a sudden it clicked. All of a sudden he saw the matrix for what it was. No, I had to put in the work, just like you are putting in the work now. And I'm trying to guide you as best as possible. And I truly hope that you understand that this isn't just a result of watching a lecture and then you all of a sudden know it. No, this takes hard work. You need to submit to time and you need to go out here and you need to investigate the details. And I've just given you one of the most crucial elements to anticipating reversals, because the moment I see this run higher, I know we're going to turn soon. Just waiting for the next bearish breaker to form, retracement, one more push higher, boom, there we go. From where? From a key price level that I'm anticipating reversal from. And I'm sorry for the red. I'm sorry for the all of the sudden rant in this lecture. I know I'm trying to keep my lectures as objective as possible, but I know it's important to inspire you as well and to motivate you, because I know how hard the journey is. I know how time consuming it is. I know how annoying it can be to just feel like you're showing up every single day, every week, but things are not clicking yet. It feels like you're walking into an invisible wall. And when you're at that stage, when you're feeling that, and I know some of you are feeling that now, you message me, you send me the DMs, I read it. And I want you to understand, guys, that at one point, things will click. And at one point, you are going to realize that what you are going through is actually exactly what the journey is supposed to feel like. It's supposed to be hard. It's not like everyone can do this. It's not like a lot of people are able to capture the highs like this, or even short here in the lower cell, or even taken the next stage of distribution. No, there are not many people that can do that. Why not? Because they don't understand it well enough. And it is because they don't understand what is the reason why price goes up and down. And I'm trying to teach you as best as I can why the market is doing what it's doing over and over again, and when it's doing that. And you need to realize that when you get over that invisible wall, which you create for yourself, by the way. You are the person that's holding yourself back. As weird as it may sound, you are the person that's holding yourself back because you're trying to rush the process. The moment you say, I'm going to submit the time, I'm just going to give it as much time as it needs, as God's plan is basically out there for you, everything arrives at its own timeline. And I'm telling you, one moment you are going to be like, I know it, I see it. And when you see that, when you experience those light bulb moments over and over again, I'm telling you, you're never going to look to any other trader and you're going to be like, I need to know what they know. I need to learn how they're trading. I need to follow their strategy. I need to follow their price pattern or this and that. No, because you have found your model. And when you come to that level, when you experience that, it's one of the most beautiful things that you can experience in this journey. And I'm actually getting chills speaking about this because I've never spoken about this before. But I remember it as if it was yesterday that I was walking through the fields in my hometown. I come from a very small village in the Netherlands, and I was walking there. I was just thinking about why, oh why is time so important when it comes to the delivery of price? I was thinking about that question so much and realize I was about 16 when I was thinking of this. I was nearly 17, walking through the fields, and it was a windy day. And I was walking there, I was thinking about that question, and all of a sudden I understood it. All of a sudden I understood that there are time cycles in play that are the most important thing, the most important element when it comes to the delivery of price. Because how else does an algorithm know when it should do something? How does it know when it should change from buy to sell program? And when I understood that right there, and I began understanding the importance of price, and I began blending the two, boom, there it went. And I was like, okay, Roger. And when I began investigating my thesis and I saw it, the same signatures over and over again at the same times taking place to the smallest possible cycles in both time and price, I was like, should I know this? What the F did I just discover? What did I just figure out? And man, you are going to get to that level one day. Because the fact that you're still watching to this lecture now, I don't know how long I've been speaking to you already. I don't know how long I've been recording already. But I know that if you have watched this lecture all the way to where we're at now, you have what it takes. You have what it takes. All you need to do is you need to give it a little bit more time. Just keep on showing up. Just keep on putting in the work. And one day, I'm telling you, you are going to do the most random thing out there. You can be on a walk, you can be in the gym, you can be doing something with your spouse, you can be hanging around with your kids, having quality time with family, and you are going to be thinking about these markets, about these algorithms, and you're going to be like, ah, that's why. And then the next time you realize something else. And when you start connecting all those light bulb moments and you start putting them together, it's one of the most fun things about this journey. Because then all of a sudden you realize that all the times that you were wrong within your trades, it was because you were not aligned with IPDA. You were forcing your own idea instead of listening, instead of stepping back and trying to realize what IPDA was trying to tell you. And when you are able to see the playbook, when you're able to see the page of the book that you have seen countless times in the past, this is the type of precision that gets achieved there. And I'm not saying that you will ever be able to enter at the smart money reversals. I'm not saying that you'll ever be able to enter at the absolute highs. But I'm telling to you that if you investigate what I'm teaching you, you are going to never be looking at the markets the same again. And I know it's there. And now it's only a matter of time before you begin to see it over and over again. And when you begin to see it, you are going to feel like a whole new world will open up to you. And you are going to feel like, what? And you are going to realize what's possible. And you will realize that you can elevate on the financial food chain very rapidly. And that's not because you are going to solely enjoy that wealth, it's because your family is counting on your success. And you will be able to teach your children what you have learned, and your children will be able to teach it to their children, and their children will be able to teach it to their children. And before you know it, you have made a legacy and you have made an impact on your whole family tree. And I truly hope that this part of this lecture is not boring to you, that you're not like, oh, just continue with the technicals, I'm not interested in all of this, because this is exactly what some of you need to hear. Because some of you are trying to learn to trade for all the wrong reasons. You are trying to look for validation from, for example, a parent, or you're trying to get validated from your coworkers, or trying to get validated by your boss, or you're trying to show off to him or her, and you want to just show the world that you are capable of achieving success and all these things. But because you're going into this with the wrong mindset, you are holding yourself back. The moment that you detach yourself from all those human desires and you begin to focus on just, I want to make an impact on the lives of the people that I care about, the people around me. The moment you start doing that, and the moment you begin to think about them before you put on any trade, you are going to be amazed by the results that will come. Why? Because you're no longer trying to project. Instead, you're just aligning yourself with IPTA and you're doing what you know is right to do. And that right there is something which a lot of traders don't realize, because all they're driven by is they're driven by fear, they're driven by greed, they're driven by maybe even feelings of anger or feelings of not being enough. And when you start going into the markets and you start looking at these candlesticks with those internal struggles, and you start to basically try and trade, what will happen is that you will see things that are not there. Why? Because you're not trading for the right reasons. And the moment you're able to realize that, and the moment you're able to just say, okay, I'm going to align myself with the markets every single day, every single week, and you start to listen and you start to just say, okay, this is what IPTA is telling to me now. This is the next logical thing it's going to do. When you do that, whoa, you are going to be like, how? Because it's going to do the same thing every week at the same times. So I apologize for the rant in there. I really wanted to get that over to you, because I know that this is like a message which I need to share more, because I know how hard the journey is. I know how tough the journey can be. And therefore, I need to be a source of light in a world that's getting darker every single day. And it's my job as your mentor to be able to provide you with that source of light, to be an inspiration to you, to be someone that you can look up to be someone that you can inspire to be one day when it comes to his trading style. And that is what I'm trying to show to you. And if you make that your motivation to get to this level of precision one day, and you won't stop investigating until you have gotten there, it will come. And I'm telling you that because I know I've did it. I looked up to my mentor, Michael J. Hoddesdon, and I told myself, I'm not going to stop investigating until I know exactly what the F he's doing. And when I understood it, man, it was for me one of the biggest accomplishments in my life thus far. And that's skill. It's not about the money. The money will come as a result of you being able to get the skill. But once you have mastered the skill, you will realize that that was actually the most beautiful part of this journey. Because I'm actually bored when I'm trading. Like, I can set my schedule every single day to when these setups arrive. And when I do that, and when I plan out these trades hours in advance, or maybe even days in advance, and the setup appears, there's no thought. It's simply just another day of IPTA showcasing its hand to me and me pressing the button. And that's a topic for another time, because else we will be here for a few more hours. Maybe that's something I'll do one day on like a space or something like that. Maybe just create a full lecture about all of these things. But anyhow, we see the market reach 50% of that inverted bullish breaker, that green box. We see it reach this level. And do you see how it's having a hard time with trading around that level? We see the market form a high, low, makes one more higher high. And the moment I see this push higher, I'm positioning myself short. Why? Because I'm anticipating that within the upcoming few minutes, a swing high is going to form. Because IPTA is showcasing to me that it's manipulating higher one more time before the distribution will take place. At 1:50 p.m., we see the market open high, take out the previous 10-minute cycle relative equal highs, and that right there is the high of the PM session as you saw me type out. We see the market displace below this low with a CB, retracement takes place, this is again an entry opportunity inside of this bearish breaker, and the CB, and the market expands lower. Notice that two CBs get created right here. Why is this CB allowed to be left open? Because this CB displaced through this BC on the left side of the curve, and because we traded outside of that RECB again, that price level. Why is that important? Because that is the price cycle showcasing to you that the lower prices are next. Think about what I outlined to you already throughout the previous chart. Market retraces into that CB, into this BC, into this inversion fire gap. Notice that the bodies are closing near the lower end of that range and the bodies are not closing inside of the CB. The wick goes in it like a mohawk and then immediately rejects it. Market begins to expand lower. Notice that we displace below this BC on the left and the market retraces. At the same time, you can see that we're trading below the 21,500 price level. We see price distortion taking place towards the upside. Price distortion, what's price distortion? I have so much within my toolbox, guys. Like, you cannot even imagine. And this is something which you will be introduced to next year. And I'm going to walk you through how to use price distortion to anticipate the next price swing. And that is going to be part of that new model series. I don't have a date yet in mind. Maybe throughout January or February. But we'll see. Market retraces into this BC, inversion for value gap. Notice that we again have a CB here. And every single retracement higher is an entry opportunity. If I wouldn't have taken these shorts right here, this would be the final opportunity to go short. I wouldn't go short anywhere later than that. And that's because of the fact that we have already traded below what? Trade below equilibrium from the range from this low to this high. So the moment we trade below equilibrium of that range, the market is likely not going to provide any entry opportunities anymore that are clean because we have traded in a discount of the range. Market expands lower and it eventually reaches this sell set liquidity pool, and that's the market maker sell model done, and eventually the market just consolidates all throughout the final hour. With that, this breakdown comes to an end. I hope that you found it insightful. I have shared probably way too much than I plan to share, but I'm all good with it. I hope that you enjoyed this lecture. I hope that you got inspired by this lecture. And I just want you to understand that you need to keep on showing up. You need to keep on putting in the work and things will click. Things will fall into place. When exactly, I can't tell you, but at one point, things will click. And when they do, you're going to be grateful for the fact that you persevered. So I want to wish you all the best. Good luck with your studies. And I look forward to speaking to you next time. Be safe. Hello there. I hope that you are doing well. In today's lecture, I will discuss operating in the range. This lecture is going to be a bit of a mix-up between a topical lecture and a trade breakdown lecture. In order for you to truly understand what range we were trading in, I highly suggest you to watch the reviews that were shared around the time of this recording being uploaded. With that being said, let us dive into the charts. What I want you to see right here is the following. What I want you to see is that on this Nasdaq chart, I have annotated this new week opening gap right here, and I've annotated this BC right here. At the time of this delivery, I shared with you that the range that we were operating in on Nasdaq was the following. This new week opening gap was the range high, and this REBC was the range low. The reason why I'm paying attention to this new week opening gap and this RBC is due to the following. At the time of this recording, Nasdaq was trading at new all-time highs. The moment that we displaced below that new week opening gap, that new week opening gap now had to get displaced through in order for us to turn bullish again. Until that would occur, we would lean towards the downside, meaning we would anticipate the new week opening gap to function as resistance on price. And that is what you see right here. Notice how multiple times the market repriced into that new week opening gap and rejected it over and over again. However, I also shared that this RBC was important. Why specifically this RBC? This RBC was so important to us due to the following. This RBC displaced through the 21,000 price level. And if you understand the advanced ranges as I taught them within the model series, you understand that the 21,000 price level is a very important price level for Nasdaq. Therefore, when we saw displacement through that level, this RBC is annotated on my chart, meaning this is my range low now. Until we displace either below this RBC or above this new week opening gap, I'm anticipating back and forth price action. Now the first setup which I'm going to break down to you was a setup that took place during the PM session. I personally did not take this trade because I was already content with the trades that I took earlier in the day, but I was very happy to see that many of you participated in this move. What I want you to see is that during the morning session, the market repriced lower away from that new week opening gap. During the launch cycle right here, we saw the market reprice into that RBC, which was the range low. Notice, by the way, that I'm utilizing this BC and this new week opening gap as range low and range high levels, and these are gaps, meaning gaps can function as a range low and a range high. What we then saw was the following. We saw that repricing lower taking place, and who is making money during that repricing lower? Are buyers making money or are sellers making money? Sellers are making money. Therefore, buy-side liquidity has been engineered above the highs during this repricing lower. When the time is right and the price is right, IBDA will seek to draw towards all of that buy-side liquidity. Why? Because Tuesday was the day in advance of CPI. And in advance of CPI, we anticipate that we're likely going to see a range-bound day. We do not anticipate a large range day. Why not? Because CPI is likely going to get utilized to draw towards all of the engineered liquidity. What is PM likely going to do then? PM is likely going to draw back into the range which got established when the daily low has formed. What I want you to see right here is that this 1 PM candle opens up, drops lower, takes out this previous hourly candle low, then immediately begins to reprice towards the high of this hourly candle right here. We're now going to take a look at the lower time frames. Here on the 1 minute chart of NQ. And what I want you to see is the following. What I want you to see is that during the launch cycle, the market repriced towards the downside. It drawed towards that RBC. When this RBC was reached, what I want you to see is that we see the typical reversal patterns taking place, where we begin to see an open low during the beginning of the next 90-minute cycle, purging the launch cycle low, and we then begin to see the market show signatures of wanting to reverse. First of all, the market expands into this CB right here. Notice that when we trade into this CB, a high gets formed just above the CB, and the market reprices lower. It trades into this long wick, which got established at 1 PM. This wick functions as support on price. The market begins to spool towards the upside. Notice that it reprices above the high, which formed inside of this CB. And now something very important has to be understood by you, and that's the following. This repricing above that high, that right there is the market structure shift pattern which is in play. Why? Because we reprice above the high, which formed inside of a CB, inside of our hourly BC, which was a point of interest since it was a range low, when the time is right. What do you see right here? You see a 1 minute BC form inside of the price range of this 1 minute CB. You have an inversion for value gap right here, and that inversion for value gap has to function as support on price. Notice that this is all lining up with the high of this blue box, which is that hourly BC. The market finds support inside of that hourly BC and inside of that 1 minute BC and inside of that inversion for value gap, and it then begins to spool towards the upside. When is this occurring? During the first macro of the PM session, which we take a look at from 12:45 to 1:15 PM. We see the market then expand higher and we form this high. The market begins to retrace, and in what does it retrace? It retraces into this CB's price range. This CB must function as support on price. It must function as an inversion for value gap. Notice that the market finds support there before beginning to expand towards the upside. This was a beautiful expansion towards the upside, and when we reach the line cycle high, notice that the market just begins to consolidate. It just begins to go back and forth, and it's very slow delivery. What I want you to take away from this breakdown right here is the following. What I want you to take away is first of all the overall environment selection, meaning what is the current delivery of this PM session likely going to do? Is it likely going to expand, or is it likely going to retrace back into the daily range? Is it a high probability environment? Yes. Why? Because we have reached a range low, that hourly BC, at the right time. We engineered sell-side liquidity and we purged that sell-side liquidity right here. And we then begin to see the signatures that we're looking for in order to confirm that smart money reversal. And therefore, everything was aligned right here to confirm that we would see a purge of the launch cycle low, followed by a revert towards the launch cycle high. And this right here is a beautiful PM session opportunity, which I highly suggest you to investigate. Now, if we pay attention to the reversal right here, what I want you to see is the following. On the left, you can see Nasdaq, and on the right, you can see ES. What I want you to see is that Nasdaq formed its respective low at 1 p.m. ES, however, formed its low at 1:01 p.m. That right there is SMT. It's a very small SMT because it only took place between two 1-minute candles. However, it's still a Kraken correlation, and that Kraken correlation is taking place below the previous cycle low. And that right there is what I want you to take away from this breakdown. Pay attention to the higher time frame analysis, and then understand that from the higher time frame analysis, you can already see these lower time frame fractals playing out.
When I gave the word, now in the morning I sleep alone. Sweep the streets I used to own. I used to roll the dice, listen as the crowd would sing. Now the old king is dead along with the king. 1 minute I held the key. Next the walls were closed on me, and I discovered that my castle stand upon pillars of stone, pillars of sand. I hear Jerusalem bells are ringing, Roman cavalry choirs are singing. Mirror, my sword and shield, my missionaries in a foreign field. For some reason I can't explain, once you've gone, it was never alone. It's good, and that was when I ruled the world. It was the wicked and wild wind, blew down the doors to let me in, shattered windows and the sound of drums.
Playing out. Now, if we pay attention to the next opportunity then, what I want you to see is the following. It is now Wednesday, and the market repriced higher during the CPR release into that new week opening gap, which was the range high. Notice that we rejected new week opening gap and then begin to reprice towards the downside. We trade back into the mrNbc right here. What I want you to see, however, is that we stop right in advance of that previous day low, just like we stopped right in advance of that previous daily high during that CPR release. Therefore, you tell me, are we bullish or bearish for the day? Are we anticipating higher prices or are we anticipating lower prices? At this moment in time, this is not clear. At this moment in time, it's not clear to us what the order flow is likely going to draw towards. Therefore, we anticipate chop. Therefore, we anticipate a high resistance liquidity run environment. The fact that they left equal highs intact relative to this previous day high, and they left relatively equal lows intact relative to their previous day low is very suspicious. Therefore, we need to wait for the market to reprice above either the relatively equal highs or below the relatively equal lows during the right time, and then we can anticipate a smart money reversal to form from there. What I want you to see is that we run higher throughout the latter part of the morning session and throughout the lunch cycle. Just like lunch expanded towards the downside on Tuesday, you can see that the lunch expanded now towards the upside on Wednesday. And we see the market take out these relatively equal highs on Nasdaq. First of all, we take out the morning session high, but we also take out that previous daily high. Why is this significant? Because you can anticipate that we're likely going to see some form of reaction now that we have taken out these time-based liquidity pools. And when you pay attention to ES on the right, you will see that ES did not take out those relatively equal highs. Surely it took out the first high, the morning session high, but notice that it did not take out the Tuesday high. And what is that? That is SMT. Where is this SMT taking place? At the range high on Nasdaq, at that new week opening gap. Don't look at the closure above that new week opening gap as, oh, we're now turning bullish. No. Why are we not turning bullish? Because intermarket relationship is suggesting to us that we're likely going to fall back into the day range. What can we anticipate? The midnight opening price is a logical draw on liquidity, which is in a discount of the overall day range from this low to this high. If we pay attention then to the 1 minute chart of both Nasdaq and ES, what I want you to see is that these black lines right here, on the left on Nasdaq and on the right on ES, represent that previous day high. Notice that Nasdaq trades above it, whilst ES doesn't. This right here is SMT. However, if you pay attention to the 30-minute cycles from 1 p.m., what you will see is that Nasdaq creates a higher high during the second 30-minute cycle relative to that first 30-minute cycle, whilst ES creates a lower high relative to that first 30-minute cycle. So let me just summarize what we have now. We have seen the markets take out the launch cycle high, meaning we traded above this blue box its respective high on both Nasdaq as ES. Nasdaq runs the previous daily high, whilst ES doesn't. So that is already a big SMT. Yes? What we then see is that we see SMT on a smaller time cycle as well. SMT relative to the previous 30-minute cycle. When can we anticipate that the market is likely going to turn around? We can anticipate that the market is likely going to turn around when we reach that macro from 1:45 p.m. till 2:15 p.m. What do we see? We see the markets begin to turn around and they draw towards sell-side liquidity next. Notice that we begin to see ES take out the orange cycle low, whilst Nasdaq never took it out. What is that? That's again SMT. When you see ES take out the orange cycle low, whilst Nasdaq doesn't, as you know from the trade management lectures from the model series, you know that that is a sign to partial. That is a sign to say, okay, I'm just going to be content with enough on Nasdaq as well. Because what is potentially going to occur is the following, that ES takes out that launch cycle low, whilst Nasdaq doesn't, and that we then see time distortion taking place going into the close. Now, if we pay attention to this 1 minute chart of Nasdaq, what I want you to see is the following. What I want you to see is that at 1:56 p.m. we formed a high of day right here above that previous daily high. We formed that daily high and we begin to see the market displace lower, we begin to see it trade back into this gray box. This gray box represents that new week opening gap, if you remember. What I want you to see is that when we trade below this previous daily high, that black line, we trade through this 1 minute BC. This 1 minute BC formed during the moment that price repriced above that previous daily high. Therefore, we anticipate that this BC is likely going to function as an inversion value gap on price. But that right there is not even required in order for us to go short. The fact that we reject that previous daily high and that we trade back below the new week opening gap's high is already enough whilst we have that S&P to confirm to me that we have formed the high of day and that we're likely going to see a sell program begin to unfold soon. What do we see? We begin to see the market displace towards the downside, and notice how the left side of the curve is influencing the right side of the curve. If you did not go short right here yet, you could have waited for the next shorting opportunities. Every single retracement higher, such as here, into this BC on the left side of the curve was a potential shorting opportunity. Notice that we retrace into that BC, into this upclose candle, and we then reject it. We slam lower. Market takes out sells that liquidity resting below this low, and it retraces. During this retracement, another short opportunity presented itself inside of these CBs right here, and the market begins to eventually roll over. It draws towards sells at liquidity resting below these relatively equal lows. Personally, I partialed just above them inside of this BC to secure some profit, and we then saw the market eventually take out those relatively equal lows as well. And at the same time, I'm monitoring ES. And because I'm seeing ES already begin to draw towards the grind cycle low, whilst Nasdaq isn't, I know I need to be cautious when it comes to holding on to the idea that this grind cycle low has to get taken out. And that is trade management, and that is something which you really need to learn by experience. You really need to basically experience a few times that you're holding on for that grind cycle low, and you're wondering why doesn't it get reached. And then after the session, you look at, for example, ES, and then you're like, aha, now I see why it didn't get reached, because ES already took it. And therefore, that is something which I'm trying to basically share with you, that pay attention to intermarket relationship. Not just to recognize this reversal right here, to recognize the SMR, but also when it comes to determining when to take partials. Because you cannot go broke taking partials. No one has ever gotten broke by taking partials. Now the final trade which we're going to take a look at took place on Thursday. This was a morning session trade, and this was exactly the setup which I wanted to see take place on Wednesday. And when it did not take place during the morning session on Wednesday, I knew it would likely take place later. During the Thursday review, I shared with you that what I was looking for on Wednesday was that I was looking for the Tuesday low, which formed inside of this BC to get taken out to then provide buying opportunities. What I want you to see is the following. What I want you to see is that on Thursday we opened up and we initially repriced lower. We formed this low and we then saw the market reprice higher, creating an hourly BC. I shared with you that I would be utilizing this hourly BC to gauge the order flow going into the day of Thursday. What I want you to see is that 8:30 news was utilized to reprice lower, and we saw 9:30 get utilized to initially run higher and then reprice lower as well. When I then saw the 10 o'clock hour open up, I was anticipating that we would open up, drop lower to take out the previous daily lows, the Tuesday and Wednesday low. And when I saw the market reach CE 50% of this hourly BC at the right time, I went long inside of the following delivery. I went long inside of the delivery from this low, targeting buy side liquidity, targeting that midnight opening price and that hourly BC, which I shared with you in advance. This hourly BC got displaced through, and now we anticipate that it's likely going to function as resistance on price. We saw the market form a new high here before expanding towards the downside. Notice that when we reprice below the hourly BC with this wick, the next candle offers buy side and then immediately expands away from it. That is something which is important going into the day of Friday. Now, if we pay attention to intermarket relationship, what I want you to see is the following. What I want you to see is that Nasdaq took out those previous daily lows, whilst ES didn't. That right there is SMT relative to previous daily lows. And that is just like I explained on that Wednesday afternoon session short, a very important signature because it shows to you that there's a significant manipulation taking place right now, and therefore we can anticipate distribution to take place soon. If we pay attention to the 1 minute chart then of Nasdaq, what I want you to see is the following. What I want you to see on this 1 minute chart is that from 9:30 on, we initially reprice higher. We reach the 8:30 open right here, and we begin to see the market eventually spool towards the downside. It begins to run lower. We reach that RBC again, and consolidation begins to take place. We see the market go back and forth for a while. Notice that the macro from 9:45 to 10:15 is consolidating. This is very important for the logic behind this trade. We see this consolidation taking place, and we see the market engineer buy side liquidity right here. Eventually, at the end of the macro, the market begins to expand towards the downside. Notice that we have these big down close candles. Notice that we have all of a sudden the market beginning speeding up. Like I outlined with the lectures in which I explained that there's a rhythm to IPDA, where it is expanding, where it's quick, it slows down, and expands into our point of interest, into that key level which we're monitoring. Notice that we reach 50% of that RBC, form the low there, and then begin to displace higher again. We displace above that Tuesday low, above that old weekly low. And notice that the moment we reprice above it, it begins to function as support on price. At this moment in time, I'm very confident in the fact that we have likely formed the low of the morning session and that we're likely going to draw towards buy side liquidity next. What buy side liquidity can we target? Well, first of all, we can target the buy side liquidity which got engineered above these relative vehicle highs during the macro. Secondly, we can pay attention to the range which got established from this high right here to this low. Why this high? Because this high set up the impulse leg towards the downside. But notice that it's also the high of the regular trading hours, which begin at 9:30 a.m. We see the market reprice beautifully towards the upside, and notice that every single down close candle or sequence of down close candles is functioning as support on price. We expand away from that old weekly low, form a high, retrace. If you were not long yet in this area, this was the next long opportunity. We retrace into this down close candle, form the low there, and then begin expanding towards the upside. The market begins to consolidate for a while because it's trading around equilibrium of the current range. What do we anticipate around equilibrium? We anticipate consolidation, and the market retraces into this high before expanding towards the upside. But notice that again, the expansion is rather short-lived because when this buy-side liquidity pool got taken out, more consolidation took place, and eventually we repriced into this CB in a premium, into the 930 open price, which I've extended to the right, form the high there, and then begin to reprice lower, and time distortion begins to take place. This run higher is textbook low resistance liquidity run. This run higher originated from a key level. It got reached at the right time, even though it was outside of the macro. The time was right. Why? Because the delivery profile for this morning session was that the macro would consolidate to engineer buy-side liquidity in advance of these relative weak lows on the daily chart, or on the hourly chart, depends, those daily relative weak lows, you get what I'm trying to say. And we see sell-side liquidity during the previous cycle get engineered in advance of it. So you don't only have this previous cycle low, which got engineered above that hourly BC, its respective CE, but you also have that old weekly low right here. Therefore, the delivery profile for this morning session was manipulate lower after the macro to distribute higher after the macro, until when is distribution likely going to take place? During the next macro from 10:45 to 11:15. We reach the premium of this range and we eventually roll over. And here we're on the 15-second chart. And I know that for the majority of you, you're probably going to look at this delivery and you're going to be like, what the F? Are these executions real? Is it really possible to buy the low? Is it really possible to pyramid into a position? Is this all even possible? Guys, I literally gave you this exact range and this exact level all throughout this week. And all of the concepts which I teach you based on time and price were present inside of this delivery. And if you do not understand it yet, trust me, I don't know exactly when. It could be after this lecture, it could be after what I'm about to explain, it could be next week, it could be next month, it could be in a few months, it could be even next year. But as long as you stick at it, as long as you keep on investigating what I'm sharing with you, I'm telling you, your moment will come. And then you will be able to see exactly how I knew that this would be the low right here, that you would likely see a buy program unfold soon. What I want you to see is that we see the market accelerate towards the downside. This is the final run lower into our point of interest of those daily lows and into that hourly BC, its respective CE, 50% of that BC. Notice that this down close candle reprices into CE 50% of that hourly BC, and the next candle opens up 1020 and it does one thing. And what does it do? It reprices above the open of this down close candle. This down close candle is your real bullish order block. This down close candle, yes, this is the final manipulation which is taking place. It's the final trap for every retail miner trader, because they're looking at the fact that we trade below those daily lows and they're like, you know what? I need to go market short now. The time is right for the market to just keep on free falling. The crash is here. It's imminent. And here it goes. That's what this down close candle represents. Do you see how thick it is? Do you see how fat it is? That right there, yes, is what I'm looking for, because that is manipulation. And the moment we cross the open of the down close candle, that's my change in the state of delivery. And now I know that we're changing from sell program into buy program. But at what time is this CSD taking place? I didn't annotate it, but this candle right here was at 1020. Meaning at 1020, we open up and we immediately reprice higher. The low formed at 1019. And if you want to go deep into the rabbit hole, which I know some of you want, some of you are trying to go deep. And it's a very interesting journey because there are many specific details which you can find. If you pay attention to 10-minute cycles, you will be able to understand why this was the low. Market reprices above that open and we see it retrace. It retraces into 50% of that bullish order block. This is mean threshold. Notice that this wick goes below it, but notice that the boys keep on closing inside of it. We reprice away from the bullish order block. We form a high inside of this CB. Think back to the first trade which I broke down during this lecture. We form a high inside of that CB and we reprice back into the old weekly lowest price level, this sell side liquidity pool. However, what we are seeing right here is very interesting because I have annotated this black line. We will be paying attention to intermarket relationship in a bit between Nasdaq and ES, and you will see why I've annotated this row right here. The market reprices above this down close candle, and that is where I want to pyramid again. Why? Because this down close candle is also a bullish order block. This down close candle has to function as support on price. Market eventually displaces above this high, which formed inside of this CB, and we see a BC get created. Market retraces into that. That's again an entry opportunity. Notice that every single blue arrow which you're seeing right here is a potential entry opportunity which you can work off. Market forms low there and begins to accelerate towards the upside. It begins to expand outside of that mrNbc's price range. We see the market form a high. What time? Around 10:30. The market begins to retrace. And what does it retrace? It retraces back into the range of this old high, of this old BC, forms a low there, and then begins to expand higher. And this is where I'm like, okay, at this moment in time, when I see the market expand away from this BC, after we saw this deep retracement taking place, this is where I know high frequency trading algorithms are done. They have filled their longs all throughout this area, and they're now going to do one thing, and that's spool it towards the upside. Why? Because this right here is where they want to buy. They want to position themselves long in a discount of the overall range that we're operating in. The moment that we reprice outside of that range, be content with the position size which you have. Don't try to do more, and simply just manage your position accordingly and take profit accordingly. And that's what you can see me do. I take partials the moment that I begin to see intermarket relationships suggest to me that we might see another retracement taking place or such. Meaning I partialed in close proximity to this high, I partialed above that high, I partialed again in this area, I partialed again in this area, and this is all taking place because I'm monitoring how ES is delivering at the time, and I'm also taking partials due to the fact that I understand that we're likely going to see the market begin to eventually roll over, because we displaced below that mrNbc. And when you're trading against the higher time frame order flow, when you're thinking to yourself that you're trading against the higher time frame order flow, that's a better way to phrase it. When you're seeing that, take partials accordingly. And that's what I wrote in the market updates channel as well. And what I'm basically saying then is that you need to be content with enough and you need to take partials at logical levels. Eventually the market reaches that 9:30 open price and that CB which formed there, and notice that when I exited my longs there, it immediately began to roll over. It immediately began to reprice towards the downside. And this is how you know that this is driven by high frequency trading algorithms. You cannot tell me that the reaction to this specific CB right here is random during that macro window, where we also see SMT on the highs forming. This was a beautiful trade. This was a very nice run towards the upside. If we pay attention to intermarket relationship then, what I want you to see is the following. What I want you to see is that on these rows right here, inside of that bullish order block, just above that old weekly low, you can see that Nasdaq is making a lower low right here, whilst ES is making a higher low, and that is SMT. But notice I already went wrong before the SMT even formed, because this was already a change in the state of delivery. We had that daily SMT, which already signaled that the low would form here to then begin to expand higher. This SMT is simply the sign that the consolidation is ending and that the buy program, its respective expansion, is likely going to take place soon. With that being said, this actually comes to an end. I hope that you found it insightful. I know that this was a bit of a mix-up between the topical lecture style and the trade breakdown style, but I hope that you found it insightful. And I think this is definitely a lecture which is going to make many light bulbs go off for certain individuals. Have a nice day, and I look forward to catching up with you soon. Be safe. Hello there, I hope that you're doing well. Welcome to this new trade breakdown lecture. The trade breakdown lecture which you're going to watch is going to be on manipulation and distribution. Throughout the upcoming trade breakdown lectures, I will try to combine the style of a trade breakdown lecture with a topical lecture. This means that every single trade breakdown lecture will be centered around one specific topic so that you're able to truly learn the ins and outs of that topic. This lecture is going to be on manipulation and distribution. Recognize the manipulation so that we can look for the distribution for the opportunities. With that being said, let us begin with this lecture. First of all, we are going to take a look at the following two schematics. These schematics represent the purge and revert as I've been teaching it to you with regards to my time cycles logic. My time cycles logic is applicable across all time cycles, and that means from the highest possible or biggest possible cycles, such as weekly, daily, or even session cycles, down to the smaller cycles such as the 30 and 10-minute cycles, of course. When I look at these schematics, I want you to pay attention to the following. I'm about to hover over these schematics and I want you to truly pay attention to in what order I'm explaining what I'm explaining to you. As you can see right here, you can see my big yellow cursor. This big yellow cursor is going to hover over the schematics and I'm going to walk you through the logic behind why these schematics work and why they play out. What I need you to see is that on the left right here, we can see that the market opens up and this horizontal line represents the open of a new time cycle. This can be any time cycle of your choosing. The underlying narrative is that we are going to see higher prices for the day or session, or maybe even week. And therefore, we are looking for the market to open, drop lower to take out the previous cycle's low, because below that low, a lot of sell-side liquidity is engineered. We need this sell-side liquidity in order to fill our long positions. That is the internal dialogue of smart money, meaning IPTA is repricing lower to go higher. The moment that price displaces back above the previous cycle low and above the opening of the current time cycle, that right there shares to you that we are likely going to see the market begin to draw towards this green line, which represents the previous cycle high. The previous cycle high being a very important buy-side liquidity pool. Now, when we pay attention to the schematic on the right here, you can see that's exactly the schematic on the left, but then inversed, where you can see that the market opens up for this new time cycle. It runs up higher to take out buy-side liquidity engineered above the previous cycle high. And we then begin to see the signs of the market wanting to turn around and roll over. What is occurring right here is that during this repricing higher, short orders are being filled. And these short orders are being filled because buy-side liquidity is being taken out. And at the same time, a lot of buyers are being trapped into long positions. So that is the counterparty which we require in order to fill our short orders. And what we then begin to see is that the market begins to roll over and it displaces below that previous cycle's high buy-side liquidity pool price level. Notice that we displace below the opening price right here, and that right there shows to you that the time is likely now right for the market to expand towards the downside to draw towards the sell-side liquidity pool. The reason why this sell-side liquidity pool is so important is because we are anticipating lower prices for the session or day or even week to come. And that is where narrative comes in play. What I need you to pay attention to within these schematics is what I've just annotated with these red boxes. What I need you to pay attention to is this red box within the bullish example and this red box within the bearish examples. What you can see is that these red boxes represent the manipulation which takes place after the open has occurred. Meaning, after the open of the new time cycle, manipulation against our bias is occurring. Where on the left, I outlined to you that we were anticipating higher prices, but we see the market drop suddenly. On the right, you can see that I was anticipating lower prices, but we see the market run up higher quickly. Put emphasis on the word quickly. What you can see is that on the left, we are seeing open low taking place, and on the right, we are seeing open high. And you might be wondering, open, lower, open, high of what? Of this new time cycle which is opening up. And how price is being delivered around this opening price is crucial when it comes to anticipating what's likely going to happen next. Because when we see manipulation lower against our bullish bias, it's exactly what we're looking for. Because we know that the majority of traders are going to misinterpret that. Just like the majority of traders are going to misinterpret this, run higher, whilst the underlying order flow is bearish. They will look at this as signs of strength, but you should look at this as manipulation. Now, where in your protocol should this logic of time cycles and these specific open lows or open highs be implemented? If you watch the 2024 model series, which you highly should before continuing watching this trade breakdown lecture, this traders breakdown lecture is by no means meant for a newer student. This traders breakdown lecture is meant for the student who already has at least experience with the model as taught within the 2024 model series, because what I'm describing to you here is an advanced way of looking at manipulation. We recognize this manipulation inside of this step right here, where we are looking at the point of interest. Within these boxes, you can see that steps are being shown of the trading protocol as I've taught it to you. The point of interest is very important because the point of interest is the level where we're anticipating a reversal to originate from. Here you can see that I've written out how. Let me explain. How the point of interest gets traded into tells you the story for what's about to happen, likely next. Because we are looking for a certain form of manipulation to occur into our point of interest, because that is telling to us that distribution is likely going to follow next. When you recognize manipulation, the distribution can be anticipated next. So how price trades into our point of interest is crucial. And that is where the logic which I've just described to you should be implemented within your trading protocol. Pay attention to the point of interest and how price is trading into it. When we pay attention to an example of this then, what you can see on the right here is that you can see a market which is expanding towards the upside. Next to that, you can see that I've annotated the high of this downclose candle with this very long wick and the low of this candle. Notice that on the left, I have also shown the schematic of the bullish purge and revert, where we purge the previous cycle low and revert towards the previous cycle high. What I want you to understand is that on the right here, you are looking at an RE chart of Nasdaq. Notice that this new candle opened up, went lower, took out sell-side liquidity resting below this low, and then began a reversal to draw towards the upside. Notice that we come in very close proximity to this candle's high, but notice that the market stops right in advance of it. The chart here on the right is the RE chart of Nasdaq, and what I want you to see is that this candle opened low and then began expanding towards the upside. And even though I do not use RE candles as purge and revert models or anything along those lines, the RE chart shows to you specific opens, and the most important opens to monitor on the RE chart are the following. For the morning session, I'm looking at the 7 o'clock, the 7 a.m. opening, I'm looking at the 10 o'clock opening, and I am looking at the 1 p.m. opening. And the reason why I'm paying attention to these specific openings on the RE chart is because these openings are the openings of the 90-minute cycles. Therefore, I'm paying attention to, all right, how is price going to open up for this new cycle? And if we drop into the lower time frames in a bit, it will clear up to you. But before we do that, I'm going to teach you a way of being able to recognize an expansion taking place before it occurs. Meaning, I'm going to teach you a way of looking at the markets through a certain perspective to confirm distribution about to arrive before it even occurs. In order to do so, we will pay attention to intermarket relationship. On the left right here, you can see Nasdaq, and on the right you can see ES. Notice that I've annotated the high and low of this downclose candle with this long wick on Nasdaq, and next to that I have annotated the high and low of the same time right here on ES. Notice that when the 10 o'clock open took place, Nasdaq took out this previous candle's low. When we, however, pay attention to the 10 o'clock open on ES, you will see that ES never took out that low. That right there is SMT, guys. That right there is a cracker correlation relative to this candle's low. And that is telling to you that we're likely going to see an expansion higher taking place soon. So when we pay attention to this same chart again, but now through the lens of this RE imbalance which I've annotated, you begin to understand why there was IOFET which occurred, why institutional order flow entry drill occurred, why we saw the market just step into this BC and then begin expanding right away afterwards. It's because the market is in a rush to reprice towards specific buy-side liquidity pool objectives. Now, I can already hear you say, all right, Zeus, this is all fun, but how can we apply this information? How can we use this in a real-time environment? Well, what you need to establish is the following. You need to know that this is the point of interest from which IPDA is going to reprice higher. Meaning, we don't look for any long opportunities in advance of that point of interest being reached at the right time and in the right way. Yep, you heard that right. It's not just at the right time. It's in the right way that the point of interest has to get reached. Yep, 2025 is going to be so fun, guys. You're going to learn so many new things that you're going to be like, how the hell did I not see this prior? It's all hidden in plain sight. It's right in front of you. All you need to do is pay attention to details and you need to investigate and listen closely to the sequence in which I'm explaining this to you. Because once you see this, you can never unsee it. Meaning, what we do is we literally place an alert at this candle's low. And until that low gets taken out, we don't care. We're not even looking at the markets. We're just waiting. We're just waiting. But when that low gets taken out, that is when we begin to hunt, because we understand that the market is drawn towards the upside. Does the market need to reach this buy-side liquidity pool in order for us to find a profitable trade? Absolutely not. All we need to know is that this REBC is going to get utilized to reprice higher. It's going to get utilized to send the market towards the upside. And that is the draw liquidity above market price, which we have established. Now, if we drop into the 1 minute chart, here you can see that I have added lipstick onto this 1 minute chart. And next to that, you can see my executions for this day. What I will do is I will walk you through this delivery. And we will begin with our time of interest as outlined within the 2024 model series. Within the 2024 model series, I taught you to pay attention to the 9:30 open until 10:30. Ideally, we would like to see our smart money reversal for the morning session form during this window of time. That's a 1 hour time window. What I want you to see is that from 9:30, we see the market open high, and it then suddenly drops towards the downside. Notice how quickly it expands towards the downside. Notice that a CB gets created here that the market never retraced into before continuing its expansion lower. We see the market expand, and towards 9:45, the beginning of our macro from 9:45 to 10:15, we begin to see the market consolidate. It's going back and forth, back and forth, back and forth. 10 o'clock comes along. What does 10 o'clock do? This is the open of that RE candle, which I've been outlining to you in the previous slides. Notice that from 10 o'clock, the market opens and immediately begins to run higher. It immediately begins to draw towards the upside, so to say. Is the smart money reversal, however, already in? No, because 10 o'clock opened and only went higher. It didn't take out any sell-side liquidity for this new 90-minute cycle. Therefore, what we're waiting for is we're waiting for the market to drop below the 10 o'clock open and to trade into that REBC. That REBC's high is annotated by this low. This low is our previous 30-minute cycle low. Notice that this low is the low of 9:30 to 10 a.m. Hello, do you see how I'm combining the use of a higher time frame array with time here? I'm utilizing 30-minute cycles and the understanding of that higher time frame array to confirm that this sudden drop lower, sudden drop right here, is literally manipulation which is occurring. From this moment in time, when I see this sudden drop towards the downside and I see these CBs get created, that right there is IBDA basically showcasing its hand to me. It's literally telling to me, all right, we're going to distribute higher soon. Because what they're actually doing is the following. They're trapping retail money traders into believing, all right, we're gonna reprice lower for the remainder of the day. It's time to dump. It's time for the markets to be in a rush to go lower. So what is occurring is they create that narrative by these big down close candles, and they begin to see the market draw lower. So what does everyone think? Everyone thinks, all right, it's time to go market short. We just need to be a part of this move. They place their stop losses above all of these highs right here. And that's the engineering of buy side liquidity which is taking place. At the same time, this sudden drop lower also has another function. And that's the following. This sudden drop lower has the function of drawing towards the stop losses of early buyers of this move higher. Because there were people that went long inside of this small run higher already. They placed their stop losses below these lows. And that's the engineering of sell side which occurred. So there are two functions that are taking place right here. And I hope that you're taking notes of what I'm describing to you, because this is a very important paradigm to have when it comes to manipulation. Notice that the market stops right in advance of that RBC's high, right here. And we see a retracement taking place. Man, oh man, when we see this, oh boy, that is time. And the reason why is because what is occurring is that they're engineering sell side liquidity one more time. What will people think when they see these relatively equal lows get created? They will think to themselves, oh, strong support is being found, right? The market is having a hard time with displacing through the support range. Therefore, we can go market long and place our stop losses below these relatively equal lows. That's their thought process. What occurs? Nasdaq retraces, and we then begin to see the market drop suddenly one more time with these three down close candles right here. We trade into the RBC's high. We take out that previous 30-minute cycle low when near the end of the new 30-minute cycle right here. And we begin to see the signs of a smart money reversal forming. From this moment in time that you begin to see the market displace higher with this big green candle and the big green candle afterwards, and price trades above this candle's open, the open of the first down close candle in the sequence of down close candles, you know that the change in the state of delivery has just taken place. And what that means is the following. What that means is that where IBDA was initially repricing lower since the 9:30 open, it's now going to seek to draw towards buy side liquidity and draw higher next. When? Guys, from 10:30 on, from the open of that new 30-minute cycle. I haven't annotated the open price of that 30-minute cycle, but if you would annotate that, you will see that we open low into this BC, into the bullish order book, and begin expanding higher. Notice that the market reprices above this sequence of imbalances right here, and these are true inversions for value gaps. These CBs should function as support on price moving forward. Notice that we begin to see this BC get created when the market expands outside of that price range of those inversions for value gaps. We see the market retrace into that. And during this retracement, you can see that I'm pyramiding into my position. But notice that the market closes below that BC. Does that mean that all of a sudden we're going to look for lower prices now? No, because what is the underlying narrative? The underlying narrative is that we dropped lower to go higher, right? That's the thought process. Therefore, I'm looking at this drop lower as manipulation. Take out sell side liquidity resting below this low, and that allows me to pyramid once more. This is where a lot of retail-minded traders that trade based upon so-called smart money concepts would fall into the trap of shorting this so-called inversion value gap. They are chasing price patterns. Are you beginning to realize that? Guys, what I'm explaining to you, yes, literally goes so much deeper than just price patterns. It's time and price. The moment that price crossed this bullish order book, it's open, and that bullish order block got validated, from that moment in time, yes, listen closely, from that moment in time, IPDA was in a buy program. And that right there shares with you, all right, every single expansion higher followed by a retracement is a buying opportunity. Notice that the market displaces back above this BC right here and a new BC gets created. Isn't it interesting to see how many imbalances are forming all in each other in this area? It's almost as if these imbalances are meant to form right here. Notice that the market retraces into that bullish for value gap and into that sequence of imbalances, and that's another entry opportunity. Notice how I keep on pyramiding because the market is drawn towards this CB and the 930 open. We see the market expand higher and it displaces above this candle's high. Notice that I've annotated this full candle. Notice that when the market traded above that candle's high, a BC formed. That right there is a key algorithmic signature that tells you, all right, we're going to continue drawing higher. When the market retraces into that BC, it's again an entry opportunity. And the reason why is because this is your previous 30-minute cycle high. And this is your previous time cycle high. And in order for continuation higher to take place, what you need to see occur is that when that previous cycle high gets taken out, it should function as support and price. Yep. I have shown to you the purge and revert schematics, but if you go to the mentorship form and you look at the sticker pack, you will also see the continuation schematics which we have created for you. Notice that the market consolidates at the high of that previous 30-minute cycle, and we then eventually see the market expand higher, drawing towards that CB, and that right there is a big partial for me. I wanted to see the market trade towards the 930 open as well, but due to the fact that there was SMT with ES on the highs already, the market was not ready to do so. So when the market eventually closed below this CB and we really saw the signs of bearishness stepping in, I closed another big part of my position. Now, what I want you to take away from everything which I've just broken down to you, and I truly hope that you as a newer student did not watch all the way to this part. I truly hope that only advanced students are watching until this now. Because I know that the newer student is probably like listening to me and they're like, what is this guy on about? What is he speaking about? Yep. I wanted to make this trade breakdown lecture on the topic of manipulation and distribution because it is one of the most important things to understand. And the reason why it is so important to understand is because if you cannot recognize manipulation, you are going to be the one that's going to suffer from the consequences of being manipulated. And you might be like, damn, these market makers, they're out to hunt my stops, right? They're out there to hunt me, my stop losses. They're looking for me. That's the thought process that some of you might have and that the majority of a lot of retail mind traders have. Here comes the thing. These market makers don't give a shit about where your stop loss is. They really don't. They really don't care. Because all they're doing is they're delivering price in an efficient manner within specific time cycles, within specific windows of time. This right here is consolidation. And that consolidation is basically engineering liquidity in the form of sell stops below these relative weak lows, as you know. But here comes the thing. What you need to recognize is that at the same time, buy side liquidity is being engineered on the highs right here. So what will occur is that one sudden drop will take place, one big manipulation run will take place to take out all of the sell side liquidity. And when you can recognize that, and you can recognize when that will end, that manipulation, think of SMT. Remember what I outlined on the RE charts. Nasdaq took out this low whilst ES didn't. That is SMT, guys. The manipulation is over and now it's time for the market to begin drawing towards the upside. This right here is beautiful bullish order flow, and I truly hope that you are going to investigate what I outlined to you. And you might be looking at this open right here and you might think to yourself, but we opened and initially went higher, right? Yep, that's correct. But notice that for the full RE candle from 10 to 11, or for the full 90-minute cycle from 10 to 11:30, right here, you can see that we went lower within the first 30 minutes. Meaning within the first 30 minutes of trading, the low formed below the cycle open of 10 o'clock right here, inside of a point of interest. Are you beginning to connect the dots? You do not need to see the open and immediately drop lower in order for it to be open low. As long as price drops lower after the open and there's still enough time for the remainder of the time cycle to play out and for IPTA to deliver, you have open low, guys. And that right there is something which is going to take some time for you for it to click. Because when you pay attention to this 930 open, you clearly see 930 open, high, drops lower. Yes? So you can easily see, yep, we went open, high, and then went lower. But here you can see that there's more time required for that open low to occur. Because the market initially had to run higher, engineer new buy-side liquidity above these highs, then manipulate lower so that distribution could follow afterwards. But this is still labeled as open low because we dropped below the opening price, whereas initially we didn't. And this is when the time was right for IPTA to begin expanding higher. So with that being said, this trade breakdown comes to an end. I hope that you found this insightful. If you are a newer student and you watch this breakdown all the way to the end, you're probably like experiencing a headache or something, or your mind is all over the place. And that's a good feeling because it shows that you're thinking deeply about what I described to you. Now, before we end this breakdown, there's one more thing which I want you to look at. And that is, I would say, undeniable algorithmic precision based upon time. When you pay attention to the sell side of the curve right here, and you begin paying attention to from the 930 open till 1030, you can see that until 1027, when this low formed, the market was drawn lower. From 1027 on, we saw the market displace higher and a buy program unfolded. Notice that when I, however, extend 1 hour more to the right and I put a vertical line at 1130, which is right here. Notice that 1130 is right here. I don't have a vertical line on my chart, but I want you to visualize it here. When I put that vertical line here, you can see that the buy program lasted nearly until 1130 after 1030. Must be random, right? That the sell side of the curve and the buy side of the curve come in close proximity to each other when it comes to their duration. This isn't always the case. It's not like it's always going to be precise, but this is, however, something which you can look into and which you can log within your data collection, where you can log how long it takes for the sell and buy side of the curve within market maker models to unfold. And that's a very interesting investigation to do. Time-based partials are a good idea to look into. So with that being said, I want to thank you for watching this lecture all the way to the end, and way more topical lectures will come. And this topic is going to be further discussed within the 2025 model series, which I will share within the upcoming months. Be safe. Good morning, everyone. I hope that you are doing well. Welcome to today's Trades Breakdown lecture. During today's breakdown lecture, I'm going to break down a market maker buy model trade that I took during the lunch session. I will explain to you why I was interested in trading during lunch, and I will break down the full logic for you. In order to do so, we must first take a look at the daily chart. On the daily chart, what we can see is that Nasdaq has traded away from this daily BC right here, and therefore to me the drawn liquidity was the buy side liquidity resting above this high. Or I should say, this is still my drawn liquidity until proven otherwise, but that will get discussed during the weekend review. This was the August high, and therefore I was anticipating the market to draw towards. The fact that we stopped in advance of that August high going into Friday was for me a potential sign of, okay, this could be the engineering of buy side liquidity. What I want you to see is that on Friday we do the following. We open up and we immediately drop lower right here. What do we drop lower in? Into Wednesday's high. For those of you that have been paying attention to all of my lectures thus far, you should see this as immediate rebalance, where we reprice aggressively towards the upside, trading above a previous candle's high, as you can see here. We close aggressively above it. The next candle opens up and immediately reprices lower into the first candle's high. The reason why I mention this is because going into next week, this could be a signature that could confirm to us that we're likely going to see speed and velocity on the way. Immediate rebalance is the following. Immediate rebalance is a rebalance which is taking place of a potential inefficiency because there's an urgency for the market to run higher. For example, what you see here is that we see deferred rebalance, meaning a rebalance that's taking place at a later point in time, where you see the market create a BC by this candle. You see that we create this inefficiency, and therefore the market has to reprice at a later point in time into that inefficiency and then trade away from it. In this case, what you're seeing is that there's no BC which has been created. Therefore, we do not have to anticipate the market to drop into the Wednesday high and then reprice higher if the underlying idea is that we're likely going to see higher prices. So that is the difference between deferred and immediate rebalance. In order for this immediate rebalance to be confirmed, there's something which we will have to take a look at on the lower time frames, but that is what I will touch on during the weekend review. Let us take a look now on the hourly chart, but please note the difference between a deferred rebalance and immediate rebalance. Immediate rebalance suggests that there's a rush for the market to reprice higher. When you see the signature and price action, you can anticipate big candles to come. If we go to the hourly chart then, what I need you to see is the following. I need you to see that on Thursday I shared with you that I wanted you to monitor this red box right here. I was anticipating higher prices as long as we would not displace below this downclose candle right here. If you have not been paying attention to the mentorship forum because you're not in it yet, I would highly suggest you to join it as soon as possible and move from there, because I'm sharing a lot of valuable insights every single market day that I deem to be interesting on that market update channel. I shared this downclose candle with you, and on Thursday we never reached that downclose candle, meaning during the morning session we repriced into this BC and we just stopped right in advance of the downclose candle. That is why I missed out on the longs during the morning session. The market then beautifully expanded towards the upside, and we can see this high form right here on Thursday in advance of that August high. The market repriced towards the downside and begins to go sideways. It begins to consolidate. What we then see is that during the beginning of the morning session, the market runs up higher, taking out the buy side liquidity resting above this high. Whilst this is occurring, you need to see that ES makes a lower high, whilst NQ makes a higher high right here. So we're going to take a look at ES as well. You can see that NQ makes this higher high, whilst ES makes a lower high. And that right there set up the repricing lower into that downclose candle right here. What we then see is that at 11 o'clock, the market opens up, drops lower, But notice that it immediately repriced towards the upside again, and look where the bodies close. The bodies keep on closing inside this down close candle with respective price range. And I can already hear you think, why that specific down close candle, Zeus? Why not, let's say, the candle next to it? Or why not this BC? Why this? Look, if we zoom into this delivery and we look at Thursday's delivery, what I want you to see is that during the London session, the market expanded above the Wednesday high. Notice that we trade above it with this candle right here. The next candle opens up, offers sell side, and then reprices away. The next candle is the down close candle, which I've annotated. If you pay close attention to what this down close candle is doing, you see the following. You can see that it opens up, drops lower, and what does it reprice into? It reprices into, look closely, let me just zoom in. It reprices into the Wednesday high. Pay attention to the prices. 19,900. 19,900. Light bulb. Market displaces away from that level, creates this BC here, and therefore we know that the market should never displace below this low if the underlying order flow is going to remain bullish. Therefore, you could have also annotated this BC, and look how perfectly that is being respected. Now, what I want you to understand is that yesterday, or I'm recording this on Saturday, so yesterday, so on Friday, there was no high impact news, meaning there was no high impact news driver that would likely inject a lot of volatility, and therefore we can anticipate that the market is just gonna go back and forth, back and forth. It's just going to consolidate. What should it consolidate around? What should it consistently refer to? To that 930 open price. Why? Because on Wednesday and Thursday, we already saw the market expand towards the upside aggressively, and we are seeing signatures that confirm to us that consolidation is on the way, such as that larger SMT with ES right here on the highs and SMT here as well. What we see is that at 11 o'clock, the market opens up and drops lower, trading into a specific price level. I know some of you are probably thinking, why are you looking at this price level? What's so specific about this candle? Let me explain. I've been sharing some insights lately on TEPTA with you. And what I need you to understand is that if we look at TEPTA, it's not just, oh, it's 11 a.m. and 11 a.m. That is why it's significant. No. What I need you to understand as well is that it can also be 11 a.m. and 11 p.m. What matters is the number right here. Meaning, if you pay close attention to this candle, you can see that it's the 11 a.m. candle, right? If you pay attention to this candle here, you can see that it is the 11 p.m. candle. The market reprices into the high of that candle, into that 11 p.m. candle, and notice how it immediately rejects it and begins to reprice towards the upside. Why is this significant information? Because it shows that time and price are aligned. During that previous 11 o'clock hour, the market was held inside of this range. This was the price range that it traded in. If we are going to see the next 11 a.m. or the next 11 hour, I should say, because it can be 11 a.m. and 11 p.m., trade back into that range, I'm going to make it a different chord for you. That means that time and price are aligning in that range. And therefore, we can logically anticipate that the market is going to reject that range again. If we see that rejection taking place, which we'll take a look at on the lower time frames, that to us is the signature that this is a high probability smart money reversal. If you pay attention to the candles as well, you should investigate this reversal. Pay attention to these three candles right here on the hourly chart. And that's a homework assignment for you, so don't be lazy and investigate it. If we drop into the 5-minute time frame then, what I need you to see is the following. I want you to see that on the 5-minute time frame we have that 930 open price right here. Notice that we have that SMT on the highs, which took place during the morning session, and we had SMT on the lows as well with ES. Therefore, the morning session was a low probability morning session. When we then see the market drop into that point of interest, into that red box right here, during our macro window, our eyes should immediately think, okay, we might form a low in this area and we might begin to reprice towards the upside soon. When is this confirmed? This is confirmed the moment the price displaces away from a point of interest. The point of interest being the price range of that downcross candle based on the hourly chart. What I want you to see is that the market drops lower and eventually trades into that purple box right here, which is that previous 11 p.m. price range. Let me just annotate 11 p.m. for you. What I want you to see is that 11 p.m. opens up right here and drops lower right away. The market reacts perfectly off that tap price range and we see this BC get created. The moment this BC gets created, I'm thinking the following. I'm thinking to myself, if we're going to find support inside this BC and we reprice higher, to me that's the confirmation that we have likely formed a low and that we should now begin to attack buy side liquidity. If we pay attention to time then, what I need you to see is that this repricing higher occurred at exactly 11:30 a.m. We open up, drop lower, find support inside that BC, find support near the low of that downcross candle based on the hourly chart, and reprice higher aggressively. Guys, when you see that signature right there that I'm sharing with you here, you can anticipate the launch cycle to expand and draw towards buy side liquidity next. Because who has been making money all throughout the sell-off? People that are in shorts, right? They are making money and they have not taken any partials. That means that they place their stop losses above the highs which form during this leg lower. If we apply time to that sequence, what you need to understand is that if we pay attention to our 90-minute cycles, so I'm just going to move this vertical line a bit to the left, and we pay attention to the 10 o'clock hour here. By the way, I'm just going to do it like this. Sorry, I thought I had the indicator John made on, but I unfortunately do not have it right now. So big shout out to John, by the way, for creating that indicator, because he created an indicator which you can use to plot 90-minute cycles yourself instead of having to draw vertical lines. So I'll be sure to add it to my charts that I'll be able to use it as well within my breakdowns. But anyhow, if we pay attention to our 90-minute cycles, what I want you to see is that between 10 to 11:30, this is the high that gets formed. This is the previous cycle high. When 11:30 opens up and we see it reprice away from a point of interest, we do not think it's going to take out this low anymore. Why not? Because this is potentially the low of day. Why? Because time and price are aligned. And there's no reason for the market to trade into that low if we're likely going to attack buy side liquidity. Therefore, we can anticipate the previous cycle low to remain intact and we can anticipate the market to draw towards that previous cycle high right here. And that was the buy side liquidity which I was targeting. If you pay close attention to this high formation, I want you to see that there's a consolidation which is taking place here. Meaning, you see the market go back and forth, back and forth, back and forth, back and forth. Above these highs, buy side liquidity is being engineered. That's so significant because the retail-minded traders will think to themselves, okay, this is a strong resistance zone, so to say. They will feel safe placing their stop losses above these highs. The market begins to run higher and it trades above that red box, above that red price range. That is already a very key signature. If you then also pay attention to these two blue lines above it, you must understand that there's that hourly BC, which I have outlined just above the downcross candle. Notice that this lines up with a 5-minute CB, which formed inside of it. If we pay attention to what occurs, we can see the market displays above that CB. We form this short-term high and then retrace, trading back into that CB's price range. Notice how this wick goes just below it at the 11:50 5-minute candle, and then the bodies keep on closing inside that price range. This is an M5 inversion for value gap. Just like I taught you within the model series, the moment that we see imbalances get displayed through on the left side of the curve, that's the signature to us that we're likely going to see the market change from a sell program into a buy program. If we then zoom into the 1 minute time frame, what I need you to see is the following. I want you to see that at exactly 11:30, the market begins to spool and draw towards the upside right here. It opens up, drops lower, and begins to run aggressively. It begins to show a willingness to begin to expand. What we see is that right here at 11:34, this BC gets created. Where is this BC being created? It's being created inside of the displacement leg, outside of that point of interest, outside of that red box. This right here is a key algorithmic signature, guys. When you have a very specific price range that you're monitoring based on a higher time frame chart, I want you to investigate how the market is going to displace away from that to confirm whether or not a low is in. And in this case, what I want you to understand as well is that the smart money reversal occurred at 11:16, by the way, meaning it was 1 minute after the macro window. Therefore, we must see how the market is going to deliver between this SMR and the next macro. What we can see is that the market begins to reverse and begins to expand towards the upside. We displace above that 5-minute inversion fair value gap. And if you pay close attention to the left side of the curve here, you can see that we have a 1-minute CB here as well. The market reprices into that CB, into this BC, and that's the longing opportunity if you were not long yet. To me, this was the highest probability setup right here because we had everything already signaling to us that we would likely draw towards buy side liquidity next. We displaced away from the tabular range right here. We saw 11:30 open up and begin to spool towards the upside. We saw displace above that downward candle based on the area chart. We saw every single discount array begin to function as support on price. When I see all the signatures, to me, that's the confirmation that the market is likely going to draw towards buy side liquidity next. And what's beautiful about this order flow is the following. I want you to see how we tap into this BC right here and we form this low. The market takes out that low, and that's exactly what you want to see because we want to see the market accumulate, manipulate, distribute inside of this very small fractal. This is engineered sell side liquidity. The market drops into the lower end of this BC, and this is where I went wrong. The moment that the market displaced above this downclose candle, I want to see this downclose candle function as support on price. For your info, the invalidation of this idea would be the following. I never want to see the market displace below this low right here. The reason why is because this low, first of all, traded away from this BC right here. Secondly, this low set up the displacement leg above that 5-minute inversion fair value gap, above this 1-minute CB right here, and therefore this low right here should remain intact if the underlying order flow is bullish. To me, this high here is also very important. Why that high specifically? That high formed inside of this CB and we displaced through that high with a BC. This is a true balanced price range. Therefore, this high must function as support on price. This is true resistance turn support. Now you also understand why I said that this was the engineering of sell side liquidity, if you pay close attention. What we then see is that the market displaces away from this range and we see a new BC get created. Notice that we have this downclose candle functioning as support beautifully. And this is a beautiful bullish order flow, which I would highly suggest you to pay close attention to when marking it all up. What I want you to see is that every single discount array begins functioning as support on price. And that's the signature of bullish order flow. Premium arrays are beginning to fail to function as resistance on price, whilst discount arrays get created and begin to function as support on price. Eventually, the market displaces above this sequence of imbalances right here, and we see them functioning as support on price. The market retraces into them and then slowly begins to grind towards the upside and draws towards that previous cycle high. The reason why we see such slow delivery when it comes to the back and forth delivery is because of the fact that this trade was taken during that launch cycle. One of the characteristics of the launch cycle is that it usually goes a lot in consolidation modes before it begins to expand. You need to allow for that to occur. You need to be patient and you need to allow that time distortion to take place. As long as the market doesn't displace against your idea, it's still valid. Eventually, we take out that previous cycle high. And what I need you to understand is that when we take out that previous cycle high, our eye is drawn towards that 930 opening price. It's a crucial reference point every single freaking day, so have it on your charts. The market reprices above that previous cycle high, trades into that 930 open price, and then immediately rejects it. And we see the market begin to slowly draw lower and just begin to reprice back into the price range of that downward candle based on the hourly chart. Now, what I want you to understand is that what I outlined during the latter part of the PM session was the following. I saw this cracking correlation on the highs here, meaning I saw that ES took out the previous cycle high, the launch cycle high, whilst NQ did not. Let's take a look. NQ created lower highs, as you can see. The reason why that to me was something I was not a fan of was because I did not have a clear read going into the remaining part of this afternoon session. When I then came back to the charts later when the market had already done its job, I saw that we found support inside the downward candle again and we began a buy program near that 2:45 to 3:15 p.m. macro. This was a pretty okay market maker buy model, but in my opinion, not the cleanest. If you look at this delivery, you can see how much back and forth going there is inside the smart money reversal, and you can see how shallow the retracements are that took place. But I need you to understand that this was also a market maker buy model. Now, what I want you guys to understand is that there are so many freaking opportunities every single week, and you only need a few of them. My focus is on the opportunities that make the most sense logically, that I can literally frame based on a higher time frame chart. If the higher time frame to me is not clear, I know I need to be cautious and I prefer to then actually just walk away like I did later during that afternoon session. I hope that this breakdown has been insightful to you. I hope that you have come to understand a bit more about TapTap, because that is something that is very powerful and I want you to investigate it more. This is one of those things that I need to be cautious about when it comes to sharing it, because it's a very advanced concept and you only should look at it as a point of interest for now. Later, we will discuss how TapTap can also be utilized as a draw liquidity. Main takeaways from this lecture are the following. I want you to investigate how time-based liquidity was utilized for both point of interest selection as draw liquidity selection. Secondly, I want you to investigate how a higher time frame point of interest was utilized on the lower time frames to confirm a smart money reversal being in. I want you to investigate thirdly how we did not have to take out this previous cycle low before repricing towards the upside, and that the displacement leg, which began at 11:30, was the algorithmic signature that was IBDA tipping in its hands, that it was likely going to be very bullish, and the moment that we displace above that 5-minute inversion fair gap above this CB was the confirmation that the low was in. Next step, investigate the balanced price range which I outlined. I want to wish you a very nice weekend and I look forward to catching up with you soon. Be safe. Hello there, I hope that you are doing well. Welcome to this new trades breakdown lecture. During this trades breakdown lecture, I will be discussing drawing lines and predicting the future. As many of you probably have already seen across my social media accounts, whether it be Twitter, YouTube or Telegram, this right here is my slogan. And the reason why this is my slogan is because this is exactly what I'm doing every single week on the markets. I draw lines and I predict the future. The reason why this is my slogan is due to the following. Within the trading space, there's a lot of information about you having to react to what the market is signaling to you. You have to react to whatever is occurring within price action. I am of the opinion, however, that you must be able to anticipate and predict what should happen in the delivery of price. Why am I of that opinion? Well, I believe that all financial markets are rigged, and that allows us to look at time and price from a completely different perspective than the majority of traders. During this lecture, I want to give some insight on how I'm able to draw lines and predict the future, because I want to share with you multiple trades which I have outlined taking place before they occurred, whether it be throughout, for example, my market reviews, or whether it be, for example, through market updates on the mentorship forum, etc. Here on the RE chart of Nasdaq, and the first trade which we're going to take a look at took place on Wednesday. On Wednesday, I had mentioned throughout the London session that I would be monitoring direction to this high right here. The reason why this high was important was due to the following. We saw the market expand towards the downside after we opened up for the week. We saw a retracement taking place higher, and then the market had one more push lower, meaning a lower low formed relative to this low. The moment that price displaces above the high which set that final drop lower, this high becomes a bullish breaker. Notice that we displaced through it with a very large imbalance. Notice as well that this high formed inside the CB. Pay attention to the bodies. The wick goes above the CB, but notice that the bodies formed inside the CB. You can extend the CB to the right. You can see a true inversion to value gap. Now, what I outlined throughout the London session was the following. I would be monitoring whether or not we would see a swing low formation take place around that level. And what you can see is that when we opened up for the New York morning session, we saw the market drop lower, create a higher low relative to this low which formed throughout London, but notice that Dow Jones took out the low. Therefore, the SMT detector is signaling SMT relative to the London session. That is session SMT, and that is signaling at a point of interest, whilst we are bullish on the higher time frames, that we should anticipate an expansion taking place for that particular session, in this case, New York morning session. What you can see is that the market expanded beautifully towards the upside, drawing towards the previous day high right here. Notice how slow the delivery on Tuesday was. Whenever delivery is so slow and the market is just grinding lower, that is a high resistance security run. Anticipate that when the reversal forms, that the move onward against that liquidity will be very quick and sudden. This is what I refer to as a low resistance security run. Notice that when we pay attention to the 5-minute chart of both Nasdaq and ES here, I would like to pay attention to why I waited for the 10:45 to 11:15 macro. I would like to pause the lecture for a moment and would like you to investigate in the market relationship. And I would like you to pay attention to when SMT formed throughout the New York morning session, which signals the next expansion leg. I hope that you are pausing the lecture because I'm going to walk you through what happened. What I would like to see is that here we have the SMT detector on the screen. And what I would like you to see is that the SMT detector signaled between 9:30, so the beginning of the regular trading hours, to 10 o'clock, no SMT between Nasdaq and ES. And the reason why this is important is due to the following. At 10 o'clock, what we see is that the market spikes up. What did I outline to you? Whenever there's a volatility injection as a result of manual intervention. Whenever there's such a quick spike up all of a sudden, where there's just one 1 minute candle just expanding higher and then dropping down significantly, so there's this very tall wick, what's happening is that after that high resistance will take place, time distortion. So that means price will be held inside of a range, consolidation will take place. And what ends consolidation? What ends consolidation is SMT. Notice that after 10 o'clock, we see a 30-minute cycle SMT be established right here on the lows. Notice that ES made a lower low, whilst Nasdaq is making a higher low. That is signaling to me that throughout the next macro from 10:45 to 11:15, price has to expand towards the upside. Why? Because who do you think is fulfilling their long orders in this area? Smart money with a lot of deep pockets. So they are buying Nasdaq. That is why it's being held inside of a tight range. High frequency trading algorithms are firing in their long orders around that midnight opening price and around the higher end of that new week opening gap, this green shaded box. Why? Because they know price will have to expand soon to draw towards engineered liquidity from the previous day. Therefore, the macro between 10:45 to 11:15 is anticipated to expand significantly. And that is what you see taking place. Beautiful low resistance liquidity run higher. And eventually throughout the PM session, something interesting occurred, which we'll take a look at in a bit. Here on the 1 minute chart of Nasdaq purely. And what I would like to see is that throughout the macro of 10:45 to 11:15, your eye should immediately go to this piece of price action right here, where you saw the market expand towards the downside, retrace higher, form this high, then have one more push lower, taking out sell-side liquidity resting below this low. Notice that the market then displaces quickly higher, and we see it trade above this candle's high. This right here is your bullish breaker, the last high before the final push lower. Notice that price never returned into that bullish breaker, and we see a breakaway gap get established. The market reprices above the previous 10-minute cycle high, and eventually we see the market distort time inside of that, consolidate, more longs are being filled before the market eventually expands towards the upside, drawing towards buy liquidity resting above this high. And this is that high which I'm referring to, where within one 1-minute candle, you see price quickly expand towards the upside, create a very large wick, and then come back lower. Whenever you see this taking place, and this is something for your notes, wait, be patient, wait until the next key time, because throughout the next key time, that is when the delivery will unfold, because you can see that price is simply going sideways right here. It's being held inside of a tight range, and only when the time is right, that is when price is going to expand. Now, when it comes to this breakaway gap formation, there's one thing which I would like you to understand, and that is inside of fractals. So what we will do is we're going to drop into the seconds time frame, the 15 seconds time frame, and we're going to be monitoring the delivery as it occurred in this area. Notice that here we're on the 15-second chart, and you can see that same fractal outlined, but then with more candles, of course, because within every 1-minute candle, there are 4 15-second candles. Notice that we see the market reprice above this high right here. Do you see how the next candle reprices back into the high, then expands higher? Notice that we see a BC get created inside of the red box of the previous 10-minute cycle high. And notice that the market is finding support inside of that multiple times before eventually expanding towards the upside. The reason why that 1-minute gap is allowed to be left open is because the price range is already balanced out in this area. If you do not understand balanced price ranges yet, I would highly suggest you to go on the mentorship platform and research and search for the topic of balanced price ranges, BPRs, because I've discussed this topic multiple times in the past and I've created in-depth lectures on the topic. And it is, in my opinion, the most crucial element to balanced price ranges. When we then pay attention to the afternoon session, however, what we can see is that the market expanded heavily towards the downside. We saw a PM reversal taking place. And unfortunately, myself, I wasn't behind the charts. I was out for dinner and I was looking at my phone and I was like, damn, that was one hell of a sell-off. And I wish I was at home behind the desk, but you know, that's reality, guys. Sometimes you're going to miss out on the most beautiful low resistance liquidity runs, textbook setups, and it is what it is. And the way that you counter that feeling of, oh, I should have been a part of this, I should have been there, I shouldn't have gone out for dinner, or whatever, those negative thoughts that might arise, the way you counter that is by understanding that there's always a new setup around the door, and you should view setups that you didn't participate in, but still played out according to your models, as the following. Look at it as more proof that your protocols are working. Look at it as more clarity, so to say, that behind the fact that you know what you're doing and the models which you trade based upon work. And when you start changing that internal dialogue like that, you will all of a sudden don't feel any regret, and you will also not feel like, oh, I should have done this, I should have done that. Stop with all of that negative thinking and just focus on doing that what you know to be the right thing. And you're human and you need to live your life. Don't think that you should just stay indoors and sit behind the charts all day. The reason why you're probably not basically performing as well as you think and know you can perform is because you're glued to the screens. Your performance will skyrocket the moment that you will start living your life more and don't go into the markets for a sense of dopamine. Instead, you just live your life, get real dopamine, spend quality time with your loved ones, with your friends, etc. Do fun things outside of the charts and simply come to the charts when you know there's a setup like going to take place. And if you took a phenomenal trade throughout the morning session, no one's going to blame you if you skip the afternoon session. You don't got anything to prove, guys. Like, literally, don't think that simply because the market is moving up and down and other people might be trading, that you should also be trading. Take surgical strikes. Take your shot, and when it pans out, when it's done, stop, come back later, and see whether or not there's anything else, and else call it a day. Learn to be content with enough, guys. But what I would like you to do is I would like you to pause the lecture for a moment again, and I would like you to think about the reasons why price expanded towards the downside so heavily throughout the afternoon session, because I'm going to walk you through this. Even though I didn't trade it, I still want to show to you exactly why this was a perfect setup. And to see some of you having taken this, I saw some messages on the mentorship forum, it made me smile, because this is a typical juicy mentorship setup. Please pause the lecture, because I'm now going to add my lipstick to the charts. Here you can see my lipstick on the charts, and what I would like to see first of all is that the AM session expanded towards the upside, taking out previous day high bias liquidity, that high resistance liquidity right here, and we then saw the market create SMT between Nasdaq ES, where you can see that Nasdaq created higher highs whilst ES created lower highs. Notice that Nasdaq repriced into Monday's high this week right here, and do you see how the market rejected that? That right there shows you that this is a bearish rejection block. The SMT between Nasdaq and ES is signaling to you that price might reverse soon. Because imagine that you're a retail mind trader. Imagine that you have no clue about time and price, and all that you can see is candles going up and down, sideways, and whatever, right? And you see these big green candles. The natural emotion which gets awakened is, oh, the market is very bullish. I should be buying now. I should be long. I'm missing out. Man, get me in a long position. And back in the days, people were calling up the brokers and they were saying like, get me in Nasdaq longs now, blah, 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 right? But that's the emotion which gets awakened when the market is expanding so heavily towards the upside. Understanding that right there and understanding time, which is signaling to you that we might see the daily delivery profile of AM expansion, PM reversal, shows to you that if we're going to see the signs of reversal taking place right here, that we're likely going to see PM distribute lower heavily. Notice how quick this 1 PM RE candle expanded lower. Beautiful lower resistance liquidity run against all of the buyers from the morning session, because who's making money all throughout the day? Buyers. So what liquidity has been engineered? Sell side liquidity. Beautiful expansion lower, drawing towards the Monday low, even as you can see. Now, when we pay attention to the lower time frames then and we compare Nasdaq and ES, what I would like to see is that on the left you can see Nasdaq and on the right you can see ES. Notice that between the 1245 to 115 macro, we saw Nasdaq create a higher high right here after 1250, whilst ES created relatively equal highs, meaning lower highs. That means that there's SMT on the lower time frames as well. Notice that this SMT gets followed by displacement lower. So if we purely pay attention to Nasdaq then, what I would like you to see is that the moment that this SMT unfolded at 1250 right here, notice that we saw the market expand lower, and notice that we saw the market displace below the low, which set up the final push higher. Notice that this low functions as resistance on price, and notice that the market traded below the rejection block price level from Monday. The market displaces lower, and 1 PM opens up. 1 PM opens up, initially has this upclose candle higher, and notice that the market then displaces lower, big time candles. This upclose candle is a real bearish order block. Price will seek to revisit that order block so that smart money can sell more. Notice that the market displaces below these lows, which formed inside this BC on the left side of the curve, with a CB. So what is this? Juicy market structure shift pattern. Market retraces into that CB, into that inversion for value gap, into that bearish order block, into the 1 PM open, and expands lower heavily. And do you see how quickly the market expanded lower? There was one more displacement leg followed by a retracement right here, where you see IOFET, institutional order flow, entry drill taking place, and the market then just ripped towards the downside. Why was this IOFET? Pay attention to the left side of the curve. Beautiful expansion lower, and you can clearly see a market make a sell model with an original consolidation right here, and this was that mark of 10.45 to 11.15, where I bought off throughout the morning session. So what you can see is very clearly buy side of the curve, sell side of the curve. Buy side of the curve rather slow with a lot of chop, especially throughout the lunch, but then the second PM cycle opens up and immediately just distributes lower. Beautiful lower resistance liquidity run, and this is a textbook setup if you're interested in the afternoon session. So definitely worth investigating, and that's why I wanted to bring it up throughout this review as well. But what's important to note, to bring it back to the topic of today's lecture, is that you can see on the RE chart already what's likely going to happen throughout the session. Those are the high probability trade setups. The setups which you just are justifying based upon a 1 minute fractal or 15-second fractal are not high probability trading setup, guys. The high probability trading setups get justified based upon the higher time frame, where you can clearly see from the higher time frame what's likely going to happen next within the delivery of price. And those are the types of setups I'm teaching you to focus on. Everything else is noise. Everything else is a distraction. Literally zoom out and make sure that you see it coming. And when you see it coming in advance, that is when you know, okay, price should do this XYZ. And when XYZ delivers, there's no ambiguity about it. There's no doubt about it. You're not going to be hesitating. You're simply going to see the opportunity pass by and you're going to take your shot when you know that the prey is in sight. That's what the sniper does. Good preparation, and when the prey is in sight, the shot gets taken. Now, when we pay attention to another trade example, what I would like to see is that this trade took place on Thursday. On Thursday, throughout my daily review, I had outlined to you that I was anticipating Nasdaq to form a swing high in this area right here. I was anchoring it to multiple imbalances, even more to the left side of the curve, but for the sake of simplicity and making sure that I'm not overcomplicating things for you throughout this lecture, I first of all want you to pay attention to this BC. Why was this BC important? Because this was the same BC we were paying attention to on Wednesday. If you remember, this BC was the one which displays through that high, setting up that market structure shift pattern. The fact that it did not function as support on price, it did initially, but eventually failed to do so, tells me that I'm able to utilize this BC in the future as a point of interest for a market maker sell model. After Wednesday's expansion, what we saw taking place was that throughout Asia and London, the market just slowly grinded higher. Do you see how it was just chopping around, consolidating? What that's already signaling to me is that we're likely going to manipulate higher to distribute lower. Why? Because what retail is being trapped into believing right here is that we have clear support right here. They can draw a clear trend line towards the upside, signaling, hey, we're in a buy program, we're bullish, we're looking for higher prices, etc., right? But I look at this as one thing, the engineering of sell side. From the midnight open, price did one thing, and that was run up higher slowly. London high gets established, and what you see taking place at 7 a.m., this downward candle, is that New York, which opens at 7 a.m., as I taught you within the 90-minute cycles, New York opens high, takes out the London session high, comes back into the algorithmic reference point of this old BC, and immediately slams towards the downside, drawing towards the previous day low. And what you see taking place from the previous day low is that 8 o'clock opens low and expands back towards the upside. Guys, this is what I mean. There are so many trading opportunities. Like, I saw a lot of you also take the buy afterwards, and it was beautiful. And this is something which I've been telling you for a long period of time now, is that where some exit, others entered. Meaning, I exit at the previous day low. That was the sell program completed. The highest probability trade for the whole day was done. Why was this the highest probability trade? Well, this was the trade I had outlined hours in advance throughout my market review throughout the London session. So I literally outlined the whole delivery throughout my market review for the New York morning session. So do you understand that when that move is done, I'm not interested in anything else? I'm not going to be looking at the markets. I don't care, guys. When I make my money, I'm done. And it's the mindset that, in my opinion, you must adapt, because else what will happen is that you're going to fall into the trap of what the majority of traders fall into, where they're never content with enough. And it's a toxic culture that unfortunately gets established nowadays by prop firms, because it is basically, they have rules in play that force you to do things. They give you that feeling of you should be doing something today. You should be, just pushing it. Or that's also what social media invites, right? You should be going out here and trying to, show off to the world how good you are. And if you fall into the trap of believing that, what's going to happen is that you're never going to be content with enough. And I'm teaching you not only how to draw lines and predict the future, and I'm not telling you to go out here and trade based upon these concepts, by the way. Let's make that very clear. I'm simply outlining to you what I did within the markets, and I'm explaining the rationale behind it. But whenever you go out here and you decide on your own that you're going to trade based on these concepts within a demo account, I'm never going to tell you to trade live, but if you decide to go out here and trade based upon these concepts, be content. Learn to be content with enough. Over time, you can increase not the trade frequency, but the amount of risk behind those trades which you already taken, which you knew were panning out. I think that's one of the biggest mistakes that a lot of new traders make. That they have a system that works, but all of a sudden they feel like they should be doing more. They should be pushing it harder. They can't accept that it's really this straightforward. Well, it is. It literally is this straightforward. It's not complicated. It's simple, yes? But in order for you to stick to that simple system, which I'm outlining to you here, that is where discipline comes in. And you don't realize how powerful discipline is and how important it is until you fall into those traps that the majority of traders make. Everyone has done it, and that's okay, as long as you learn a lesson from it. Don't fall into the trap of simply taking trades because you want to take trades or you want to do something. That comes back to what I outlined prior throughout this lecture. Make sure that you have real sources of dopamine in your life. Real sources of fun, where you feel a sense of fulfillment. I don't get my fulfillment when I'm trading. It's that simple. The only thing that gives me fulfillment, yes, is when I make out my game plan and execute with perfection. That's it. I don't care about the money which is being made. It's a byproduct of me doing that what is right. And that's the focus. That's the mindset. And I hope that you're understanding that I'm using my emotions throughout this lecture to make that light bulb moment click for you. Because the messages which I'm receiving from time to time are like, I see my old self in some of the messages which I receive. And I absolutely love to see that because I know how I overcame those mental issues which I was dealing with. I also dealt with all of those, mental struggles that you're going through now. But the way I overcame them is by simply objectifying my whole approach. Why do you think this mentorship is called Time and Price? Because I show up when the time is right at the right price. And when my trade is done, it's done. And I don't care about anything else. And that's the mindset which I want you to learn to adopt. And I know that some of you are not interested in all of this ranting. You're probably already, I know that some people already clicked off. And it's funny because on the platform, we can actually see how far each, student goes. And there are some people who just click off 1/3 in the lecture. Some people just watch it halfway and then they're like, okay, then he goes on the rabbit trail, bye-bye. And others actually complete the lectures. But let me tell you something. The people that actually are still watching at this stage, you have what it takes. All that you need to do is submit to a little bit more time, fine-tune some things here and there, and eventually all the light bulb moments will take place. And that is something which you need to have full faith in, because you need to have to believe before the results are actually there. And the moment that you have to believe, watch it become super straightforward and watch it to do. Do that what is right every single freaking day. And if you commit to that, watch the magic happen. Here on the 1 minute chart of Nasdaq, and what I would like to see is that when we pay attention to the 7 o'clock open, which is right here, what you can see is that the market expanded towards the upside. Notice that an imbalance formed right here at the beginning of 7 o'clock. Notice that eventually we saw the market reverse after we saw S&T be established between Nasdaq and TS relative to that London session high. We see the market reprice towards the downside heavily at exactly 710. Notice that multiple CBs formed right here, and notice that the market traded into the lower fair value gap which formed right here. We form a low there and the market retraces higher. I am however not willing to short just yet, and the reason being is due to the following. What I would like you to understand is that what I was waiting for was for Nasdaq and DS to displace in tandem towards the downside. This is a key insight which I'm sharing with you, where you can pay attention to Nasdaq and ES displacing towards the downside. If you investigate my execution lecture, or execution video, what you can see is that I'm clearly waiting for one thing, and that's for S&T on the downside, on the lows, to be invalidated. Because that is signaling to me that both Nasdaq and ES are moving in tandem with each other when it comes to the sell program. And that's something I actively look for. And that's a gem which the majority of people that didn't listen to my rant probably will never pick up on. So what you can see is that we reprice through this low, which formed inside of that BC. And notice that a very tiny inefficiency forms inside of the price range of this old BC right here. See the market retrace into that BC at exactly 730. New 30-minute cycle opens up. And we open a high into this small little inefficiency. Form 3-minute cycle S&T. And the market begins to expand towards the downside. Notice that the market utilizes this inefficiency, the first value gap at 7 AM, as an inversion value gap. And the market repriced lower heavily. Notice that Nasdaq repriced below the previous 90-minute cycle's low. This low I'm extending to the right because, as I've told you within the time cycles theory, is that whenever we displace below our previous cycle low and we're bearish, we're looking for the previous cycle low to function as resistance on price. What you can see is that price retraces into the previous 90-minute cycle low, spends some time there, and eventually the market begins to expand towards the downside heavily, reaching the previous day low. Now, when it comes to the delivery in front of you, there's one question which was asked on the mentorship forum, and that was the following. Zeus, why are you trading outside of the times of interest as you've taught them for the morning session? Why are you trading around 7 o'clock? Because the opportunity which I had framed was already being presented at the beginning of the New York morning session. So that means I'm using the macro from 6:45 a.m. to 7:15 a.m. to look for the signatures as I've taught them to you as the reversal sequence. Yep. My focus is on recognizing swing points. And whenever I see big time cycle S&T, that's the first sign that a swing point is likely going to be presented. And therefore, I was interested in the beginning of the New York morning session because that was the cycle which would likely distribute towards my objective. With that being said, this lecture comes to an end. I hope that you found it insightful. I hope that my rants didn't throw you off or something. I hope that you were able to gain some value from it. I want to thank you for watching it all the way to the end. I want to wish you good luck in your studies, and I look forward to speaking to you soon again. Have a blessed day. Be safe. Hello there, I hope that you are doing well. During today's lecture I will discuss navigating No News Monday, trading outside of the regular trading hours. Here we can see the market updates post which was sent during the London session of this day. What I want you to see is that I outlined that we saw a big new week opening gap get created when the Sunday open took place. What I want you to see is that the market retraced into that new week opening gap at 3 am and we then formed a low right here. We then saw the market trade away from it, and that is when I sent my message. I shared that as long as Nasdaq would not displace below this new week opening gap, was anticipating higher prices. If Nasdaq would displace below the new week opening gap, I would anticipate lower prices. Notice that this new week opening gap displaced through these two blue lines right here, which represent the crucial CB which I outlined during my reviews of this time. Here we can see the post which followed afterwards. I shared with you that Nasdaq was now repriced into a higher CB right here. Notice that the new week opening gap was utilized to reprice towards the upside and I participated in this expansion towards the upside, drawing towards this CB. That is what I will break down during today's lecture. I will share with you how I was able to anticipate that we would expand ahead of 9:30 on the No News Monday. What I want you to see is that in my market updates post, I shared with you that if they would displace through the hourly CB that price just reached, this CB right here, and use it as support, AM3, meaning the third morning cycle, might continue bullish order flow, and AM delivery profile #3 could be in play. And if you do not understand what this profile is, I kindly suggest you to pay attention to the delivery profiles lectures. But this is a trending morning session profile. You can see that I said wait until 10 o'clock to confirm this, meaning I outlined that we had to wait until the third morning cycle would begin before we could confirm whether or not this continuation profile was in play. Here we can see how the delivery afterwards took place. What I want you to see is that Nasdaq was repriced into that higher CB, and we saw the market wick above it right here significantly. Notice, however, that the bodies kept on closing below that hourly CB. Eventually, we even saw the market reprice towards the lower end of that new week opening gap, meaning we did not see a continuation morning session profile. And that is what I want you to understand. You wait until the third cycle to open up before you can say today is going to be a trending day where we can see a continuation morning session taking place. Why? Because we reached a key range of this RECB right here. ES reached key buy-side liquidity objectives. We reached the key level. What level? Notice that price is trading around the 21,000 price level. If you know the advanced price ranges, you're smiling. And secondly, we had relatively equal lows engineered during AM1 and AM2. And those will be obvious when we pay attention to the lower time frames. Now moving forward on Nasdaq, I do not have a clear one-sided idea just yet. As long as we utilize this new week opening gap as support on price, I would favor a run towards the upside. However, if we displace below it and utilize those resistance on price, then we're likely going to draw towards all of the sell-side liquidity engineered below these lows. Right now, 50-50. If we displace above this CB, the buy program is confirmed and I anticipate that we're going to draw towards these highs. Now, if you pay attention to both Nasdaq as a yes then, what I want you to see is that on Nasdaq, we have the midnight opening price right here. Notice that at 3 o'clock, we traded into that new week opening gap right here, and we had this long wick. What I want you to see is that I have this wick, its respective range, extended to the right. What I want you to see is that the market repriced higher, and then when New York began, we saw the market drop lower into exactly 50% CE of this long wick right here. I need you to understand that this wick is a gap. Therefore, we pay attention to the reaction to 50% of that wick. Notice how the market forms a low at exactly that price level. And notice how the bodies keep on closing at the open of this 3 o'clock candle. That right there is a signature that confirms to me that we're likely going to see an expansion higher soon. Notice as well that Nasdaq created a lower low whilst ES created a higher low. That was SMT. We saw ESB reprice towards the upside, and when it reached the 6035 price level, I shared with you on the market updates channel. Now is a good time to partial on ES, and we just went a few handles above it before eventually turning around and dropping towards the lower end of that current day range, and even creating a new day low in close proximity to that new week opening gap. Here on the 1 minute chart of Nasdaq. And before we dive into the delivery right here, I first want to give you a general rule of thumb, which I want you to journal and which I want you to investigate. If we have no high impact news for a particular day, you know that our focus is on the 9:30 open to provide us with a volatility injection. Here comes the thing. In a trending market environment, when we see S&P present itself in advance of the 9:30 open after 7 o'clock, relative to a low which formed during the London session, we can anticipate that we're going to see a pre-market expansion. If you did not understand what I just said, I highly suggest you to skip the lecture a few seconds and listen to the words which I'm using word by word. This S&P can be seen on the hourly chart on the M15 chart. As you know, which I outlined, there was S&P relative to a London cycle low between Nasdaq SES. What I was waiting for was how A30 would open up. What we can see is that A30 opened up, dropped lower, formed relatively equal lows relative to the 7 to 830 low. And when we then saw the market trade above the 830 open, I went wrong. Why? Because I'm anticipating that we're going to see the market draw towards buy-side liquidity resting above the London high. And I'm anticipating us to draw towards that hourly CB right here. Notice that when I entered, the market immediately began expanding towards the upside, and we saw a beautiful low resistance liquidity run taking place. Now, what I will do is I will highlight a very specific upclose candle. The upclose candle which I'm highlighting formed right here. The reason why I'm highlighting this upclose candle is because I want you to understand that this upclose candle set up the run towards the downside. But notice, however, that it's not the absolute high. If we zoom into the 15-second time frame, I want you to investigate the delivery which took place right here inside of this upclose candle. So the red box will continue to be present on the 50-second chart. As you can see, the market expanded higher from this upclose candle after they utilized it as support on price. And we saw the market draw towards that hourly CB and draw above that 21,000 price level. Notice that we then opened up from 9:30 and we suddenly dropped towards the downside, trading back into that same specific upclose candle. This is where my trailed stop unfortunately got hit before the market had one more push higher. To be fair, I didn't really care, I had one contract left and I already got paid well, so it is what it is, right? We traded below the midnight opening price and we then saw that another leg higher taking place. There were people who tried to short this CB right here, which formed at 9:30. What I want you to understand is that we had a bullish bias for the day. Outlined on the form, I'm anticipating higher prices for the upcoming day as long as we do not displace below the new week opening gap. When we then see 9:30 open up and go lower, you must look at that as manipulation towards the downside before distribution can take place. Therefore, we never try to short the move which originates from exactly the 9:30 open. We always wait. Eventually, a short presented itself during the 9:45 to 10:15 macro, but we never try to short when our higher time frame analysis is bullish shortly after the 9:30 open. That's again something for your notes. If you pay attention to the 50-second time frame, what I want you to see is that the red box which I had outlined on the 1 minute chart right here is visible on the 50-second chart as well. What I want you to see is that we repriced higher inside of this leg and we traded into this CB on the 50-second chart. This CB displaced through this BC right here. And notice that this formed inside of this CB right here, and inside of this BC right here, and inside of this very small CB, and inside of this larger BC right here. What I'm showcasing to you is that there were a lot of imbalances which formed in each other. And I have outlined in the past that when there are a lot of imbalances which form in each other, you can anticipate that it's a very strong support range, so to say. In this case, because we're bullish. Therefore, when we see price showcase to us that the time is right for an expansion towards the upside to take place, we can utilize that same range to go long. From 8:30, we saw the market open low and notice that we displaced through the CBs which formed during this drop towards the downside. I have the lower one annotated right here. Notice how we utilized it as support on price because a BC also formed inside of it. This right here is now a balanced price range. The market creates a new BC and you can see that every single discount array which is getting created is functioning as support on price. That right there shows to you that the underlying order flow is bullish. What I was waiting for price to show to me that we would displace above the 8:30 open. When I saw the displacement above the 8:30 open, I went long inside of this red box right here, and my stop loss was a few points below that. Meaning I was allowing for the market to trade into the lower end of this red box before expanding higher. Why? Should price ever displace below the 8:30 open again? I want you to think about that. No. Why not? Because it already did its job manipulating lower inside of this area. Smart money is positioning themselves long below the open or in close proximity to it. That right there is 101 premium and discount, as I've taught it within the model series. We try to position ourselves long below an open or in close proximity to it. Eventually we see the market expand higher and every single discount array that forms is a beautiful long opportunity. Meaning this BC, IFT is taking place, institutional order flow, entry drill. We see the market find support inside of the down close candle which traded into that BC right here. We see the market find support inside of this BC which formed just above the midnight opening price. Same concept with regards to premium and discount applies to the midnight opening price as it does to the 8:30 open. And we see the market eventually expand higher beautifully. And it is in a rush to draw towards that 21,000 big figure and eventually that RECB. And as you can see, I've highlighted right here how big this move was. This move was a move of around 57.25 points within a relatively short period of time. It was less than 15 minutes or so. And what I want you to understand is that when we are looking at the markets, there are plenty of runs that provide these type of volatility injections. Meaning, this is the type of volatility which we are looking for. And if you can take a few setups like this a week, how good would that be? What would that do for you? And you need to start setting certain targets for yourself, because if you go out here every single day with no targets in mind and you're just going to say, I'm going to trade every setup there is, every single opportunity there is, and I'm just going to, shoot from the hip. I don't care how much I'm risking. I don't care how much I'm making. All I care about is trading the setups, right? If you think that way, you will find out how bad that is. You need to set a target for yourself. You need to set an objective for yourself. And you need to hold yourself accountable every week, whether or not you're achieving that objective, week in, week out. And the way you achieve the objective is by having very strict rules for yourself and sticking to them. Meaning, if you take one phenomenal trade, be done with that. Be content. Don't try to do more. Don't try to go out there and try to show off. Because you need to understand that at the end of the day, it doesn't matter what anyone else thinks. It doesn't matter what the crowd on social media thinks. It doesn't matter what other students on the forum think. What matters is that you're able to consistently take money out of the markets. And that right there is done by limiting yourself and allowing yourself to flourish by doing the least. What matters is that you're able to look in the mirror at the end of the day and that you're grateful for how you performed. And I know that you might be looking at days like these where you're like, how come? How come that you see this expansion higher taking place already during the London session? Guys, I have investigated so much. I've spent countless hours in front of the charts investigating. It's not like I woke up one day and I was like, now I see IPTA. This is what's going to do next. This is what's going to do next. No, I had to put in the work just like you are putting in the work now. So I hope that you take inspiration of the fact that I'm calling these moves before they occur to you. And that is why I suggest everyone to join the mentorship forum. I know that some of you are still not on the forum, and I understand that you are here to learn just from me and you don't care about the messages from other students. But just try and filter everything out and just focus on the market updates channel, because that right there is truly valuable to see these moves be called before they occur week in, week out, just like I do within the reviews. So with that being said, this lecture comes to an end. I hope that you found it insightful, and I look forward to catching up with you in the next one. One more thing before I end this lecture, before I forget, most important topic. It's already pretty late whilst I'm recording this lecture. It has also been a bit of a long week, so I need to rest up properly. But the reason why I said wait for 10 o'clock was not only due to the fact that we reached that RECB, but also due to the fact that we left these relatively equal lows intact. And that right there was a sign that this might be engineered liquidity for a later point in time. Therefore, we had to see how they would utilize the 9:30 open and how they would utilize the 10 o'clock open. So with that being said, this lecture truly comes to an end. I want to wish you all the best in your studies, and I look forward to catching up with you in the next one. Be safe. Hello there. I hope that you're doing well. During today's lecture, I'm going to break down 2 trades which I took the past few days during the walnut session. I will explain imbalanced price ranges to you and AMD fractals. The first trade which we're going to take a look at took place on Tuesday. During the Tuesday review, I shared with you that this imbalance right here was the imbalance to monitor to gauge the order flow for that day. If we would displace below this imbalance, the previous week's low would be the draw liquidity. However, when you see this drop towards the downside, you might be scared. You might be looking at this and you might think to yourself, oh no, the market is very bearish. How could you ever look for a long opportunity? What I want you to understand is that this down close candle, which is the low of that bullish value gap, as you can see here, this down close candle with respective high, yes, we trade into that, find support there, and then buy side delivery takes place inside of this wick. You need to understand that the fact that we formed a low here for this candle, then repriced higher going into the close of this candle on the lower time frames is a buy program which is unfolding. If we pay attention to the delivery which took place afterwards, we can see that the market in fact fell over and dropped towards that previous week's low. But what I need you to understand is that even though we expanded towards the downside, there were still buying opportunities on the lower time frames. Meaning, I was buying against the higher time frame order flow, which was bearish for that day, but I was buying the retracement into a key price level, into an imbalanced price range. Because you need to understand that the market will not turn around until it has rebalanced that old imbalanced price range. I have annotated this down close candle and extending that to the right. I want you to see how this repricing took place from that down close candle as high towards the upside.
You're my first love. first love. You're my first love.
Towards the upside. If you pay attention to the 1 minute chart then, what I want you to see is that during the first 90-minute cycle of the London session, you initially saw the market consolidate right here. We then opened up for the second 30-minute cycle, repriced higher, taking out buyers at liquidity resting above these relative weaker highs. Then a sell program unfolded. Notice that we formed this low here. Then a new 30-minute cycle opens up. This is the final one for this first 90-minute cycle. And the market expands towards the downside. Notice how quickly it reprices lower. This right here is a very sudden drop, as you can see. Notice how many imbalances formed during this leg lower. What I want you to do is I want you to pay attention to where my exits were on this trade. And I then want you to investigate why I took my exits where I took them. I hope that you have paused the lecture. What I want to bring your guys' attention to is the following. I want you to monitor how we formed this low during that second 30-minute cycle, displaced through it with this CB, without offering any buy side back into this low. That right there is an imbalanced price range. Therefore, you need to understand is that this low has the potential of functioning as resistance on price in the future. The reason why is because of the fact that we displaced through it with this CB, and therefore you know that this is a very important imbalance. True support turns resistance takes place when there is an imbalance which displaces through the time-based low. Yep. The previous cycle low of this 30-minute cycle got displaced through with this CB. What I want you to understand is that we offer sell side, buy side, sell side. So I like to use this seesaw analogy, as you know. And if you would envision a seesaw now, what you would see is that you would see 2 times sell side delivery and only once buy side delivery inside of this price range. Therefore, you know that buy side is missing and buy side has to be delivered back into that very specific level. And that is why I took my exits where I took them. Notice that this repricing higher took place from the downcross candle from the hourly chart during the 345 to 415 macro. This is where the majority of the position was taken off, and then the remainder eventually got stopped right here. And this is where I believe some of you actually went short, and that's the beauty of this week, where you see a lot of ping pong taking place since we're just range bound. You can see that opportunities are presenting themselves on both the buy side as the sell side of the curve over and over again. If you pay attention to intermarket relationship then, what I want you to see is that on the left I have the Nasdaq chart, on the right I have the Dow Jones chart. You might be wondering, the Dow, why are you looking at the Dow? Well, I'm looking at the Dow when there's no SMT with ES, meaning when everything is aligned and all I'm looking for is for that confirmation of a smart money reversal taking place. I pay attention to, okay, first ES. If there's no SMT with ES, I check the Dow. If there's no SMT with the Dow, I take a look at the dollar. And that is how I basically move within the SMT sequence. ES first, Dow second, dollar third. What I want to see is that Nasdaq formed the low at 3:44 a.m. whilst the Dow did at 3:42 a.m. That right there is SMT. When I see this upclose candle right here taking place, that to me is a sign, yes, we're going to expand. I see the market reach that drawing liquidity, and at what time does Nasdaq form the high here? At 2 minutes past 4 a.m. At what time does the Dow Jones form its high? 3 minutes past 4. So again, that's SMT. Market begins to roll over and eventually draws lower. What I need you to understand is that even though these SMTs are very short when it comes to how long they took in order to form, you need to understand that when a key level gets reached, you can still look at these cracking correlations as SMTs and as warning signs therefore. Here we're on the 15-second chart, and what I want to see is that the market expanded towards the downside. It quickly offered sell side into that orange box, which is the downcross candle from the RE chart. The market consolidates for a while, and we then see the market form this upclose candle right here, this high. The market drops lower, taking out the sell side liquidity resting below this low, and we then see the market form a low with that SMT, and then we begin to see it trade above that upclose candle. At what time did I go long? I went long inside of this upclose candle because I know that this upclose candle will function as support and price during the upcoming macro. Notice how at 345 right here, they opened, dropped lower into that price range before expanding higher and delivering a beautiful buy program. What I want to see then is that we form this BC right here, market retraces into that BC, forms a low before expanding towards the draw and liquidity. I was content with the fill right here. I was monitoring whether or not the retracement would take place into this BC, but looking now at it in hindsight, you can see that we utilized this CB as an inversion to value gap, and therefore I could have pyramided inside of that inversion to value gap. But you know, you can't get the perfect pyramiding opportunities always. Sometimes you just need to be content with the position size that you're able to get on and be done with that. This was a very nice trade and it offered around 64.5 points within only a matter of, I believe it was like 15 minutes or something along those lines. And that is what I want you to understand. This is something I've been sharing this week, is that there are many opportunities that provide like 60 points or more. And you only need a few of those a week in order for you to have a great week. So don't think that you need to be out here trading every single day, trading every single session from Asia to New York PM. No, just be content with the opportunities that you're able to frame and that you literally see in advance. You need to understand, I see this retracement taking place in advance of it actually occurring. When the market is dropping like this, I know that at one moment in time, the tide will turn. And that is what I'm waiting for. And that is the prey which I see, and I'm waiting for it to come into my sight.
So I stepped on in and showed her a good time. I gave her what she needed while you couldn't provide. I'm sorry, I'm not sorry. I'll go back again tonight. I kissed your girlfriend this
Thank you to all people who listen to me. Thank you to all people who listen to me. It was Revo.
The next golden trade which I took place on Wednesday. In advance of Wednesday's trading session, I shared with you on the mentorship forum that was monitoring the reaction to this CB right here. This CB was highlighted and I shared with you that as long as Nasdaq does not trade above this candle's high, I would anticipate that we might see a sell program unfold. The reason why was due to the fact that ES already traded above this high, and this high has been the invalidation level for a potential sell program on Nasdaq all throughout this delivery towards the downside. I shared with you that if this high would get this way through, then I would have to change my thought process. But because only ES took out the high whilst Nasdaq didn't and was instead rejecting this CB over and over again, I shared with you that I was anticipating Nasdaq to draw towards this specific hourly BC which formed the day prior. Now what I want you to see is that during the London cycle, we consolidated inside of that CB. Eventually, we dropped lower. What I want you to understand is that this RUCB could have been utilized for multiple shorting opportunities during both the London session right here as during New York. Pay attention to the 1 minute chart then. What I want you to see is that, oh yeah, and this is a question I get asked a lot. From what time does the London cycle begin? The London cycle begins at 2:30 a.m., meaning everything in advance of 2:30 a.m. is what I refer to as the Asia high or Asia low. These relatively equal highs are therefore the Asia highs. The fact that we engineered liquidity during that first 30-minute cycle between 2:30 to 3 a.m. in advance of those highs is to me a very good signature, because that showcases to me that they're giving away the idea of relatively equal highs being in play. Therefore, strong resistance has been found, so to say, and we shouldn't go above that. That's the thought process of a lot of retail-minded traders. What do you see? Between 3 to 3:30 a.m., you see the market run up higher, taking out the buy-side liquidity of that previous 30-minute cycle high, taking out these relatively equal highs, and we then see the market form a high 22 minutes after 3 a.m. What I want you to do is I want you to go into your own ES charts and I want you to investigate at what time ES formed a high. We then see the market displays lower and it trades below this sequence of opclose candles. That's already a change in the state of delivery. This sequence of opclose candles is your bearish order block. What I want you to see is that we also form a CB right here, and during the retracement into that CB I went short. Notice that this candle has a very long wick and you can extend that wick towards the right, and that should function as resistance on price as well. Market begins to expand towards the downside, and notice that we displace below this bullish fair value gap on the left side of the curve. Therefore, we anticipate this to be an inversion fair value gap now. Market retraces multiple times into that inversion fair value gap, first retracement right here, and it then expands lower. Notice that it stops right in advance of the midnight opening price, right in advance of the sell side liquidity engineered during that first 30-minute cycle. See the market retrace once more in this inversion fair value gap. This is where you can see me type out in my recording. Now it is its final chance. If it doesn't turn around here, it's likely going to draw towards my stop and take me out around break even. We see a high form perfectly inside that inversion fair value gap, and then we expand towards the downside, trading below the midnight opening price and taking out the sell side liquidity, resting below this low right here. Now what I want you to do is I want you to investigate the AMD fractal, which presents itself through the lens of the 30-minute cycles. Meaning, I want you to see that this is one market maker sell model which was completed in 90 minutes. Original consolidation between 2:30 to 3 a.m. 3 to 3:30 a.m. forms the high. This is your manipulation cycle. And 3:30 to 4 is distribution, drawing towards the low of that original consolidation, which formed between 2:30 to 3 a.m. Now you might be looking at this and you might be like, where's the consolidation? You need to understand that the consolidation within a market maker sell model doesn't always have to be a literal consolidation. It can also be a time-based liquidity pool. We see the market displays through that level with a CB right in advance of the end of that distribution cycle, and a new 90-minute cycle opens up. It initially drops lower before it reprices higher, trading above this CB. The moment I saw this CB function as an inversion fair value gap on price, and price displaced higher, I took again partials, and that was the idea done. Eventually you can see that the market utilized that inversion fair value gap again as resistance on price, but to me I didn't want to sit through all of that chop that took place. I wanted to be in and out of the marketplace, and that was the idea done. With that, this lecture comes to an end. I hope that you found it insightful, and I hope that this lecture gave you some insight on how you can look at the London session moving forward. Be safe. You're doing well. Welcome to this new day review of the 22nd of April 2025. I hope that you had a nice Monday yesterday, because man oh man, there were beautiful trading opportunities yesterday, even though it was the day after Easter. I outlined yesterday that I was looking for potentially long opportunities as long as an SMT relative to the previous week's low remained intact. This provided buying opportunities going into the end of London and the beginning of the New York morning session. This SMT, however, got invalidated later, and then I outlined at around 9:40 on the mentorship forum that I was looking for the markets to draw towards sales liquidity, resting below the Thursday low of the 10th of April. If you pay attention to the delivery which occurred, you can see that the beautiful expansion in lower occurred throughout the morning session and the markets repriced lower. Both Nasdaq SES took out the sales liquidity pool of the Thursday low right here, and we then saw the market eventually reverse throughout the final hours of the PM session. What I will be monitoring going into today is the following. What I will be monitoring is the reaction to the previous week's low right here, because as you can see we have opened high today and we saw the market reprice into the previous week's low. Notice that I've also annotated this upclose candle right here. I will be monitoring this upclose candle going into today, meaning the reaction to this upclose candle will tell me the story for the upcoming days. As outlined prior, we have major earnings this week, such as Tesla earnings and Google earnings. Tesla earnings will be today post-market, so be mindful of that if you're going to look at the afternoon session, because if the signs are present of high resistance taking place, be cautious, because then they're engineering liquidity in advance of those Tesla earnings, and on Thursday we have those Google earnings coming out. But this upclose candle will be important to monitor. The reason why this upclose candle will be important to monitor is due to the following. When we pay attention to the fractal, which I'm showing to you right now, you can see that we formed a low right here. We then formed this expansion higher, and we formed this high. We then had this sudden drop lower, taking out this low, and we then displaced above this upclose candle with this very large inefficiency. Therefore, this is a bullish breaker fractal. This bullish breaker functioned as support on price on Thursday right here and provided buying opportunities, just like it provided buying opportunities on Wednesday last week. However, here comes the thing. If we displace below a bullish breaker, we can monitor whether or not that bullish breaker is going to function as a resistance on price. We're going to treat it as an inverted breaker then. However, if we displace back above this price range of this upclose candle, begin to utilize that as support on price, from that moment in time, I would anticipate that we're likely going to see the market reprice towards buyers liquidity. When you pay attention to the repricing lower which occurred, you can see that there's a lot of trend line liquidity which has been engineered throughout this drop towards the downside. Now, what will confirm to me that we're going to see a low resistance liquidity run towards the upside is the moment that we see Nasdaq not only displace above this upclose candle and begin to utilize it as support on price again, but also when we see Nasdaq displace above this weekly open right here, and specifically the new week opening gap. The moment that Nasdaq displaces above this new week opening gap, use that as support on price. I'll be looking to trade inside of this range right here, from new week opening gap to new week opening gap. The repricing lower, which occurred yesterday, took out our key sales liquidity pool objectives. And as outlined prior, I'm not anticipating new monthly lows to take place before the new month begins. And therefore, I'm leaning towards a consolidation profile for the remaining period of this month. If we zoom in right here, what I would like to see is that we repriced above this sequence of imbalances which formed yesterday throughout the morning session right here. If we are going to see this sequence of imbalances function as support on price, and we're going to see the market find support inside the sequence of imbalances and then displace towards the upside, from that moment in time, I know that we're in a buy program, and I know that we can then look for market maker buy models. If we are going to reject the previous week's low, and we're going to displace below this BC, which formed today, right here throughout the beginning of the day, utilize it as resistance on price, that would be the first sign that we're likely going to see the market draw towards the lower end of this sequence of imbalances. Note that price is trading around this 18,000 price level, and therefore the reaction to this area will be very tiny moving forward. When we pay attention to ES then, what I would like to see is that on ES, I've marked up the same upclose candle right here. This is the upclose candle which I'm going to be utilizing to gauge the order flow going into the upcoming days. If we're going to see ES displays also above this upclose candle, utilize it as support on price, that would be the first sign of, okay, we potentially are now in a buy program. When we displace above that new week opening gap, utilize it as support on price. From that moment in time, that will get confirmed, and then I'm going to look to trade this range right here. When we pay attention to this sequence of imbalances which formed yesterday, notice that ES also took out the sell-side liquidity pool objectives of first of all the previous week's low and secondly the Thursday 10th of April low. And notice that we saw imbalances formed throughout this repricing lower. Notice that when we extend these imbalances to the right, you can see that ES has closed above them. But more importantly, do you see how we have created 3 imbalances right here? Imbalance numero uno right here. And for those that are not familiar with foreign language, the imbalance number 1 right here. BC number 1, BC number 2, BC number 3. Do you see this right here? This shows you that for now, the underlying order flow is bullish. Yes? So as long as this imbalance right here functions as support on price, and we see the market begin displacing towards the upside, and again, it has to displace above the previous week's low and above this shaded box of that opclose candle. The moment that that would occur, that's when I anticipate, okay, we're now in a buy program, and then I know that I'm going to be looking for longs throughout the remainder of Tuesday and throughout the remainder of Wednesday, Thursday. If we are going to see a rejection taking place of this opclose candle, which is still possible since we haven't displaced above it yet, so if we're going to see the signs of a swing high forming in this area, then I would anticipate lower prices. And that's basically my thought process right now when it comes to the index futures, where I'm monitoring whether or not we have seen manipulation taking place yesterday when it comes to the repricing lower which occurred on Monday, or if we are seeing that this is actually distribution lower to take place and that we're going to see further continuation lower. Right now it's a bit of a tricky one, and the reason why is because we have reached our objectives, and whenever our higher time frame draws on liquidity get met, especially this early on in the week, you always want to just sit back for a while and wait for more market data. And this is simply what I'm going to be looking for going into the upcoming days. Scenarios to monitor are very clear, they're very straightforward, and when we pay attention to ES as well, what I would like to see is that on ES the repricing lower which occurred all throughout the past week, it was very slow, with a lot of back and forth going, and therefore you know that a lot of buy-side liquidity has been engineered throughout the past week. And ideally, I would love to see a run on buy-side liquidity taking place, because that already basically is for me like, okay, I already see where my buying opportunities are going to present themselves then, but it's not confirmed yet. And that's something which we need to wait for. And the moment it gets confirmed, that's when I anticipate low resistance. Now, you need to understand that you can have a preferred scenario of what you would like to see, so to say, but it doesn't mean that that will have to get followed. It doesn't mean that IPTA will have to do what you want to do. It doesn't work that way. You need to be able to define, okay, what are the potential scenarios that we're going into the upcoming trading days with? And once you have defined those scenarios, you can have a preference of what you would love to see taking place, what you would prefer to see take place. And the reason why you would prefer a specific scenario is because that would be the cleanest, so to say. But if you go into the markets with a mindset of, okay, what my will is how IPTA is going to deliver, you're going to hurt yourself. So don't do that. Always listen to what IPTA is telling to you. Always listen to what the signatures are showing to you. And once you start looking for those algorithmic signatures and once you start aligning yourself with them, that's when you're able to say with great confidence, this is what's going to happen next. But if right now it's not clear yet, don't say, okay, we're now going to immediately expand towards buy-side liquidity. Wait until it gets confirmed, because it's completely possible that we're still going to reprice even lower, since there isn't any SMT between Nasdaq and ES on these lows right here. If we pay attention to the door then, what I would like to see is that the door reached the objective of that monthly imbalance yesterday as outlined, and we saw the market consolidate inside of there. Notice how the market is hovering around CE of that monthly imbalance right here. What I will be monitoring going into the upcoming days is the following. What I would like to see is that we saw the market form a higher low on Tuesday right here. When I extend Monday's low to the right, I want you to pay attention to the following. What I want you to pay attention to is what happened on GU. When we pay attention to GU right here, what you can see is that GU created a higher high right here on Tuesday relative to Monday's high. That right there is SMT. And I'm not saying that this is immediately, okay, the high is in on GU and we're going to expand towards the downside significantly and the door is going to just run up higher. It's not confirmed yet, this SMT. However, it's important to note that this SMT is here. So if we're going to see the signs step in of the door beginning its buy program and GU beginning its sell program, this SMT is the first sign of that taking place. Because when we zoom out, we pay attention to the daily chart, what I would like to see is that GU did not take out the 2024 high yet. As I mentioned prior, if GU is going to leave the 2024 high intact, whilst Euro has already taken it out, that would be very interesting going into the upcoming quarter, since we're just in the first month of the second quarter, of course. But when we pay attention to the door in particular, what I would like to see is that what I will be monitoring for the door is whether or not we are going to see the door manage to get above this upclose candle. If the door is going to manage to get above this upclose candle, preferably with a BC, with a bullish value gap creation, that is when I anticipate, okay, I want to see this upclose candle function as support on price, because if this upclose candle functions as support on price, I anticipate that the door is likely going to reprice towards the new week opening gap, and then this would be the range which I would look to engage in. Now, it's very important to understand that when I outline a scenario like this, there are multiple things which are signaling something like that. First of all, it's about recognizing swing points, meaning it's about recognizing when and where swing points are likely going to form. Secondly, it's important to look at intermarket relationship to be able to confirm that. And next step, what I'm doing is I'm looking at already anticipating price delivery, meaning my goal when I come to the charts is I'm basically already trying to say, okay, this is the only scenario I'd be interested in. This is the only scenario that I would like to see, so to say. And the reason why this upclose candle in particular is so important to me is because when we go to the left right here, what you can see is that upclose candle, that high formed inside of this CB. So if we're going to see displacement through that CB, through that upclose candle with preferably a BC, that would set up my market structure shift pattern. And the fact that we did not see any retracement into this low right here, when we expanded through it, when we open up for this new week, is interesting to me. And when we pay attention to Euro as well, what I would like to see is that Euro repriced into the higher end of that imbalance, which I had outlined throughout my market review yesterday. And do you see how we wicked above it, but how the bodies kept on closing inside of it? The wicks do the damage, the bodies tell the story. Notice that when we pay attention to Euro, what you can see is that the market consolidated for a while throughout the last week. And then on Friday, we began expanding towards the upside. But then when the weekly open took place, that's when it really kicked off, because you can see that Euro repriced higher significantly. Notice that the market is now consolidating and it's chopping around. What I will be monitoring is the reaction to this imbalance right here. Do you see how that imbalance displaced through that buy side liquidity pool, which we had as an objective? If we displace below this imbalance, begin to utilize it as resistance price, that's when I anticipate that Euro is likely going to drop back towards the weekly open right here. If Euro is going to displace below this imbalance, then get back above it again, that's when the underlying order flow is likely going to be very messy, and that's when we're going to see higher resistance liquidity runs taking place. With that being said, this is my review done. I hope that you found it insightful. I hope that you have the game plans established, because look, when I make my reviews, I share if this then that scenarios, meaning I'm looking at very specific algorithmic signatures in price that will confirm to me what scenario is going to get followed. Your job is to pay attention to the ranges which I outlined to you, and when you pay attention to how the market is being delivered around those very specific levels, you're able to confirm whether or not we're in buy or sell programs. When you're able to see that the higher time frame institutional order flow is, for example, bullish or bearish, you're able to find the lower time frame market maker buy models or sell models in sync with that analysis. And that's the importance of making an analysis like this heading into each trading day. So with that being said, I want to thank you for watching this review all the way to the end. I want to wish you good luck the upcoming week. If anything changed about my underlying analysis or any new market data becomes available, I will let you know on the mentorship form. Have a blessed week and look forward to speaking to you soon again. Be safe. Hello there, I hope that you are doing well. Welcome to this new topical lecture. This lecture is going to be on navigating the price cycle, recognizing low resistance liquidity runs. Now, before we dive into this lecture, I would like to share with you that this lecture is not going to be an easy lecture. Meaning, if you're completely new to my mentorship, I highly suggest you to research other lectures prior to watching this lecture. If you've already been studying my content for the past couple of months, then I highly suggest you to pay close attention to what I'm about to share with you. Here on the RE chart of Nasdaq, and I have outlined a specific expansion towards the upside, and I've outlined the question, why did price expand higher here? I would like you to pause the lecture for a moment, and I would like you to pay attention to the delivery as it occurred, and I would like you to try and explain to yourself in your mind, or you can write it down, or you can make a screenshot and make chart annotations, but I would like you to try and explain why the market expanded higher where it did. I hope that you paused the lecture, because I'm going to proceed to the next slide. Here I've added my lipstick to the charts, and I have added a lot of different lines on the charts, and I can imagine that if you're not trained well enough yet, you might be looking at this and you might be confused with regards to all of the annotations which are visible upon my screen. However, I'm going to walk you through each one of these annotations, so don't worry. First of all, what's important to note is that as outlined on Thursday throughout my market review of the 12th of June 2025, what I outlined was that I would be monitoring the reaction to this REBC right here. The reason why this REBC in particular was so important to me throughout the whole week, and why there were multiple trading opportunities on Monday, Tuesday, and Thursday from that same range, as you can see right here, is due to the following. The reason why that BC was so important to me was due to the fact that this BC formed whilst the market expanded through 21,750. So the range the price was trading in was between 21,000 and 22,000. My eye is drawn to this array because this array was the array which formed whilst the market expanded through 21,750. If you pay attention to the second candle which sets up the creation of the bullish value gap, the bullish value gap being a 3 candle formation, where you can see the first candle right here, second candle, third candle. The second candle repriced through 21,750, and therefore going into the week, I was anticipating that this would be a very important BC to monitor. What you can see is that on Monday we traded inside that BC multiple times. On Tuesday, we traded into that BC multiple times. And what I would like to see is that on the day of Wednesday, the market stopped in advance of that BC. And we formed a daily low right in advance of that level. So what you can see is that a lot of daily lows formed around that specific range. And therefore, going into the day of Thursday, what I had outlined was the following. I had outlined that as long as the market would stay above the range of this REBC and we would not see displacement through it, I would be bullish. And the reason being is due to the following. What I would like to see is that there were a lot of lows which formed inside of or in advance of that range. What that is engineered sell-side liquidity. So what you can see is that as the day of Thursday opens up, what I would like to see is that the market initially runs higher, forms the London high, and I then created my market review throughout the half part of the London session when the market was trading inside of REBC, and I had outlined if we would see a rejection taking place of this range, then to me my eye is drawn to the London high and maybe even the previous day high. What you can see is that the market eventually stops throughout the afternoon session right here and begins to roll over throughout Asia, but that doesn't matter. And the reason being is because what I would like you to understand is that the framing of this expansion higher throughout the New York morning session is all that matters. If you're able to take that run and you're able to participate in it, then that's all you need and you don't care about anything else. If it runs towards previous day high, great. However, if it simply just runs towards the London high and it maybe even overshoots it a bit, that's already a phenomenal trade. Don't let anyone tell you that you should be aiming to get hundreds of points within any given trade. We trade what is most logical. We trade what the time and price cycles are signaling to us. And when they signal to us that order flow is changing, like it's signaled right here, when price failed to displace through EQ of the range from this high to this low, I didn't annotate this level, but throughout my market updates, I was updating you all with regards to that level. The market kept on rejecting that, and what that shows is that there's a sense of weakness. The market is being held back. And then what happened throughout the Asia session was that in the Middle East, another war kicked off. But that's something I don't want to touch on during this lecture. However, what I would like to see is that I've outlined the London high and the London low. These are two key levels heading into each New York morning session. And the reason being is because they are the previous session high and low. At 8:30 am, there was a high impact news driver. And what I would like to see is that the 8 am hourly candle right here open up, dropped lower, stops right in advance of the London low, and we see the market expand towards the upside. What's happening right here is that the market is manipulating lower for the New York morning session, and we then begin to see the market expand towards the upside. What's important to note is that this manipulation lower occurred when? It occurred exactly at 8:30 am, when that high impact news release came out. So what I would like you to see is that we can pair the economic calendar with delivery profiles. Because based upon the economic calendar, we can anticipate when the real move is likely going to occur. When the real move of the day, the low resistance security run, is likely going to occur. When we pay attention to the Nasdaq and the Dow Jones then, what I would like to see is on the left you can see the Nasdaq, and on the right you can see the Dow Jones. What you will notice is that Nasdaq created a higher low relative to the London low, as mentioned prior. If we however pay attention to the Dow Jones, what I would like to see is that the Dow Jones was creating lower lows relative to the London low. And why is this so important? This is important because Nasdaq is trading inside of a key range. What range? That mrNbc, which we're monitoring all week. So do you understand that when we see SMT inside of that mrNbc, that's to us the sign that order flow might be changing soon and that a swing low could be in the making, which will set up a change in state of delivery? Yep. If you go back to my market review, you will hear me exactly outline what I just outlined hours in advance. And that is what I mean when I say you can anticipate these price swings before they form. And if your anticipations are being met to the tick and you see everything signaling to you that you're on side, that is when you know you have a high probability trade setup. That is why I am suggesting always that in advance of each trading week, in advance of each trading day, or even in the session, make sure that you outline your game plan. Make sure that you showcase what your anticipation is. Because when you're able to consistently build that habit of making an analysis in advance of the market opening, you're no longer reacting, you're predicting price. And as time passes and the market does what's programmed to do, and you see that you're on side because the market is doing exactly what you had outlined it should do, that is when you know you should be interested. And if it's not like that, and you're not in sync with your analysis, then it means you walk away. It's that straightforward, guys. And that is a very important lesson which I'm sharing with you right now. Make a daily game plan, and when you see the signs become present of that daily game plan being followed, that is when you can execute without fear. That is when you can execute without any hesitation. If you, however, notice that you're jumping the gun here, simply trading based on lower time frames, what will happen is that you're going to be impulsively trading and you're going to be reacting to each one of these candlesticks. And it's exactly in that mistake that the majority of retail traders lose. At the end of the day, you must understand that our perspective about the markets allows us to see these low resistance liquidity runs before they form. We are never surprised by any price swing. Why? Because there are always signs present that signal to us that something should happen before it happens. And that right there is one of the main takeaways which I want you to have from this lecture so far. When we pay attention to the 1 minute time frame then, what I would like to see is that on the 1 minute time frame, there are a lot of candlesticks, of course, because it's a pretty wide window of time. You can see the delivery from 3 am to the left to about 10 am on the right. So that's 7 hours worth of price action right in front of you. What I would like to see is that throughout the London session, what we saw taking place was that the London one initially opened up, ran up higher, but notice that throughout the middle of this cycle, we saw the market consolidate. Do you see how smooth these highs right here are? Do you see how the market was just consolidating right there? That's a very important insight to see, and the reason being is because that's the engineering of liquidity taking place, which will set up repricing higher later in the day. We see the market expand towards the downside, and eventually about after 4 a.m. we saw the market trade into that RBC's range. Notice that we saw the market form a low and the market ran up higher. We then saw the market gravitate lower once more in a very slow manner. 7 a.m. comes around, and what does 7 a.m. do? This is the beginning of the New York morning session. We see the market initially expand towards the downside and pay attention to all of the imbalances which formed throughout this repricing lower. I decided to only annotate this imbalance right here, but each one of the imbalances which formed after 7 a.m. can be looked at to be important heading into today. Notice that eventually the market forms a low right here near the end of 7 to 8, and we see the market reprice higher. Notice that the market reprices into that same CB which I had outlined right here, which set up that initial push lower into the RBC once again. Eventually, the market consolidates once again, and at 8:30 a.m. the high impact news release will be released. Notice that at 8:30 a.m. the market opens up and drops lower. It has this huge spike lower. Notice that the market reprices into CEO of that RBC, but notice that the London low remains intact. What did we see prior when it came to that London low? We saw the Dow Jones already take out that low whilst Nasdaq hasn't. And that right there is S&P relative to the previous session low inside of a point of interest after key time 8:30 a.m. And that is what is setting up a beautiful run up higher. Notice that the S&P detector is also signaling 90-minute cycle S&P with ES relative to the previous 90-minute cycle, because at 8:30 a.m. a new 90-minute cycle begins. So that S&P is again setting up repricing higher to take place as well. Notice that I've outlined the schematic right here from the trader's feed from delivery profile number 2. And what the characteristic of delivery profile number 2 is that 8:10 forms the low of the New York morning session. The way this gets done and takes place is by purging the previous cycle low, the 7 to 8:30 a.m. low, seeing the signs of a swing low formation, and once these signs are present, that's when we can anticipate, okay, price is in fact likely forming the low now. Now this is something which is important to understand because delivery profiles play a crucial role when it comes to navigating the markets on a day-by-day basis. If you're unable to recognize what daily delivery profile is in play and you're unable to see what's likely going to happen next, that means that you're trading in a low probability trading environment, and the best thing to do is to then step away and wait. Because these are the type of days where everything is clean, where everything is already present, and all you have to do is show up and use any discount array to align yourself with IPDA. Now what's important to note is at the moment that 8:30 a.m. news comes out and we indeed open up that new 90-minute cycle and we purge the previous 90-minute cycle and we see S&P with ES relative to the cycle inside of a point of interest, the moment that the market then expands higher, that is when you know, okay, price is officially in a buy program. I'm going to walk you through all the different entry opportunities which are present, because trust me, there were a lot. However, to do so, what I'm going to do is I'm going to move on to the next slide and we're going to zoom into this delivery right here. What I would like to see is that at 8:30 a.m. we saw that manipulation lower and we then saw the market reprice higher quickly. Notice that a volume imbalance gets created. I utilize that volume imbalance to frame the first long opportunity. The reason being is due to the following. What I would like you to see is that volume imbalance gets created after we saw S&P be established inside of that RBC, which we already know to be a crucial reference point heading into the day. The market expands higher, and notice that we see the market reprice above this candle's high, which traded into the volume imbalance. The moment that the market expands above this high, I'm looking to add to my existing position, and the reason being is because the market is indeed showing an urgency to reprice towards my objectives. The moment that the market retraces with the next candle into the first candle's high, that right there is immediate rebalance. And when you see immediate rebalance, that is when you can anticipate that big green candles are likely going to occur soon. Notice that the market expands higher once again, and notice that it's now trading around 21,800. Why is that level important? because it's a full number, guys. So when you see the market expand through that level and you see the signs of a rush occurring inside of a bigger market maker buy model, what we can do then is we can utilize these smaller levels for potential entry opportunities. Because what will happen is that IPTA will seek to reprice through the level, retrace into it, and then continue expanding into the anticipated direction. Notice that a breakaway gap forms on the 1 minute time frame. However, on the 15-second chart, I'm going to show to you shortly how that breakaway gap creation on the 1 minute chart is actually something else on the lower time frames. We see the market distort time right here, and we see the market just go sideways. Why is the market going sideways? Because if you remember, price was so close to that London high. Why would we stop in advance of it? The reason being is because of the fact that there was, besides that 8:30 AM news, no news for the whole day. So what will happen is that at 9:30 AM, a new volatility injection will take place. But one of the characteristics of a market which is in a rush to get somewhere after 8:30 news is that between 8:30 to 9:30, the first objective is already going to be met. So when the market is consolidating like this and it's distorting time, what's occurring is that it's being held inside of a tight range. Notice that relative vehicle highs are being engineered, and notice that this is occurring in advance of the London high, this level right here. Eventually 9 AM comes along, and what does 9 AM do? 9 AM opens high, reprices into that London high, and it was a very quick spike near the final 15 seconds of this 1 minute. So I unfortunately missed the perfect exit at the London high right here, or the perfect partial I should say, because I held on to runners as you can see. But what you can see is that I partialed at the next 1 minute candle, and the reason being is because we took out these relative vehicle highs. Now you might be looking at this delivery and you might be thinking to yourself, but Zeus, why don't you just hold on? Why don't you just hold on to the trade and keep it running? Well, what I would like you to understand is that whenever the market reaches logical levels at important times, it's a very important thing to consider parsing. And the reason being is because if the market reaches your draw liquidity, in this case the London high, and the market would not continue trading above that level, but instead would reject it, retrace deeply from it, or maybe even consolidate, you would beat yourself up if you wouldn't take something off. Why? Because it's the completion of a market maker buy model. And whenever a market maker buy model or even sell model completes, you don't know what's going to happen next. You don't know if the market is going to continue. You don't know if it's going to reverse or retrace. All that matters is that you're able to frame the low resistance liquidity run. The move which happens the quickest. And that right there is also the most fun to trade. And that is something which I've seen in a lot of you guys, where I receive messages from you and you always message me saying, how do you know the low resistance liquidity run is coming? I'm tired of sitting through this job. I'm tired of sitting through consolidation. I'm outlining it to you today. You focus on the hourly chart, and if it ain't clear on the hourly chart, you have absolutely zero business dropping into the 1 minute time frame or even sub 1 minute. Notice that at 9:30 AM, this BC forms right here, and the market retraces into that BC before expanding towards EQ of the range between 21,750 to 22,000. Notice that the market has a hard time around that level, and the reason being is because it's an important algorithmic reference point. I saw signs of SMT being established around that level, and that further confirms to me that it's a good time to take something off. Eventually 10 o'clock comes along, and what does 10 o'clock do? We see the market open up, initially run higher, trading into the CB right here. We then have one more push lower, trading back into that BC from 9:30 AM. We take out sell-side liquidity resting below this low, and the market expands once again beautifully towards the upside. Let's say that you missed the price swing which I participated in, shortly after 8:30. Do you see that after 10 o'clock, you had another opportunity to get in sync, where 10 o'clock opened low into that BC, took out sell-side liquidity, and as a result of that, expanded towards the upside? Beautiful, right? And this is what I'm trying to outline to you. There are so many freaking opportunities all the time. Pick the ones which you see coming in advance. Pick the ones which you're the most comfortable with, and everything else will fall into play. here on the 15-second chart. And what you can see on this 15-second chart is that I've plotted the same arrays as I did on the 1 minute time frame. And I would like you to spend some time just looking at this price action and trying to see whether or not you're able to see the beauty of algorithmic price delivery. I understand that for some of you, it's hard to see this. I wholeheartedly understand that. And the reason being is because I was in that position as well. I was in that position where I was unable to see why the market was doing what it's doing, and more importantly, when it was doing what it's doing. But right in front of you, you have a bullish price cycle. And what you can see is that throughout this bullish price cycle, what's happening is that for this short window of time, after the 8:30 AM manipulation occurred with the high impact news release, you can see that every single key level is being displayed through and the market is being repriced towards the London high, towards that objective. And why this is important to understand is because when you're able to recognize that this is likely going to take place soon, you're able to align yourself with high frequency trading algorithms that are doing one thing on every single retracement. And listen closely, because this is a foundational concept which you must understand. The moment that the time is right, what will happen is that they will begin to spool the market with one thing. Long order, long order, long order, long order, long order. And this is happening at a speed that you cannot even imagine. That is what high frequency trading algorithms do. Every single retracement is being bought up. And if you're able to recognize this, and if you're able to see where they're drawn towards, that is when you can have this many opportunities. And when you pyramid accordingly, you must be able to see the beauty of trailing your stop, keeping your risk relatively equal, but increasing the potential profit on a position drastically. Because that's the power of pyramiding. And when you pay attention to this delivery, what's important to note is that when it comes to, for example, this breakaway gap on the 1 minute time frame, now that you're looking at it on the 15-second time frame, you're probably like, what do you mean breakaway gap? I see a BC and the market retraced into it and expanded away from it. Yep. And it's exactly because you see this on a 15-second time frame that on the 1 minute time frame, that gap is allowed to stay open. Why? Because sell side was already delivered into this imbalance on the 50-second chart, and because the market is in a rush to get somewhere, it will seek to expand quickly higher. What I would like to see is that near the end of this 30-minute cycle, what we see is that the market is beginning to go sideways. We see that time distortion is taking place. I would like to think about why this is occurring. Why is the market going sideways right here? The reason why the market is going sideways between around 8:40 to 9 AM is due to the following. What I would like to see is that the market is being held inside of a tight range. And the reason why this is occurring is because the market is in close proximity to the London high. So what IPTA is waiting for is that it is waiting for the next time cycle to open up at 9 AM. So that that next time cycle can open up, run higher into the objective, taking out engineered buy-side liquidity of the previous 30-minute cycle, reach the real objective of the previous session high, the London high, and then what you see taking place is that again time distortion occurs. So what you can see is that what's happening is that there are these volatility injections which occur at specific times throughout the day. Our job is recognizing that these volatility injections are going to occur because there are signs always present which signal in advance of the key open what the key open should do. For example, that 8:30 news release. 8:30 AM is the beginning of the new 90-minute cycle. Price is already inside of a deep discount for the day. We're already in a higher time frame POI. So when that new 90-minute cycle opens up, you can already anticipate that we should manipulate lower to distribute higher. When price is already distributed higher, what should 9 AM do? 9 AM should distribute higher again. Why? Because there's still an objective which is yet to be met, and that's our draw liquidity. So what I would like you to see is that every single key open has its own function. But when it comes to the bullish price cycle and navigating it, you must understand A to B on the bigger scale. Because once you know A to B on the bigger scale, all that you need to wait for is for manipulation to have been confirmed. And then what you will see taking place is that low resistance security runs will occur in line with that higher time frame analysis. And what's important to note as well when it comes to this is the following. How do I know that the time is right? How do I know that price is now going to expand higher? I've mentioned it already throughout this lecture. And if you have yet to realize it, I would highly suggest you to go back over this lecture. And you might be like, just tell me, just give me the answer. Tell me what to look for, etc. I've already told you many times in the past, but you've yet to experience the light bulb moment. And it's way simpler than you think. But because you're trying to overcomplicate it for yourself, because you're trying to add all these different factors to your own analysis, you're forgetting that it's actually a very straightforward process that IPTA is referring to. Why do you think that within the model series I've given you such a straightforward protocol? Because that is how IPTA is coded to deliver price. With that being said, this lecture comes to an end. I hope that you found it insightful. I hope that you're able to gain massive light bulb moments from it. I want to wish you good luck in your studies and I look forward to speaking to you soon again. Hello there, I hope that you are doing well. Welcome to this new trades breakdown lecture. During this trades breakdown lecture, I will teach you the PM continuation, my signature trading model. Here on the daily chart of Nasdaq, and what you can see is that Nasdaq repriced towards the January high, and we saw the market take out the buy-side liquidity resting above this high, and a swing high formed. What you can see is that the market then began to roll over and begin to draw towards the downside. Notice that I've labeled this reversal right here with the text point A. And next to that you can see that I've put point B below this low. This low was the low of January. Below this low, key sell-side liquidity is resting. What you can see is that throughout the month of February, the market repriced higher, taking out the buy-side liquidity resting above the January high. Throughout this run, higher sell-side liquidity was engineered. Notice how much back and forth going was present throughout this run higher. And eventually we saw the market turn around. This right here is a purge and revert, where you can see that the previous month's high is being taken out, followed by a revert towards the previous month's low. This run lower from point A to point B is a beautiful sell program. Now what you can see is that when we are paying attention to the PM continuation, however, we are going to be looking at this down close candle right here. This was the day of Thursday. What I will do is I will provide you with the framework which is required in order to understand when the PM continuation model is in play. Now, first of all, what you must see is that this was a very bearish week. You can see that through the following perspective. Notice that when we open up for this week, the market repriced higher with this wick right here. And we then saw the market immediately begin to get repriced towards the downside. A daily imbalance formed right here. But notice that the market never retraced into this imbalance before being repriced towards January low. This shows to you that this imbalance right here was a breakaway gap. Now, when it comes to breakaway gaps, you must understand that whenever a breakaway gap is present, it tells you that speed and velocity is on the way. Meaning, when you recognize from real time that the breakaway gap is being formed, you can anticipate that we're likely going to see big down close candles soon. Now, that is what you see take place on Thursday with this down close candle right here. Now, you might be wondering, why is this gap allowed to be left open? Why didn't we retrace into that gap before expanding towards the downside? In order to understand this, I suggest you to pay attention to ES on your own charts. Meaning, I want you to compare the daily chart of Nasdaq and want you to compare the daily chart of ES, and you are going to answer your own question. When we pay attention to the RE chart then, what you can see is that we open up for this week and immediately reprice towards the upside. Notice, however, that the market began consolidating, and then throughout the New York morning session on Monday, we saw the market reprice towards the downside. Notice that this imbalance got created, and notice that the market formed this imbalance whilst it traded below the previous week's low. Notice how they retraced into that previous week's low, right here, into that imbalance, and utilized that previous week's low perfectly as resistance on price. This is support turning into resistance right here, which is taking place. Notice that this is also a balanced price range, which is now forming. The market expands towards the downside, and eventually we see on Tuesday that a new RECB gets created right here. Now, as mentioned throughout my reviews of this week, in particular, if you are watching this lecture later, you can go back all the way to the mentorship forum. It's posted around this period, and you will see my posts throughout this week, and you can also watch the lectures, the market reviews from this week. But throughout this week, what I was outlining was the following. I outlined that I would like to see Nasdaq stay inside of this CB in order for the order flow to be bearish, meaning I did not want to see Nasdaq displaced above this CB for a bearish scenario. The reason why was due to the following. This CB right here formed throughout this displacement leg lower. Notice that we displaced below this low right here. This low set up a retracement higher, followed by an expansion lower. Notice that this imbalance right here also set up the repricing into what? Into the 21,000 big figure. Therefore, for the order flow to remain bearish, I never want to see Nasdaq displace above this CB. In fact, I need to see it constantly reject this CB. Notice that we repriced into that CB, and notice that the wicks went above it right here on Wednesday, but notice that the bodies kept on closing inside the price range of this CB. Now, what you can see right here on this red line is the following. The SMT detector automatically detects right here that there's an SMT present between Nasdaq and ES. And if you go to your charts, you will see that there is a current correlation between Nasdaq and ES, where ES made a higher high relative to the Tuesday high and therefore traded into that daily CB. Nasdaq didn't make a higher high, and therefore as long as we do not see Nasdaq take out this high, you can anticipate that we're likely going to see continuation when the time is right and when the delivery profile suggests to us that we're going to see that next delivery lower. Now what you can see is that we expanded towards the downside on Wednesday, but notice that there was no continuation taking place drawing towards the Tuesday low. In fact, we saw the market consolidate for a while, and it slowly began grinding towards the upside. Thursday came along, and what did Thursday do? Thursday opened up and immediately ran higher back into the price range of that RECB and into this long wick right here. And notice that throughout the morning session, the market then began turning around and we saw a reversal taking place. Why, oh why does this reversal take place? The reason why this reversal takes place is due to the following. Notice that first of all, we have defined that the higher time frame institutional order flow is bearish. Meaning from a daily chart I've outlined, we're looking for shorts. We're looking for lower prices on Nasdaq. Next that you can see that intra-week, the delivery profile is suggesting to you that we're seeing a very bearish week. Where you can see that Monday formed the high of the week right here, and the market has just been expanding lower ever since. Therefore, we can anticipate that we're likely going to see that sell program continue until the higher time frame drawing liquidity gets met. What's the higher time frame drawing liquidity? The higher time frame drawing liquidity is that January low right here. Therefore, the profile which you're seeing for the day of Thursday is the following. You can see that we're opening up for the day and immediately running higher. But hey, I just outlined to you that we're bearish, right? So that run higher is manipulation which is taking place. Throughout that run higher, what's occurring is that retail-minded traders are thinking to themselves, all right, this is a very bullish market. We should go market long. We should place our stop losses below these lows. But guys, do you understand that this is the engineering of sell-side liquidity? Therefore, when the time is right, when is the time right? The New York morning session, we're going to see a daily high form and we're going to see the market begin to expand towards the engineered sell-side liquidity. What is this right here? 9 o'clock RE candle. What is part of that 9 o'clock RE candle? 9:30 open. Huge repricing towards the downside and the market takes out the sell-side liquidity resting below the old weekly low, which was the Tuesday low. Now, since this lecture is specifically on the PM profile of AM expansion and PM continuation, we're going to focus right here. I already said it there, but what is crucial to understand when it comes to my signature model for the PM session, and please note, this model is literally the trading model which I would look to trade the rest of my life if I didn't have any other model which I was allowed to trade. Meaning, if you would ask me what is the most easy and straightforward trading model which you possess, because I have multiple trading models, then this is the model which I would suggest you to investigate. This doesn't mean I'm telling you to trade based upon this model. I'm not a financial advisor. I would never tell you to go out here and trade for yourself. However, if you would like to investigate a specific repeating phenomena within the markets that's very detailed and very precise, pay attention. What you can see is that the morning session expanded towards the downside. It expanded towards our anticipated direction. Notice, however, that the morning session stopped in advance of the January low. This is that January low. Therefore, this is engineered sell-side liquidity which is being formed. Why? Because look, in order for the market to draw towards the January low, it must first retrace. It must first engineer new liquidity. What liquidity? Sell-side liquidity. So what IPTA is coded to do is that it retraces higher. It trades against the anticipated direction of lower prices, because throughout the latter part of the morning session or throughout lunch, what I'm looking for is I'm looking for that retracement. I'm looking for that retracement to engineer new sell side, or I'm looking for a consolidation, so that when a specific time cycle opens up, I can anticipate that we're likely going to see the market begin to roll over. Now, I need you to understand that this expansion lower, followed by this retracement higher, followed by this expansion lower, is a lower time frame market maker sell model. Just like these three candles right here, where you see how the market expand lower, retrace higher, expand lower, are also a market maker sell model. Do you understand as well that within that daily chart of the January high to January low per January 3rd, it's also a market maker sell model? Hello, fractals forming inside fractals. When we pay attention to the 1 minute time frame then, what you can see is the following. What you can see is that between 11:30 to 1 p.m. the market consolidated. And this is very important for this continuation framework. And the reason why is because this continuation framework is based around the idea of the launch cycle, its respective high being taken out, followed by a revert towards the low. Just like I framed that from that day chart for the January high and January low. What you can see right here is that at 1 p.m. the market opens up and begins to run towards the upside, meaning it begins to reprice towards the buy side liquidity, resting above this high right here. This high is the high of the launch cycle from 11:30 a.m. to 1 p.m. Now for the PM session, you need to pay attention to the launch cycle high and the launch cycle low. Because what I'm basically telling to you right here is that because I'm anticipating lower prices and because I know that the higher time frame drawing liquidity is below market price, I will be looking for a run higher against my anticipated bias into a key time-based buy side liquidity pool. And when the time is right, which SMT shows to me right here, it tells me that we're likely going to see the market begin to roll over soon. Meaning it tells me that we're likely going to see the market form a high right here. I anticipate this to be a potential high of the afternoon session. Now what am I waiting for? I'm waiting for the market to obviously show to me that it's in fact displacing lower. So what you can see is that we form this high and the market begins to slowly grind towards the downside. It begins to slowly show to us bearish institutional order flow. Now you might be wondering, what does this red line right here represent? This red line right here represents an SMT between Nasdaq and the Dow Jones, where Nasdaq made a higher high relative to this blue shaded box. The Dow Jones made a lower high. And I know that some of you are probably like, can you please provide us with the indicator that detects the SMT for us automatically? Yes, you will be able to get access very soon. I'm just showcasing the application of the tool during this lecture. And if you want to keep updated, just go to smtdetector.com and apply for the waitlist. But next to that, you will also be notified when it's live throughout my mentorship form. Now what you can see is that the market expands towards the downside right here, but there aren't any real clear signs yet of this being the high. Meaning A major tip which I want to give to you is the following. Whenever a SMR is very slow and there's a lot of back and forth going, always be cautious with saying that is the SMR then. Because what could happen is that we could see one more push higher, taking out the buy side liquidity resting above these highs, form new SMT, and then begin to roll over. Therefore, whenever you're not certain about an SMR being in, it's always a good idea to wait for the next displacement leg. So what you can see is that the market runs this short-term high right here. It takes out the buy side liquidity resting above this high, and we then see the market displace lower. Notice that we see these big down close candles form, and the market reprices through what? It reprices through the low right here of this retracement on the left side of the curve. And this is advanced mrXM understanding. Whenever you are trading a market maker model and you are anticipating where your entries will form, you must be looking at the left side of the curve, meaning on the buy side of the curve in this case, to be paying attention to where the retracements were on the left side of the curve. Because based upon these retracement legs, you can anticipate when and where on the right side of the curve your entry opportunities will present themselves. Notice that the market just steps below this low, and that is already enough. Why? Because it's literally IBDA tipping its hand to you and saying to you, yes, we're in fact in a market maker sell model now, and we're going to utilize this full retracement leg from the left side of the curve as resistance on price in order to continue lower. Notice that the market also repriced below this low right here, which set up that retracement higher, and notice that we immediately retraced into that. What am I waiting for right here? Well, what I'm waiting for is the following. I'm waiting for a crack correlation to present itself right here on the highs between Nasdaq and ES. Why? Because we just opened up a key time at 2 p.m. and therefore to confirm that the high is in for the 2 to 2:30 p.m. 30-minute cycle, I'm looking for a crack correlation between Nasdaq and ES. What you can see is that Nasdaq never traded into this imbalance right here, which got created. But if you pay attention to your 1-minute charts of ES, you will see that ES traded into that CB after the 2 p.m. open. Therefore, that SMT suggests to you that the high of this 2 to 2:30 p.m. cycle is in fact in. And it tells you that we're likely going to see distribution next. Now what you can see is that the market expanded towards the downside and it dropped towards the sell side liquidity pool of the 1 cycle low right here. Now notice that the market retraced into an imbalance which formed on the left side of the curve right here after they took out the 1 cycle low. Why? Because this retracement leg higher, yes, is the following which is taking place. They're engineering new sell side liquidity below this low, trapping buyers to then distribute even further. Notice how they utilize this imbalance perfectly as resistance on price to continue the bearish order flow. I was personally content with the run towards the sell side liquidity pool of the 1 cycle low, but notice that the market continued dropping and eventually even reached the January low perfectly. Now, what I want you to understand is that this framework which I've just described to you is an AM expansion PM continuation model. And there are a few key variables which I explained throughout this lecture which must be looked at in order to define this setup. Now, when you start investigating this setup, you will come to realize that it occurs often throughout each month. Therefore, what you can say is that you can say, well, if I'm interested in PM, I must see this. If you would simply have that as a rule, you will find all the trading setups which you would ever need in your whole life. That's not me saying to you that you should be trading based upon these setups, but I'm just saying to you that when you investigate this, you will see how often it occurs. When we pay attention, however, to the latter part of this afternoon session, you can see that I've posted the full delivery, and next to that, you can see that I've posted a Telegram message, which I posted right here. I posted on the mentorship form, imagine if they'd run January low pre-close on Nasdaq. Or in layman's terms, imagine if they'd drop towards January low before 4 p.m. on Nasdaq. Notice that I posted this right here and there was still a lot of room for the market to draw towards the January low. I want to teach you how I was able to confidently anticipate that we would likely draw towards the January low before 4 p.m. before the market goes? The answer to this lies in the following understanding. First of all, you must understand the bigger framework that was present. The market maker sell model, which was present throughout the month of February, was present from the January high to the January low. Next to that, the weekly profile was also telling to us lower prices. Next to that, the daily profile was also telling to us lower prices. And next to that, the session profile was also telling to us lower prices. Why? Because lunch accumulated, PM2 manipulated, so PM3 must distribute. Notice that the distribution already began throughout PM2, but it even confirms more that PM3 is likely going to continue that bearish order flow. Now, the reason why this is important to understand is because some of you are purely looking at the 2:30 p.m. open and you're wondering, oh, why didn't it distribute on that other day? Why did it distribute on this day? It's because the frameworks are aligned. All time cycles are aligned and are telling you the same story. Lower, 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 lower. And therefore, what you can see taking place is the following. Every single premium ray which formed after 2:30 p.m. was utilized as resistance on price for the market to be repriced towards the January low. Pay attention. From 2:30 p.m., we saw the market immediately drop towards the downside and this CB got created. Notice that the market retraced into this CB, expanded away from it. Notice, however, that this expansion was not the real expansion just yet. The market came back up into the CB again and the market was consolidating. What was it waiting for? It was waiting for 3 p.m. to come by. Why? Because the market is likely going to expand towards that hard time from drawing liquidity throughout the final hour of trading. Why? Because what will happen at exactly 3 p.m. is the following. What will happen is that IPDA will seek to complete its daily objectives. Meaning, every single day there are certain objectives that IPDA must reach when it comes to specific price levels which must be met. Therefore, in advance of the close, IPDA will seek whether or not these levels have already been met. If it's not the case, then it means IPDA is going to expand throughout the final hour, drawing towards these levels. Notice that the market reprices below the previous 30-minute cycle low of 2:30 to 3 p.m. right here. And notice how the next candle opens up, offers buy side, and immediately balances out the price range before expanding towards the downside. Notice that we see the CB get created, the market retraces into that CB before eventually expanding towards the January low. And once this January low was reached, that is when you need to be able to say, all right, daily sell program, weekly sell program, and monthly sell program is completed. Decrease expectations, don't be in a rush to do something else. Eventually the market dropped even lower than the January low, and that is when the market formed its daily low. Now, all in all, main takeaways from this lecture are first of all the variables which I've outlined that basically tell you that we're likely going to see a PM continuation take place. Next step, pay attention to the launch cycle high and low and the alignment of the time cycles. And I understand that for the majority of viewers that clicked away earlier on in this lecture, they did not get that gem. And therefore, I commend you for watching this lecture all the way to the end because, look, you're probably not going to like this when I say this, but I'm not trying to teach someone who's weak-minded. I'm not trying to teach someone who's just with this mindset of, oh, you know, I joined Zusi's mentorship and I watched his lecture for a few minutes and then I must know how IPDA works. No, that's not how it works. The reason why is because you must understand through how much freaking pain and time I went to get to know this stuff. I wasn't born with this information. I wasn't born with all of this knowledge. I wasn't given this knowledge. I literally had to go into the charts myself and find this out. And I believe that that is the mindset which you need to have in order to come to this level of understanding. All I'm doing is I'm pointing you into a specific direction. Your job is to investigate what I'm sharing with you. Don't believe anything I say. Go into your own charts and investigate whether or not there's any validity behind the things which I'm saying. And it doesn't take long for you to see how many freaking times these opportunities present themselves utilizing the same frameworks. And that should make you smile. And I hope that that inspires you to investigate. I want to wish you good luck with your studies and I look forward to speaking to you soon again throughout a new lecture. Be safe. Hello there, I hope that you are doing well. Welcome to this new trades breakdown lecture. During this lecture, I will be discussing trading consolidating markets, buys to sells, meaning buying and selling. Now, before we dive into this lecture, I just want to share with you that what I'm about to share with you is a level of technical precision that I believe you can strive to achieve. However, I do not want you to think that this should be your standard. And the reason why is because your job should be on capturing the trade which makes the most logical sense to you, which you see coming in advance. And that is probably only going to be one direction. In time, what will happen is that you will gain so much experience and you will have seen so many similar delivery profiles that you'll be able to anticipate when the market is not going to really expand into a one-sided direction for a long period of time, where it's just going to go back and forth. And when you can recognize this, what you can do is you can be nimble with your bias, be nimble with your trade ideas, and you can be looking for both buys as sells. And that is what I will share with you throughout this lecture. Now, before we dive into the lower time frames, we must first determine the environment. As outlined prior, the environment that we have been in is the following. My drawing liquidity on the downside for this week was this very large daily BC right here. We saw the market open up for the week and we saw it expand straight away into this very large imbalance. The reason why this imbalance in particular was so important was due to the fact that right above that imbalance there was another imbalance. Notice that inside of this imbalance we formed these relative weak lows right here. This is engineered sell-side liquidity. Therefore, I was expecting that we would likely see the market begin to draw towards this low right here and to draw towards this daily BC. Now, what you can see is that when we opened up for the week, the market immediately slammed towards the downside, reaching that daily BC. Now, on Wednesday, we had CPI, and therefore, in advance of CPI, we can anticipate some form of consolidation, especially when we see Monday expand so aggressively like this. So for Tuesday, I'm expecting that we're going to see a small range day. And what do you see get developed right here? Notice how we see a candle form with an equal size on both the wick on the upside as the wick on the downside. I can already tell you that on the lower time frames, what you're going to see right here is back and forth price action utilizing this daily BC's range. And what you can see is that the whole week so far, we have been referring back to this same daily BC. And that shows you the importance of understanding this imbalance. Now, the reason why this imbalance in particular is also so important is due to the fact that it displays through the 19,500 price level, which is equilibrium of the current dealing range. When we pay attention to intermarket relationship then, what I want you to see is on the left that you can see the Nasdaq and on the right you can see ES. What you can see is that when we open up for the day, we initially saw the market reprice towards the upside. We saw it consolidate, and eventually we saw it drop towards the downside with this sudden drop right here. Notice that when this drop took place, we saw ES take out the sell-side liquidity resting below this low right here, whilst Nasdaq did not. This right here tells me already that we're likely going to see the next hourly candle expand towards the upside. Why? It's not just the S&P, guys, but it's the fact that we took out sell-side liquidity resting below this row right here. We form S&P, meaning we do not see Nasdaq catch up towards the downside, and notice how the bodies keep on respecting that daily BC's range. That right there tells me, alright, we're likely going to see the market drop back towards this 19,500 price level, which is equilibrium of the current range. We see the market get oversold and immediately expands towards the buy side liquidity pool, resting above this high, above the current daily high. Notice, however, that we do not see ES take out this high. This is a cracking correlation which is present now on the highs as well. Notice that Nasdaq repriced above the daily BC's range, but notice that the bodies kept on closing inside of it. This tells me that for the next RE candle, we're likely going to see the market slam back into the daily BC's range. Meaning I can look for longs right here in this area, and I can look for shorts up here in this area. Now that we have defined the framework and the environment that we were in, what we will do is we will drop into the lower time frames, and I want to share some advanced IPTA insights with you. Here on the 1 minute chart of Nasdaq, and here you can see my executions. What I want you to see is first of all that I have shown part of the launch cycle, meaning you can see the latter part of the launch cycle right here. Notice that we saw the market consolidate and slowly grind towards the downside right here. Do you see these relative equal highs which got engineered right here? This is engineered buy-side liquidity. Why is this engineered buy-side liquidity? Well, pay attention to where these highs are being engineered. They're being engineered in advance of the 19,500 price level, which has been the price level which I have been referring to all throughout this week. Now understand that if you're watching this lecture at a later moment in time, you have probably not watched the corresponding reviews of this week, but I've been pointing out the importance of this daily BC and the 19,500 price level all throughout my analysis for the past week or so. And therefore, the mentorship students which are part of my mentorship during this period have seen the importance of this level throughout every single trading day, and especially the daily BC's range. And that right there shows you as well, when you have a specific range which you're monitoring, how many opportunities are present from that one range. Now, what you can see is that at 1 p.m., we see the market open up and we see it consolidate again. Again, it's going back and forth, back and forth. Notice how it's having a very hard time with the lower end of the daily BC. Let me ask you something. And this is just an honest question which I'm about to ask to you. If buying and selling pressure was the reason why price would go up and down, how could you explain this level of technical precision where you're seeing the bodies respect a price range which I literally outlined weeks in advance on a 1-minute chart? Think about that. Think deeper. Look at the higher end of the daily BC. Smile and wave. Anyhow, we see the market consolidate. And eventually we see it run up high quickly, taking out buy-side liquidity, resting above these relative equal highs. And then this very sudden drop takes place. Notice I'm putting emphasis on the word sudden. We see it drop towards the downside and a CB gets created whilst the market leaves the daily BC's range. The daily BC being that blue shaded box. Notice that we see the market eventually retrace into that CB and a high forms. The market comes lower again and notice that it's just going sideways for a bit. Eventually, we see the market expand higher and notice that it trades above the price range of that CB right here. Notice that a BC gets created throughout this run higher and we see the market retrace into that BC. What is this BC? This BC is the market structure shift pattern which is now in play. Why? Because we see a CB, high, BC form. But hey, pay attention to this horizontal line. This is all occurring around the 19,250 price level, which is 25% of the current range that Nasdaq is in. Notice how I'm utilizing fixed price levels to gauge the order flow. I'm not looking at the fact that we were trading below this level as weakness. Now I'm expecting that we're going to form a low. Why? Because that higher time frame SMT is still in play. And therefore what I'm waiting for is I'm waiting for IPDA to show its hand to me. When does it show its hand to me? When it displaces above the price range of this CB and it comes back into the price range of the daily BC. When does this occur? At exactly 1:45 p.m. we see the macro open up from 1:45 to 2:15 p.m. Where does it open up in? It opens up in the price range of that daily BC. That shows to me that IPDA is referring back to that same daily BC's price range. What can we expect? We can expect that we're now going to see the market draw towards buy-side liquidity, resting above engineered buy-side. Where's engineered buy-side? Well, my eyes immediately drawn to these relatively equal highs because I see that as the original consolidation within a potential market maker buy model. Why? Because this engineered buy-side liquidity in advance of that 19,500 price level. We see the market expand higher and eventually it reaches this CB on the left side of the curve. Notice that a retracement takes place and the market retraces into this high right here. Now the importance of this high right here, but more importantly this swing right here on the left side of the curve is the following. Whenever you see a retracement on the left side of the curve within any market maker model, you want to see that retracement leg function as support on price on the right side of the curve if you're trading within a market maker buy model. So what you can see is that I'm annotating the low to high, I'm extending that range to the right. Notice that we see the market retrace into that range, and notice that it retraces all the way towards the lower end of that range and trades back inside the price range of this CB. This CB functions as an inversion of the value gap. It functions as a range of support. As long as price does not displace below this lower black line, I'm expecting higher prices. Notice that this lines up exactly with a low which formed inside of a BC. We see the market retrace, and eventually we see it begin to expand towards the upside aggressively, and we see a breakaway gap gets created. We'll get towards this breakaway gap in a bit, because you can see me having written out a breakaway gap turns into a DOL, a draw liquidity. What we can see is that the market expands above the engineered buy side, which was right here, and that was a partial area for me. Notice that we saw the market consolidate for a bit above there before it eventually ran towards the price objective of 19,500. At this moment in time, a beautiful long is already done. Why? Notice that we went from 19,250 to 19,500. This range of 250 points is our range that we're operating in. Meaning this is our potential range of profit. Surely, if you want to aim for home runs, you could aim for higher objectives. You could aim for, the new day high, etc., or even the high of that day BC. But you need to realize that even without a higher time frame, one side order flow being present, meaning we were anticipating a consolidating market, there are still so many trading opportunities that present themselves where you can just go long, short, long, short, long, short, A to B, B turns into A, and the new A to B gets established, etc. All you need to do is pick one. And I can already tell that some of you are probably looking at my execution on the right and you're like, but hey, you also took a short. Yes, and I will explain it to you in a bit as well. But I want you to understand, guys, that there are so many opportunities that present themselves based upon the concepts which I'm teaching to you when it comes to time and price cycles. And I truly hope that you're beginning to see that. And I know that the majority of you are seeing it because I see it on the mentorship forum. I see the posts. I see the constant posts coming in where one person takes a short, another person takes a long from the other person, they exit. And it just shows to you that every single exit of someone else is someone else's entry. And that just shows to you that we're playing ping pong on these markets. And it's actually a beautiful sight. And I hope that you begin to realize that there's absolutely no reason for you to feel any FOMO at all. Because the thing is, there's always a new opportunity around the corner. There's always a new opportunity to get in sync with the move which you were anticipating and you missed your initial entry, or you just didn't see the move coming at all. There's always another move coming. And when you start accepting that and you start understanding it, all of a sudden you begin to appreciate the level of technical precision which is there. Because I'm telling to you right now, even if you would decide to take a week off, yes, or maybe even take a full month off, right? When you come back to the charts, you are going to see the same algorithmic signatures taking place across all markets, across all time frames. And when you start paying attention to these time cycles, it will be like, what is going on right here? It's efficient delivery which is taking place. AMD over and over again. Now, what you can see is that at 2:30 p.m., we initially see the market drop lower, and then it begins to expand towards the upside. This is where that new day high is being created. Notice that we see the market reprice towards the higher end of the day BC, and notice how the bodies keep on closing at the higher end right here. Interesting, isn't it? We see the wicks go above it, but notice that the bodies keep on closing inside of it. Eventually, we see the market reprice below that AM high right here, and we form this low. Notice that we form this very big down close candle. We see the market run up higher one more time, and notice that it reprices above the day BC again, but notice that the bodies keep on closing inside of it. Pay attention what the market reprices into. It reprices back into this one wick right here. What's this wick? It's a bearish rejection block. See the market reject that, and we see it begin to drop towards the downside. The moment that price traded below this low, it shows you that we're now in a sell program. However, if you want to get the most ideal entry, where you're entering and the lowest security run is going to follow, where would you like to enter? At a key level. What is the key level? 19,500. 500. Just going to leave you to think about this for a moment. Do you see how I utilize this as my objective for the buy program? And do you see how I utilize that same level to frame my short setup during the final 10 minutes of the day? When this CB displays through that? Yep. What I want you to understand is that you can avoid a lot of consolidations and a lot of time distortion by simply paying more attention to where you are entering relative to the current range, and more importantly, at what time. Meaning you must be able to anticipate when and where price swings are going to take place. One of the characteristics of a day where you saw the market reprice higher quickly, but you're anticipating a consolidation to take place throughout the afternoon session, is that when that repricing higher took place, there's likely going to be at least 1 or 2 imbalances which were left unfilled, and these are what we refer to as breakaway gaps. These breakaway gaps are likely going to get revisited throughout the final minutes of the day, because what has to occur is that price has to be balanced out in those imbalanced price ranges. So what IBDA will seek to do is that we'll seek to reprice back into those ranges. What you can see is that from the moment that we reprice below this low, you can see that they were utilizing this down close candle as resistance from price. Notice how many times they retraced into it. First retracement, okay, market expands lower. Second retracement, market expands lower. Third retracement, market expands lower. So every single time that is retracing into that down close candle, that's already a potential shorting opportunity. However, the moment that we saw price displace below that 90,500 price level, keep in mind, I'm not speaking about this wick right here. I'm speaking about speed. I'm speaking about speed and velocity coming in. That is what you see right here. We see the market run higher, back into this old low, form a high there, and immediately slams towards the downside. And do you notice how I'm using more energy behind my voice? I'm using my emotion to transfer what I see within these markets to you. The best way I can describe this to you is literally as if it is a car which is beginning to get sped up, in which you see that the car is just beginning to accelerate. That is how I want you to start viewing these price swings. And when you start viewing the markets from that perspective, and you start looking for that one-side order flow to step in, where it really, and that's the importance of an imbalance as well, by the way, the imbalance shows to you urgency. It shows to you that there's speed and velocity behind the move. When you see that speed and velocity behind the move in the anticipated direction which you already had, what you can look for is you can look for a retracement, and this is an institutional order flow entry drill which is taking place, where you can see that the market retraces into that CB and immediately begins to expand towards the downside. Why? Because what's taking place right here is that this low, yes, got displaced through by this CB. So this low now functions as resistance from price. Think of your regular support turns resistance ideas. Notice that we just step into that low and immediately expand towards the downside. Why is the CB up here allowed to be left intact? Because that CB functions as a breakaway gap. If I am right about my analysis that we're in fact going to see the market accelerate towards the downside, then what I'm anticipating is the following. What I'm anticipating is that we're likely going to see speed and velocity towards the downside. So that means I do not want to see any deep retracements taking place. Notice that the market expands towards the downside, and what am I targeting? I'm targeting that old BC right here, this breakaway gap. And that shows to you as well that this is the no daily bias model. If you have studied the 2024 mentorship content, which you can just access through the platform, you can just swap mentorship tabs. I'm sure that you have noticed it when trying to log into the platform. What you will be able to see is that I have created a lot of lectures in 2024, which you can access. Within one of those lectures, or actually within a few of them, I explained my no daily bias model. My no daily bias model, simply put, is the following. It's utilizing one imbalance to target another imbalance. And that's straightforward. Meaning I'm utilizing this CB to target this old BC. When should that BC get delivered? Right before close. And exactly at 4 p.m, notice that the market reaches that BC. And where does it form the low? Before retracing inside of that price range. Beautiful, isn't it? Now, I understand that some of you are probably going to look at the chart in front of you and you're going to think to yourself, that's awesome. I want to do this as well. Look, if you're new to this, if you're new to trading, if you're new to learning or viewing the markets like I'm teaching them to you, please don't think that you should be able to do this right away. Man, maybe not even in a year, maybe not even in 2 years. You need to realize that I've been at it for years, investigating these algorithmic signatures day in, day out, week in, week out. I know IPTA from the back of my hand, and therefore I'm able to see these moves coming before they occur. And that is how I'm able to call these markets with such a great deal of precision as well. And if you're completely new, you need to submit to time. And if you're able to just frame one of these trade setups, whether it be the long or the short, be content with that. Because no one is going to say, you know what, Alex, you should do both. You know what, you just took the long, but you didn't take the short, so you're not good enough. No one's going to say that. And everyone that's going to say that, they're all fools. Guys, you're not supposed to trade every single price swing. You're not supposed to trade every single price move. Your job is to find the move which makes the most logical sense to you and that you see coming hours in advance, and that's the move which you're participating in. To try and do anything beyond that is foolishness. And I understand that for some of you, you're just struggling with not doing anything. And I was there as well. And the way you combat that is by what I just outlined. You focus on the moves which you see coming hours in advance and you ignore everything else. Look, to put it quite bluntly, if someone takes a trade that I did not take, whilst everything was still aligned for me to take the trade and I wasn't there because my mind wasn't right or I wasn't able to see the move coming or I wasn't behind the charts, anything like that, I don't beat myself up. All I say to myself is, look, that's more proof of my protocol working. What you would do probably is you would think to yourself, shit, I should have been part of that move. I missed out on that move. Let's just get into a trade to try and get something at least. Wrong. Why? Because you're not following your protocol. And understand that for the majority of you, you probably think that you have a protocol, you think that you have a model, but all you have is a price pattern. Throughout the 2025 mentorship, my focus is on helping you develop that protocol. And that is why I'm releasing all the lectures of that model series in the way or in the structure that I'm releasing them. And I promise that by the end of that model series, you're not ever going to feel any doubt about why price is doing what it's doing. Because these signatures repeat. And that's what you're seeing. And I understand that if you're completely new, you're probably listening to me right now and you're like, okay, all fun and games, show it to me. Well, I'm not going to show it to you. You need to see it yourself. And the way you see it yourself is by going into the charts and investigating what I'm showing to you. That's the thing. You want me to hold your hand, to go into the charts and show to you, look at this, look at that, look at this, look at that. Understand that I'm out here trying to make an impact and I'm trying to help you as best as possible. And the way that I'm doing that is by showcasing to you very specific and precise algorithmic signatures in the delivery of price. Your job is to investigate those signatures on your own. Meaning watching a lecture like this in which I'm explaining the logic behind my trade setup is not enough. It's not enough for you to learn. Surely you might get some good insights, but where the real practice comes in play is when you just go into the charts and get your hands dirty and you start investigating, you start paying attention to details, you start paying attention to time, you start paying attention to price, and before you know it, you're beginning to see these things. And man, like, enjoy the feeling of being able to see something which you weren't able to see prior. Because you're going to feel like, wait, do I really just see this now? And you're going to be looking at the charts again. Another day, another week, another month, maybe another year. And you're going to see that same specific time and price element. At the right time, this is happening in price. Where you see that accumulation took place, manipulation took place, so now the only logical next thing to occur is distribution to take place. Find joy in that and enjoy it whilst you are still being able to smile from it. Because there will come a moment in time where it will get boring. And I understand that for someone who's completely new and who is studying everything which I'm sharing, that's probably like, how is that possible? How is it possible that it's going to get boring when you see these market swings taking place again and again? Well, the thing is, look, at one moment in time, you will begin to appreciate the level of technical precision which is there, and you're always going to be grateful for the fact that you know it. And once you see this, you can never unsee this. But the thing is, what will happen is that you are going to see the same signatures again and again and again. And when it gets boring, that's when you've arrived. When you know, all right, this is what I should be doing now because I know what should occur next. But it also means that you know when to sit on your hands because you know right now it's not clear yet. And when you're able to get to that level, oh boy, because that's when the fun begins. Because then money management will do the heavy lifting. And that's something which I want you to think about. And that's something which I want you to understand, keep in mind, even if you're completely new. This is the reality. And I'm not trying to, tarnish your motivation or your inspiration or whatever. That's not the reason why I'm mentioning this. I'm just mentioning this to you so you're prepared and that you're able to actually be aware of the fact that, right now where you're at, where you don't really understand it just yet or don't understand it well enough yet, that's actually a beautiful place to be in. Because I wish I could go back in time and go back to those moments where I was just thinking about why this stuff even works. Like, why does IBDA refer back to this daily basis so often? Why does it form these key arrays around there? Why is this all occurring during a key time? Why do these imbalances get created at these key levels, etc.? And those questions, man, when you start finding the answers to them, it will be like eureka, and you're going to be like, damn. And you'll begin to understand what the power is of this knowledge. So, with that being said, this actually comes to an end. I could be speaking about this topic for a very long time. And the reason why is because I'm, of course, very passionate about trading. I'm very passionate about showcasing this level of technical precision to you. And I hope that you're also enjoying it, because the thing is, it's like, I have no words to describe it even. Because to me, it's also like, there's nothing really to say. Like, I give you a range, keep the range on a chart, and monitor how price uses the range. That's it. And I'm not giving you any signals. I'm just telling you what to investigate, what levels to monitor. And this is the type of delivery which you're seeing. And it's fascinating, isn't it? But that's something which I want to continue doing all throughout this year of 2025. And the reason why is because I understand that things are getting hard. There's a lot of tension in the world right now, and things are getting harder. Inflation continues to rise, and things are getting more expensive, and it becomes harder and harder to sustain a proper lifestyle. And therefore, I want you to just double down, like, use all of the energy and time which you have right now to just lock in, focus, ignore all the distractions, and I promise to you that you're never going to regret it, because the fact that you're even able to ignore all that noise and just focus on learning, and you're focused on trying to figure out why price goes up and down, and when it does this, fill in what's going to happen over time. You already know the answer. And that's what I want you to keep in mind. And understand that this is not just about you fulfilling your own needs to live according to your own lifestyle requirements or whatever. Make sure that your why goes way deeper than that. Think about your family. Think about your parents, or think about your children if you have any, or your future children. And think about the impact which you'll be able to make on their lives and their children. Like, you need to understand that this all goes way deeper than just you pushing buttons. Because if you think it's just about you pushing buttons, you need to rethink that. Because you will figure out that once this gets boring, you must find fulfillment in a different way. And you find fulfillment by doing for others. And that is where you're able to fulfill your duty as a human. Because it's about making impact by being a source of light in a world that's getting darker and darker each day. If you focus on being that source of light, I promise to you that everything will fall into place. Call it God, call it the universe, you will be guided. Do this, don't do that. Do it in this way, don't do it in that way. Do it in this order, don't do it in that order. Pay attention to this, don't pay attention to that. Do you think I was just born with this understanding? No. Like, years ago, I didn't know anything about finance. I didn't know shit, literally. I was in high school studying economics and I was like, all right, this all seems very, like, seems very tough. I remember I was 14 back then, yes? I remember it like as if it was yesterday. Opening up my first economic class book, and I was reading through it and I was like, this is a foreign language to me. I don't know anything about it. But I understood that as long as I keep on showing up, it will click. And I quickly found out that everything which gets taught in school about finance and economics is all a scam. It doesn't work that way. But that's a topic for another time. But I knew deep in my heart, this is interesting. And I want to pursue a career in this. Fast forward a few years. Came across IST, the inner circle trader, and he began laying out these smart money concepts to me. And he began showing to me how there's true manipulation and distribution taking place by high frequency trading algorithms, or the algorithm as he calls it, which is taking place all the time. And when you're young and you're introduced to a perspective like that, like, to me, like, it felt like I won the lottery ticket. And the reason why is because I understood the importance of being able to grasp this information. Because by grasping this information, I knew that I would be able to change my whole family tree. And that was what I had at the back of my mind all the time. All the early mornings when I was waking up at 4:30 a.m., right in advance of me going to school, studying lectures, studying the charts, whilst I was going to school, whilst I was commuting, studying the charts, whilst being in school, I was even studying the charts. I couldn't care any more about anything which was being taught to me. And some of you are probably like now, oh, you know what? Whilst I'm at work, I'm just going to look at a lecture by Zeus, or I'm going to look at the charts and do this and don't do that. I'm not saying that you should, cheat on your boss or whatever, because you shouldn't do that. But I just want you to understand the level of dedication that it requires. The level of dedication that you're just showing up every single freaking day. Because some of you, yes, you think that you can just watch the lecture, boom, that's it, and all of a sudden it's supposed to click. And in a few months' time, you come back to me and you're like, man, you weren't able to make it click for me. And then I ask you, but what did you do yourself? I watched every single piece of content you put out on the mentorship platform, but I never, really went into my own charts. No shit, it's not clicking because you didn't put in the work. Look, if you just watch a few lectures, go into the charts, you're learning more than just watching all the content like as if it is a Netflix series. And that's a harsh reality, but it's true, right? But back to the story. The story that I was speaking about was how I came up in this and how I realized that it was about more than just me. I quickly found out when it came to trading in general that when you start taking profitable trades and you start achieving consistency and you start making money from the charts, it gets boring in due time. And it's not boring because you're making money. It's boring because you're doing the same things every single week, every single month. So where do you get your fulfillment from? You get your fulfillment by also doing things on the side, such as inspiring others, making an impact on others. And that's so important to understand, guys, because for you right now, you're probably only thinking about the charts. The moment that you wake up, And the moment that you rest your head on your pillow, you're probably only thinking about the charts, these candlesticks that go up and down, up and down. I want to ask you, who's counting on you? Who are you doing this all for? Okay? It's probably your family. It's probably a close friend. It's probably your spouse, your partner. Do you understand that you also need to find balance? And that's something I didn't find. And that's something I don't want to say I regret, because it made me who I am today. But I mistreated certain family members and certain people that I really cared about, because I was so focused on becoming good at this. And it's a price I had to pay. And this price I was willing to pay, and I had to let go of certain individuals in my life that I truly cared about and still truly care about. But I want you to understand that try to find balance. Even though you're pursuing a career in this industry, try to also make sure that the people around you don't get forgotten. Because I remember literally that my ex at the time was trying to speak to me about her day, and all I could think about is that trade setup that I missed, or that trade setup that I participated in. And yeah, that's the reality. It changes you as a person. Money can change you very quickly. And my advice to you is to try and stay as neutral as possible. Don't get me wrong. You need to change in order to achieve results. Yes. But make sure that your values will always stay the same. And then make sure that you keep the people around you close. Because at the end of the day, it's the people that you have around you right now that you call your close friends. Some of them are not going to be in your life forever. Some of them you need to let go of because they're toxic individuals and they're having a toxic impact on your mental state. However, some individuals truly want the best for you. And your job is to find out who that is. And your job is to basically hold them as close as possible. Small circle, big results. And that's what I'm trying to create within my mentorship as well. And that's the mentality. And I don't want you to think that it's like us against the world or whatever, because it's not. But it's simply a matter of finding out to what group do you belong? Where do you find your team, so to say? It's not about showing off. It's not about going out here and trying to show who has the biggest balls or whatever. Nope. Even though the old me, the young guy, would have that at the forefront of his mind, the mature version of me is only think about one thing. What is the protocol telling me to do right now? Day in, day out. Week in, week out. And that is what leads to this level of technical precision. Nothing else. It's about aligning myself with IPTA, and that's the only thing which I'm caring about. Once I understood this, everything changed. And that is what I want you to keep in mind. Align yourself with IPTA, follow the protocol, make an impact, and everything will fall into place. This is something which is like new to me in a way, opening up. And the reason why is because I always try to stay as objective as possible. But I understand that many of you would like me to speak more about how I came up in this and how I became where I am now. And it's easier for me to do on a chart or with a chart over me, but maybe I'll do in the future as well with, just me speaking in a camera or so. Something I'm trying to get more comfortable with and such. But I really appreciate all the kind messages which are being shared with me. Like, I have a whole team that's of course helping me out with everything, because it's a lot. Trading, running multiple businesses, next to that also being in contact with private investors and such, private funds. But I'm trying to balance it all out, making an impact, and that's the only thing which is on my mind right now. I got a lot of energy And that's all a result of the impact which I know is being made. And therefore, I'm really grateful for all the messages which are being shared. Just all the thank yous. It's just awesome to read, to see that I'm able to transfer what I see within these markets to others. It's just a feeling of fulfillment that words can't describe, and makes me very happy. And makes me excited as well, because I understand that the fact that you are now able to see what I see within these candlesticks is going to allow you to change your whole family tree, and to know that I just had a small part in that. Man, that goes deep. Speaking about good deeds, damn. But anyhow, with that being said, this lecture comes to an end. This turned into a bit of a psychology rant and such. But I hope that you enjoyed it. I hope that you were able to take some value of it. I need to I need to end this recording, because before we know it, we'll be here for another long time. It's in the middle of the night whilst I'm recording this for me. I hope that you enjoyed it, and I look forward to speaking to you again. Be safe. Hello there, I hope that you are doing well. Welcome to this new trades breakdown lecture. During this trades breakdown lecture, I will be discussing navigating the full market maker model, trading both sides of the curve. Now, before we dive into this lecture, I want to put emphasis on the following concept, which I've been expanding on a lot within the 2025 model series. As I've been teaching you throughout the 2025 model series, the most important thing for every single trading setup is to define A to B, meaning inception to terminus. Once we have defined what the bigger A to B is, we're able to find smaller A to Bs within that direction. Meaning, if we know that the bigger ranges are signaling to us that we are now bearish for the day, for example, or bearish for the session, we can find intraday opportunities within smaller time cycles, meaning smaller A to Bs, but all aligned with that bigger A to B. Now, it's important to note that whenever this point B gets met, we can be looking for point B to change into point A. Meaning, once terminus gets met of a particular program, in this case a sell program, we can look for that sell program to turn into a buy program. And that's the thesis which I'm about to show to you. So what you can see is that the schematic then changes, and then we see a new point A be established and a new point B be established. And that is where buying opportunities will present itself. So it's important to note that it's always relevant to keep an eye out on the higher time frame charts. I know that many of you are probably interested in short-term trading. However, to trade on the lower time frames without having the bigger picture in mind is not suggested. And therefore, it's important that you always keep in mind what the higher time frame analysis is at first. And that is what I'm putting so much emphasis on within that 2025 model series. The bigger picture tells you how the smaller picture is going to deliver. It's not the other way around, guys. Here on the RV chart of Nasdaq, and what you can see is that throughout the past few days, we have seen Nasdaq draw towards sales liquidity resting below the Thursday low. During my Tuesday market review, I had outlined to you that I anticipated the market to draw towards sales liquidity resting below this Friday low right here. The Friday low was reached throughout the London session shortly after I released my market review for this day. I outlined that the next sales liquidity objective would be the Thursday low right here. What I was looking at this RBC right here. The reason why this RBC in particular was so important was due to the fact that this RBC was the only array which was right in advance of this low. This was the original consolidation within a market maker sell model. Buy side of the curve, sell side of the curve. And I know it's not pretty, I know it's not like the typical schematic which you're used to seeing. However, this is exactly how you can see market maker model logic playing out all the time. Where you can see that the market was in a market maker sell model, and therefore we can utilize imbalances, and specifically BCs on the left side of the curve, to anticipate where opportunities on the lower time frames are going to present themselves on the right side of the curve. Now, what I would like to see is that this time close candle right here was the 9 o'clock hourly candle. We saw this candle open high, and we saw the market reprice into this BC right here. Do you see how the market then slammed towards the downside? Now the reference points which I had provided to you on this day in advance of the 9:30 open, again, some of you are still not on the mentorship forum and you're really missing out because I'm actively giving market updates throughout the days where I'm literally calling these moves live. Like even this day in front of you, it was insane what I was doing on the market updates channel. Outline shorts and then outright longs. And it's not to promote the idea of me giving signals or anything along those lines because I don't want to give any signals. However, I want you to investigate that what I'm showing to you. I'm literally giving you inception and terminus, and all you have to look for is the algorithmic signatures as I'm teaching them to you. But what you can see is that we saw a move from point A, which was that BC, to point B. What was point B? Our expected terminus for the sell program as outlined was the Thursday low, meaning that was the level which I was targeting for the sell program. I had outlined that when this Thursday low gets taken out, there's the sell program which is completed. Meaning I'm not expecting Nasdaq to drop another 100 points or whatever. No, Thursday low taken out, that's the sell program completed. That is as straightforward as you can get it. And intermarket relationship suggested as well that the low of day would like to form here. We then saw the market expand higher significantly throughout the next hourly candle, the 10 o'clock hourly candle. Notice that this candle opens low, but pay attention to where the bodies are right here. Notice that the market then expanded higher from point A to point B. And notice how the market traded back above the monthly open. When we then pay attention to both Nasdaq as ES, what I would like to see is that Nasdaq took out the Thursday low right here. However, when we pay attention to ES, what you can see is that ES never took out that Thursday low, and therefore that was SMT which got established. That SMT set up the repricing higher throughout the morning session, and it was the confirmation that we would indeed expand towards the upside. Now the reason why this thesis was also valid was due to the following. When we pay attention to the midnight opening price on both markets, do you see how since the midnight opening, nothing happened but repricing lower? So who has been making money all throughout the day? Well, shorts have been making money all throughout the day. So once our sell programs are completed, what is it they're going to draw towards? What liquidity has been engineered? Buy side liquidity above all of the highs which formed throughout the previous time cycles. So for example, throughout the London session, its respective 90-minute cycles, and throughout the beginning of the AM session, its respective 90-minute cycles. When we then pay attention to the 1-minute chart, you can see my executions right here. And what I'm going to do is I'm going to walk you through the delivery as it unfolded. What I would like to see is that between 8:30 to 9:30 AM, this is the first hour in advance of the 9:30 open, meaning from 8:30 AM what happens is that the second 90-minute cycle of the morning session begins. This is the manipulation cycle as I've taught it to you. In this manipulation cycle, our eye is drawn to monitoring how we are going to deliver throughout each respective 30-minute cycle. Notice that between 8:30 to 9 the market is simply consolidating. 9 to 9:30 then slowly grinds towards the downside, but do you see how small these candles right here are? Retail views this as strong resistance. It's a strong downtrend, so to say. However, when I look at this, that's immediately a sign that we are engineering buy liquidity, which we're likely going to gravitate towards. So when I see 9:30 then open up, take out sell liquidity resting below the low of the previous 30-minute cycle, and I see the market begin to expand towards the upside, I'm thinking the following. What I'm thinking to myself is, hey, that's interesting. Because what would a retail-minded trader think when they see the market open up and immediately begin expanding higher after having formed this low? They think to themselves, hey, we reached a strong support level, the market is going to run today, it's going to be a trending day, right? That's a thought process. However, what I would like to see is that we simply reprice into point A, which is that red shaded box. How deep do we trade into point A? Well, we trade at least above engineered buy side liquidity resting above these highs right here. And we see the market then eventually reprice into this level right here. What this level is that sell side liquidity pool objective, which had outlined throughout my day review of this day, meaning the low which formed in that mrNbcWVm, if you remember. I didn't annotate this on the hourly charts. However, if you go back a few minutes in this lecture, you'll be able to see what low I was referring to. And I would like you to think about why that low is important. What I would like to see is that we take out these relative vehicle highs, and do you see how we just step above them right here? And this is something I love to see, guys. I love to see that they just stop right in advance of where I know that retail believes to be a strong resistance area. Because do you see how it keeps on tapping above those highs right here? What's happening here is that more buy-side liquidity is being engineered. So when this huge green candle takes place right here, that's manipulation which is taking place. I began filling my short position right here as the market begins showing the signs of wanting to turn around. Now it's important to note that when you pay attention to delivery like this, you must understand that what's happening above these relative vehicle highs is that shorts are being filled. This is what we refer to as a turtle soup, meaning we take out a key buy-side liquidity pool, which is time-based. It's the element of time which rules all. It's time then price. It's not price and time. No, it's time then price. And we eventually see the market begin expanding towards the downside. In the back of my mind, I'm keeping an eye out on these highs which got engineered right here, but we'll get to that later. Notice that we see the market expand below that large red shaded box, which is that mrNbc. And do you see how we create an imbalance right here? This imbalance is a breakaway gap, meaning there's no need for the market to reprice into that if we are going to see a very quick expansion lower. Why? Because the market is already so close towards the Thursday low, which is point B of the sell program. So IPTA is in a rush to get somewhere. It's in a rush to reprice towards that level. Once I saw the signs become present of this gap indeed staying open, I waited for a retracement, and once this retracement ended, I went short right here. Notice how I'm utilizing the left side of the curve to find entries on the right side of the curve as well. Because when you pay attention to this delivery, you must understand that this by itself is also a market maker sell model. Buy side of the curve, sell side of the curve. And do you see how that delivered between 9:30 to 10 o'clock, which is your first 30 minutes of regular trading hours? What if I told you that that 30-minute interval can be divided into 3 10-minute cycles, 9:30 to 9:40, 9:40 to 9:50, 9:50 to 10 o'clock. Have fun. What I would like to see is that the market eventually reaches that Thursday low, and we see it get met at the end of the second 90-minute cycle of the morning session. We see a retracement taking place, and do you see how the market retraces into the CB, which displaced through the 9:30 low right here. This is very important, and the reason why is due to the following. You see that we form a high inside of that CB, and we then see the market expand lower. However, now pay attention to time. At exactly 10 o'clock, the market opens up, drops lower, taking out the previous cycle low. But again, pay attention to the bodies. What are you seeing? Are they closing below the Thursday low? Nope. Where is this happening? 19,750. So we reject equilibrium of this range of 19,800 to 19,700. But hey, the 750 level, isn't that also 75% of the very large range? If you don't understand the advanced price ranges yet, start investigating them. What we see is that the market eventually has this huge green candle higher, and it's inside of this huge green candle higher that what I'm doing is the following. What I'm doing is I'm looking for the signs that confirm to me, okay, we have now indeed formed a low and we're likely going to expand higher. I outlined throughout my daily review that I was bearish for the short term, but bullish on the higher time frames. Therefore, I outlined when that Thursday low gets taken, that's my sell program completed, and now I'm going to be looking for that buy program from the higher time frames to continue again. The fact that we saw SMT relative to that Thursday low between Nasdaq and DS confirms this thesis. Do you see how we form this BC right here? Whilst the market trades above this upclose candle, the upclose candle would set up this final run lower. This right here is the market structure shift pattern, where you can see that we form a high inside of a CB on the left side of the curve, and we displace through that high with a BC. And not to forget that this upclose candle is also a bullish breaker. When the market then taps into that BC, that's an entry opportunity, and do you see how we just step into it and how the bodies don't even close inside of it? This is institutional order flow entry drill, IOFET. And whenever you see this, it's a sign that the market is in a deep rush to get somewhere. See the market expand higher, and we take out the high which set up the retracement lower, and the market retraces once again. This is again a potential entry opportunity. The market then reprices higher quickly and it trades into this CB right here, which was that old breakaway gap. Do you see how the market has a hard time with getting through that at first? However, this was a result of the fact that this also lined up with the monthly open, but this is to be anticipated of such a key level. Therefore, we allow some form of retracement and then eventually the market expanded towards the upside. Notice again that I've outlined that IOFET occurred right here, where the market tapped this imbalance, this BC, and immediately expanded higher. Now, as I was outlining on the mentorship form in real time, and I really suggest you to go back over those posts because there's so much to learn if you simply just apply my posts on your charts at the right times and you try to investigate why I'm outlining what I'm outlining. I believe that's the best way to learn, to be fair. But if you do that and you begin monitoring why I'm saying what I'm saying and specifically when I'm saying what I'm saying, you'll be amazed. Because then you'll see exactly what I'm looking at. So this was the 6th of May. You can go to the mentorship form and you can simply scroll up and you should be able to find my post of that. I will not be deleting anything, so therefore you can simply just read through it. But what I would like you to see is that the market then expands higher and we see it trade into 50% of that REBC, which was our range to monitor for the day. That right there was for me a partial, and notice that we had bias liquidity engineered in advance of that. So what I want you to see is that this was a market maker sell model turning into a market maker buy model. Eventually the market reprices into a higher end of that REBC, and notice that we're nearing the end of the 10 to 10:30 first 30-minute cycle within that 90-minute cycle of the final 90-minute cycle of the morning session, and therefore I'm parsing there as well. Eventually, time distortion occurs and the market is simply going back and forth. Now there's one element of time which I have yet to mention, but I've already outlined it, which is the 9:45 to 10:50 macro. Do you see how both the shorting opportunity into withdrawing liquidity on the higher time frames as the buying opportunity afterwards all occurred throughout that 9:45 to 10:50 macro? Why does that happen? Well, during that window of time, what's occurring is that orders are being filled. And therefore, what I want you to understand is that they reprice it lower into a key sell-side liquidity pool. And then the market begins expanding towards the upside to draw towards the stops, the buy stops of people that are in profitable shorts. And that is why we partial or full close accordingly at these logical levels. When we then pay attention to intermarket relationship, you can see Nasdaq and the ES. And what I would like to see is that when we pay attention to the first short right here, what you can see is that Nasdaq formed its high right here, whilst ES formed its high prior. And you might be thinking to yourself, but Zeus, you went short prior to that 10-minute cycle SMT being established. Yep, that's correct. Why? Because I already knew this would be the SMR. And I won't touch on that. I won't touch on how I know exactly where it's going to turn around, because that's something which I'm keeping to myself. However, I want you to understand that what I'm outlining to you is literally the closest you will come to trading in sync with these high frequency trading algorithms. And I hope that you'll be able to look at these executions as a source of inspiration to one day get to this level. Is it required to enter at the absolute highs or lows? Absolutely not. There's a lot of room in between. But if you want to really dive deep and get to my level, then you must investigate these specific elements which I'm outlining to you. Notice that we see SMT be established right here, and from that moment in time, we see the market expand towards the downside. Eventually, we see the market take out the previous cycle low on Nasdaq, but not on ES. This is 90-minute cycle SMT, and as outlined prior, whenever we see time cycle SMT, it's a crucial sign that the market is likely going to turn around soon. Now, zooming out a bit and looking at the beginning of the afternoon session as well, what I would like to see is that we consolidated and distorted time throughout 10:30 until around, 12 or so. You see how the market was simply going back and forth, back and forth, back and forth. The reason why this was occurring was due to the fact that President Trump would be having some announcements later. I'm not too sure if these were scheduled, but I know that certain announcements were made around 12:15. And what I would like to see is that in advance of these announcements coming out, exactly at the eye right here, 30-minute cycle SMT was established inside of the range which I had outlined to you for the day to monitor. Now you tell me that that right there is again a random sign, so to say. I've been outlining to you throughout the past couple of weeks at the time of this recording real-time examples of where you can see algorithmic signatures in advance of key news releases. Makes you think, doesn't it? We see the market reprice into the midnight opening price, and that for me was full close on this day trade. And the reason why was due to the fact that the midnight opening price is a key level for each day to monitor, and I didn't really anticipate much afterwards. But with that being said, this lecture comes to an end. I hope that you found it insightful. I hope that you were able to learn something from it, and I want to wish you good luck in your studies. Be safe.